Welcome back, and if you just tuned in, good morning and hello again. You are watching and we are coming live to you from the budget headquarters of India's #1 channel. It's 8 o'clock already. At 11 o'clock, the Finance Minister is expected to stand on the floor of the Parliament and present arguably what will be the most important budget of this government, and that's largely because of the economic backdrop we are in. The pain needs no introduction because GDP has plummeted, consumption has slowed down, and investment cycle has not really picked up. So what really is in store today? But before we talk about what is in store today, I want to simply make one simple case of the market positioning. What is the current market positioning? Now, when I say market positioning, what exactly are traders betting on? Are traders approaching the budget with high expectations? On markets by and large have been neutral. The two perfect indicator of looking at this is to look at the Bank Nifty and the Nifty, and this is where the positioning of the market is in terms of the Bank Nifty and the Nifty. Well, that's of course a think tank which also would be joining us, but there you go. This is the budget day returns and how Nifty has moved in the last couple of budgets. On 10th of July, which is 2015, Nifty was flat. Another budget 2018, Nifty was flat. 16 and 17 also, markets have not really done anything extraordinary. So what should one expect today? And fundamentally, is there logic, is there merit in believing that markets today are in for a surprise? Sandeep Sabharwal will be just walking on the set now, and he'll walk us through the fundamental picture of, there you see Sandeep is ready. So Sandeep, why don't you walk into us the set right now? So that's Sandeep Sabharwal, he would be joining us. But this is what I want you to just focus on, the 10-day after budget, what has happened to the market. And markets by and large, irrespective of good budget or bad budget. Good morning, how does it feel coming to studio dressed up on a Saturday morning?
It feels like missing a good squash game.
But I think if the market positioning is anything to go by, was missing that squash game, will that be worth it?
I'm not so sure about that because I think this time, after a very, very long time, the budget comes in the background of a very significant global phenomena which is happening, where I think the global events are going to overshadow the budget in my view. So I think to that extent, I think the impact of the budget could be more limited than what it has been historically.
So focus on the coronavirus issue today or the budget speech today?
I think it's the coronavirus issue. I think the way it's expanding, the way the deaths are, I think it's an exponential move out there. And coronavirus in China is sort of like demonetization in India, where it stops everything, no economic activity, just stalls. And India did not impact the global economy, but China impacts the global economy. So I think so we need to be cautious in the near term because of the fact that markets were trading at all-time highs all over. So if markets were not trading at all-time highs, we would not be so cautious. Even now as we speak, markets are just 400, Nifty I think just 400 points off the top, which is not very significant. So markets still are elevated and they were not ready for any risks, and those risks are playing out. Now what the Finance Minister needs to do is something beyond what people are expecting. In my view, my expectations are very low, but the market expectations are very high. They want something on LTCG, they want something on big on disinvestment, they want something big on personal income tax cuts. I don't think everything can be delivered. Let's keep our fingers crossed.
I just want to look at this, Sandeep. This is how markets have moved from last budget. Nifty is actually flat. We may be at an all-time high, but Nifty is actually flat. Small and mid-cap indices are much lower than where they were right now. So we'll just come back to that graphic in a second just to establish where the markets was. There you go. Nifty, crude, gold, and the 10-year paper. So it's not like you are in a you may be nearing an all-time high or sitting at an all-time high, but markets are not overbought.
I would think it's more about global positioning because huge ETF flows have happened globally. Passive money has flown in majorly into most markets, and those ETF flows could reverse very fast. So I am not concerned more about the long term. I think the long term picture in India could be improving. I think it's more to do with the short term, next 2-3 weeks. Yesterday we saw 4,000 crores outflow from global investors, and these are purely ETF flows. These are not active investors who are selling off, and these ETF flows are typically trend following. So I think that's the near term issue which we have to grapple with. So even if there's, let's say, hypothetically a great budget, but still I don't think those ETF outflows out of emerging market funds are going to stop. So I think people need to be wary at this stage.
Keep expectations low.
Keep expectations low. Be ready to buy if there is a drastic cut, and I would think that the corrective move in the markets globally still has some way to go.
Okay, now before we allow you to escape, not for your squash match but for your breakfast, let's look at the most important data point, which is going to be the pendulum swing for them. It's not going to be revenue, it's not going to be tax, it's going to be disinvestment. And that data point will just come up on your screen, Sandeep. I'll request you just maybe a step back because the graphic will be just coming here. For the disinvestment, Sandeep, we were looking at a target of about 1 lakh crore this year. There you go, this is where we stand. 2015 it was at 41,000, what they got was 23,000. 2019 the number was 1 lakh and it is currently at about 18,000. Of course this will move up because you will do ETFs and all, but this will not go to 1 lakh. Will do you think there would be some fat assumption for the coming year on this investment?
So they are going to make fat assumptions, and 2017 and 18 figures, all of us know that they were not real disinvestment. It was HPCL sale to ONGC was one of the disinvestments. Then I think
Power Grid and PFC.
Yeah, so I think
all smoke and mirror.
Yeah, so those are not real disinvestment. Just one pocket to the other. Now,
these are the blocks they have.
So unfortunately, what's been happening is that the value of the PSU basket has been crashing continuously. All of us know ONGC used to trade at 400, it's at 100 rupees. Many NTPC used to trade at 250, it's at 100, 110. So the successive disinvestments by the government, by these ETF route, etc., they have just destroyed value. So they need to do strategic disinvestments, which they want to do. But the biggest chunk of that lies in oil PSUs. There is a global move towards not investing in fossil fuel based companies. So I'm not really sure how that will go. So I think they will make big assumptions, all of us know, just to show that the fiscal deficit is going to be in control next year. Whether they'll achieve it, it's a big question mark, because the last figure, it's
going to improve, Sandeep. They have still 1 more month left. ETFs and some other smokes and mirrors will bring the big figure higher, but it's a big miss from what was projected. I want to look at the strategic disinvestments, which could be the game-changing assets for the government, from Air India to BPCL, from Shipping Corporation to others. These are some of the important. There you go, that is where the target is, but I want to look at some of the assets which are going to be crucial from a government standpoint, where the strategic sale is going to be or the needle mover on the disinvestment front. It's going to be that big fat kitty which will come from a combination of BPCL, SCI and Container Corporation. Sooty is an easy one to sell. This is the most difficult one. So Sandeep, thank you very much for joining us. We can allow you to escape. Not to your squash court, but for the breakfast table. For the moment, let's take a break. But budget is all about the context, and allow me to set that context once again as to what really are the compulsions for this year's budget. The Finance Minister Nirmala Sitharaman, she would rise on the floor of the Parliament and arguably present the most important budget of this government. Given the fragile nature of the economy, everyone would be watching out for that magic wand or the secret sauce which she would present to fix the issues. The issues are well known. GDP has plummeted, growth has plateaued, consumption cycle is slowing down, and investment cycle is yet to pick up. So what are the options? And before we talk about options, let's look at the reality. The backdrop is difficult and critical choices have to be made. Budget is all about making a decision. Do you spend or do you remain conservative? But what the Finance Minister will have to tackle is a simple number, which is GDP, gross domestic product, an indication of the growth of the economy. And this is where we stand. I want you to focus on two numbers. 7.2 has become 5%. 5% is where Indian economy is likely to grow for FY20 according to conservative estimates. So the backdrop, like I said, is very noisy. What about other indicators? Other indicators which indicate the aggregate health of the economy. Private consumption, health has broken down from 8% to 5%. Government consumption, again an important indicator of where government is spending and how the multiplier in the economy is getting created. And then the most important barometer of GFCF, that also has come down. So whichever way I cut and dissect, there is a challenge. Is this a structural challenge or is this a cyclical challenge? Let's move on and also talk about perhaps the biggest indication for any economy is taxes. The choice you will have to make on taxes. There you go. Growth over discipline. Do you spend more and revive the economy, or do you remain conservative and stick to your fiscal deficit target? Fiscal math should not be compromised, but if you don't compromise that, what happens to the caffeine shot the economy needs, which is growth? Do you reduce taxes and make everyone happy? Budget is all about taxes and taxes and taxes, and nobody wants to pay taxes. Reduce taxes or increase your expenditure, which really could have a multiplier effect. Again, this is a critical choice she will have to make and she will have to decide. Capital expenditure versus revenue expenditure. Capital expenditure largely in the infra space to build ports, roads and bridges. Revenue expenditure, well, broadly to give more freebies via social welfare schemes. That's a choice they will have to take. Please the political economy or use the good old economic theory of creating the multiplier effect. And then urban versus rural stress. This point needs no introduction. One side there is cry that onion prices are going high. On the urban side there is a cry that the job creation is clearly not happening. Now the markets today are trading. And what has been the market experience in last two budgets? Well, at least on the taxation front, they've been on the wrong side. 2018, LTCG was introduced. Yes, LTCG was introduced in 2018. And then earlier this financial year or middle of last calendar year, markets got taste of a surcharge on FPI. So markets really on the taxation front have not been on the right side. But today, will something different happen? If tax hikes, they dominated the budget headline for the last budget, will it be tax cuts? And that's where we stand in last 1 month. Well, Nifty is flat, but expectations are running extremely high, at least for the mid and the small cap index. But what exactly are markets pricing in? Where do we stand? It's not about the event, it's also about the positioning of the market. And I'll welcome my co-anchor Aisha on the set now. Aisha, good morning.
Good morning,
it's all about understanding.
It's a Saturday, we're here in office covering budget.
Well, it's going to be one of those Saturday. I hope that at the evening we are on the right side of the budget.
I really hope so, that this working weekend is well worth it, and tomorrow as well.
I know. So what will make you and me happy? No taxes or low taxes.
Low, I'll go with that. I don't think no is such a wise idea. But let me tell you, I know we're cribbing about the fact that here we are on a Saturday at work, the markets as well are open. But it's really a myth. The importance and the significance of budget on a market day has been falling over the years. And here are the stats. I'm not saying that out of the hat. Just look at the kind of figures and data, and that's really going to tell you how the significance has been falling over the years. If I just look at the average return on the Nifty on budget day, it's absolutely flat, 0.01%. If you look at the return on the markets, the previous 10 days, that's as meager as 2/10. Or for that matter, average return on the Nifty over the last or 10 days after the budget, that's also just a minuscule 0.4%. Now, let me tell you, Nikunj, everyone always wonders what are the budget sensitive stocks. Surprisingly, I don't have a reason for it, but IndusInd Bank, guys, that's been one of the stocks which have moved most over the last 3 budgets. A massive 4% move is what you've seen on IndusInd Bank. Now, there is no rationale really behind that. ITC being the other one, which has seen a 1% move. Now, ITC typically is sensitive to any taxation on cigarettes. We've often wondered whether or not the finance minister is going to slap the sin tax. And if it doesn't come, which it has until now, that's what I guess is, makes people holding ITC or trading ITC happy, which is why that move on ITC. Sun Pharma, sensitive to MAT. As soon as MAT was slapped, you've seen the returns on Sun Pharma, lost about 2.6%. And I also want to mark the volatility that the market has seen. While the average return may not be much, but the market sure has been volatile. The high to the low of the day has seen wild swings. So if I just look at the median, that stands at 2.25%. The max move that the market has seen on a budget day has been a solid 4%. So yes, volatile for sure. Maybe that's going to be today. I hope not though. The next day move on the Nifty, it's been very, very static, about 0.7%. Next day is only going to be Monday for us. The minimum move has been -2.5%. Now, what will please the markets? We all know that it's a pro-growth budget that the markets would like. Even if you want to miss on the fisc, make that for instilling growth. More importantly, I guess, Nikunj, it's the math. How is it that you are actually arriving to the disinvestment target? How exactly do you plan on spending? How exactly are you working the math, the credit and the debit, and are they matching up on the total tally? I guess that is what the markets would be looking out for.
Aisha, I think even though markets secretly want that the fiscal deficit should be compromised, frankly, they don't want it to be busted.
Yeah, absolutely.
Which is that they want to be, the messaging from the market is that you should not do a macro compromise or a discipline compromise, because once that gets in, that's the easy way to stimulate the economy, keep on giving the caffeine shots. So whereas markets know and they want this year's fiscal number to be busted, that's okay, acceptable. Next year, I think they want to remain conservative. And remember, today as we walked into trade this morning, world is shaky, and it's a Saturday. So what's happened to historical budgets may actually not happen today. But ABBA is also, thank you Aisha, ABBA is also there, and ABBA, I think what we need to also understand is the global backdrop and what's the setup in terms of the global...
Absolutely, Nikunj.
Oh, you're not wearing the right color. I must tell you that. Thank God the globe is off today.
Yes, I know. Not necessarily.
She's dressed only for the party.
Yeah, exactly.
It's Saturday morning.
You got to wear red on a Saturday night, right? So let's actually bring up the global picture as well and take a look. It's an interesting time that we're actually going into this budget, because if you look at it in the global context, just like you said, we've seen moderating growth, and everyone's keenly seeing whether India can really maintain its title as the growth economy or the growth engine of the world. So let's take a look, in fact, at the setup. That's for you, first of all, on your screen. Since the last budget, the kind of move that we've seen on the yields as well, and given the kind of pressure that we've actually seen building up on them, again, reflecting what we've been seeing in the growth picture as well. So that's, of course, on the yield. The Dow Jones has actually been outperforming. We've seen fantastic moves coming in the US markets despite all those trade fears, and the Nifty has actually moved up just about 1% or so. So we have been lagging behind. And interestingly, when you speak to market analysts and experts from around the world, everyone is just betting on India. They're saying it's showing all the signs of being an economy that's reflecting the key growth indicators that the US was, let's say, a decade or more ago. So we've got all the pieces in place. Let's take a look at some of the other barometers as well, and how they've stacked up between last budget and now as well. On your screen then, crude, of course, we've been tracking the volatility on that. It's actually now down about close to 10% since the last budget. Those are really critical factors that are working to our advantage. If anything, this has been giving the government breathing room. We've been talking about it. They have been lucky with this, and they're still in a tight spot. So, if you're asking for things to be working in their favor, this is in fact one of the biggest things that we can look at.
And also, I think, Nikunj, it's important to know the kind of movement that we've seen on the markets month to date. While you've got the large caps, which were sort of your shining armor for the last year gone by, they've actually receded. We've had a negative 1% fall on the Nifty, while we've seen finally that much awaited rebound from the broader market. So almost a 6% move on the mid cap index, an 8% move on the small cap index. And I only hope that after the budget as well, this trend continues. There's something in it for the broader economy.
The way I look at it is that you've got a small trader and you've got an institutional investor. The institutional investor is a smart guy. He knows the elbow room for the finance minister is not that large that you can get a rabbit out of the hat.
Yeah.
So you don't have to take your expectations high.
Yeah.
And then on top of that, you've got the coronavirus issue. So Nifty and the Bank Nifty, which are dominated by institutional investors, smart guys, they don't expect anything.
Right.
Then you've got the HNI crowd and the retail crowd.
Yeah.
They feel something special will happen for infrastructure, something on tax, something on LTCG, something on dividend tax. Everything will change. Those are the guys who are approaching the market with high
Heavy
expectations.
positions,
And that explains why this time around the market is really split right in the middle. Frankly, if you ask me, one factor which could really work in the favor of the finance minister is that there is abundant global liquidity. All they need to do is reassure global investors that we are open for business. How do you tell global investors we are open for business? Well, you say, I'm going to maintain tax levels, I will not do anything draconian, and I will ensure that if you invest in India, the environment and the legislation will give you a reasonable chance of making profits.
Okay. And I think, disinvestment, that's something that the market has been talking about for a while. We all know that it got pushed to the next fiscal now. I think a clear road back is mandatory this budget.
Yeah, I mean, that's the way I think you can really thread the needle with this kind of a political goodwill.
Okay.
Which is that you go and come up with something concrete, not just those numbers where you will be able to achieve your targets by selling, government stakes in bigs and drabs to LIC and to via the ETF
All of it
route.
on
Exactly.
That's the clarity
it
that
has
the
to be
market
strategic,
wants.
it has to be out of box, and it has to be big and meaningful.
And in fact, we've been building up to the budget with a whole host of exclusives on what we can expect. Let's also go across to Nayantara, who is standing by with a preview of what's in store today.
The cover that we have is that Budget 2020 might include a request of the Commerce Ministry, which is to have a new tax called the Border Adjustment Tax. This will be over and above the custom duty. It will be on imports, so over and above the customs duty charged at the port of entry and will be non-creditable. It's pretty much what the name suggests, border adjustment tax. You adjust the tax at the border. The reason for it is there is a view that domestic industry is at a pricing disadvantage, that domestic companies pay a lot of taxes, duties, royalties, which they're not able to offset. And this puts them at a disadvantage of what is being imported. It is believed that the disadvantage, for example, for steel industry alone is a 5% pricing disadvantage. And that's what the Narendra Modi government wants to correct, give a fillip to manufacturing, give a fillip to make in India, and put the imports at a level playing field with the domestic companies. So let's see if later today in the speech by Nirmala Sitharaman, we do hear about the border adjustment tax.
Okay, that's the cover on budget, but let's also take it across to Ruchi Bhatia, my colleague, and find out what's the number floating around for the disinvestment target. Ruchi?
Today is an important day for Finance Minister Nirmala Sitharaman. She has an unenviable task ahead of her of pump prime the economy at a time when growth has been rather low and slow, and consequently this has an impact on the revenue proceeds as well. Having said that, there is a possibility on account of the spending that the government wants to do in various sectors such as infrastructure, there is going to be pressure that will be put on the Department of Investment and Public Asset Management. So much so that they could be given the record target that the department has seen in the last few years. I'm given to understand that the department could see a target for FY21 of close to 1.5 lakh crore rupees. Remember, the government was pretty ambitious with respect to the privatization plan for BPCL Shipping Corp and Concor in last year, but because all this process started pretty late, the cabinet approvals came in pretty late, there is a possibility that all this will now move to the first half of the next fiscal year, which means that the government is hoping to get a large chunk of money through the privatization process of, good PSUs like Shipping Corp, BPCL and Concor. The government has exuded a lot of confidence in the past as well of big players being interested for BPCL. Having said that, I'm given to understand the Department of Investment and Public Asset Management is all set to get a record target for FY21 in the upcoming budget.
Just 2.5 hours and we'll finally get to hear what the Finance Minister chooses to do. It's a long list that's going to make the markets happy. So let's chat a little bit about that. Joining me, my next guest from Marcellus Investments, Saurabh Mukherjee, walking in right here to our video wall. Saurabh, be careful. Lots of buyers there. Good morning.
Morning.
We usually don't ever meet on a Saturday, do we?
There is that. So there is always a first time.
It is. I hope it's going to be worth it.
I think we'll have to wait and watch, but the fact that it's on a Saturday assures you of a bigger audience for your budget broadcast than ever before.
Is it going to be just that, or will there be more that will please the markets today?
I think
because the markets are also open.
Given that it's a Saturday, I think a middle class tax cut has to be there.
Yeah.
And the whole country is going to tune in. You've just cut corporate tax rates. If the FM doesn't cut middle class tax rates today, that'll be very, very surprising.
But you know, Saurabh, that's the thing. And I was chatting with Swaminathan Iyer as well, consulting editor at ET Now. And he said that, and more market people actually believe that it's not really going to suffice if you just cut income tax rates in that one small bracket.
Sure.
Because the larger collection is from the highest bracket. You cut the rates, that's going to increase what? Just people buying more expensive soaps and shampoos.
Absolutely.
What's going to make a material lift to consumption is if you cut, salaries across the board.
I think,
or rather taxes across the board.
I think what we have to be very careful about is understanding the extent to which the budget has become an affair for optics, for public perception. I think your previous guest, Mr. Narayan, was pointing out how over the years the impact of the budget on the market has reduced. So I think that trend, I reckon, continues today as well. The second thing, we also have to be fair to the FM. She's already announced so many things in the last 4 or 5 months that it's not clear how much space there is, how much fiscal space there is after the multitude of announcements we've seen since August. So I think today is more about optics, about generating a positive narrative, about making the middle class feel good about what's happening in our country. I agree with Swami Iyer, how much tangible boost GDP can get from reducing the standard or increasing the standard deduction from 2.5 lakh to 5 lakh, I think is questionable. If the government wants to have a tangible impact on the industry, I think the place to focus on will be housing and NBFCs. On NBFCs, we need a credit guarantee scheme. The NBFC sector is desperately starved of funds. And in housing, we need the government to step in and increase the stimulus for affordable housing. And perhaps say that the interest subvention, the interest tax deduction for affordable housing should go up from 20 lakhs to 40 lakhs. Housing and NBFCs, I can see the only multipliers the government could lever to generate some sort of positive economic impulse. But I suspect more than that, the focus will be on optics and feel good for the middle class.
Right. There's lots at stake right now. The economy is grappling. The GDP figures are at an all-time low. You've got the IMF coming out with their report and saying that India has to be responsible for the global growth forecast downgraded as well. What is the need of the hour? We all know that the fiscal elbow room is limited, but if the fisc is challenged for instilling growth back into the economy, is that something that the markets are going to be okay with?
I think the markets are broadly factored in something around a 3.7, 3.8 fiscal deficit for the current year. and also expect, I think the market also know next year the fiscal deficit will be pretty similar. So some degree of fiscal slippage is already expected. What we are looking to see as market participants is, are there any creative ideas that the government has where they use their modest fiscal firepower, combine it with the free markets, with the financial system's firepower, and do some rescue work in the financial services ecosystem, especially the NBFC ecosystem. So for instance,
What could be those out-of-box ideas?
the one that I would be very keen to see, I've written about it, is a credit guarantee scheme for the NBFCs. So the government doesn't necessarily have to say, we will go forth and recapitalize the NBFCs. What the government needs to say is, we will put up a certain amount of money, either directly or via SBI or via SIDBI. We will put up a certain amount of money that will act as, say, 50% credit guarantee for anybody who purchases NBFC CPs or CDs, right? So that way you're putting up for every dollar of money flowing into the NBFCs, you're putting up half of it. You're asking the financial system, the bond market, to put up half of it. Those sorts of ideas, so for example, a bad bank or a bad AIFs, in inverted commas, which is partly funded by sovereign wealth fund money, partly by the government of India. So government has skin in the game. The bad AIF then goes into the market and buys out the stressed CP and stressed NCD paper from the NBFCs.
So that you're saying is going to finally instill liquidity into the system, which was completely
That's right. So using the government's credibility, using some government money, you put skin in the game, then you invite foreign money or you invite local bond market money to recapitalize our NBFC ecosystem, because without that, it is going to be very, very hard to invigorate SMEs, to invigorate housing, and without that, job creation ain't going to happen.
How critical is disinvestment, Saurabh? We all know it's been pushed back, the BPCL disinvestment, to the next fiscal. But do you think an out-and-out sale, a complete roadmap and a clear roadmap, all or none, give me BPCL with the subsidiaries, give me VSNL with the land bank, is that the clarity that the markets will be seeking today?
I think what is the given, I think, is that we will get the highest ever disinvestment target for next year.
I hope the math adds up.
Now, I think they'll announce a big number, I suspect 110, 120,000 crore. If they announce a big number, they also have to announce some big names. I think BPCL, Air India, Shipping Corporation, etc. is a given. Maybe they'll throw in one more big name, such as Coal India or a ONGC disinvestment. The challenge with all of this, Aisha, as you know, is the appetite for these things isn't the greatest out there. The juiciest asset in this is BPCL, and therefore if the government can commit to some sort of timeline for a BPCL sell down process, that will give us some conviction in the 110, 120,000, the big number that I'm sure we're going to get. You are fiscally pushed, you will come up with a big number on disinvestment. I hope they give us some timeline on BPCL, because that's the most likely asset that will find a buyer.
Okay, Saurabh Mukherjee, we look forward to this
Thank you.
Saturday. Glad to have you on the show.
Okay.
We'll let you go on that one. Back to the studio, guys.
Nirmala Sitharaman reaching Parliament.
I rise to present the budget for the year 2020.
This budget is presented with a 10-year vision in mind. So the emphasis is very clearly on overall development of the economy.
Karya Purusha Karena Lakshyam Sampadayate. With determined human effort, the task will surely be completed.
This is not a budget to remember. The budget does not provide the answers.
जन जन को समर्थ बनाने वाला बजट है। इस बजट से गरीब को बल मिलेगा, युवा को बेहतर कल मिलेगा।
यकीन हो तो कोई रास्ता निकलता है, हवा की ओट भी लेकर चराग जलता है।
Well, good morning. We're counting down to the FM speech, and ahead of that, we're getting you some of the biggest voices, trying to understand what could be in store today. Let's actually get into a conversation with Rhythm Desai as well on what can be expected this time around from the budget. We've, in fact, got lots to talk to him about. So to start off with, Rhythm, you've tracked many a budget. So this time around, do you feel that this one's going to be particularly critical given where we're at in terms of growth? What can we expect? And, how much of an impact really does the budget have on the economy?
The budget generates more TRP than economic momentum. At least that's what I have observed over the years. I mean, after the 91 and 92 budget, incrementally, there have not been such major policy documents. Policy is a all the year round affair. So it's not concentrated on a single day, on a single morning of the budget. Nevertheless, the market focuses a lot on it. At least it seems so. But when you look at stock market performance of the last, say, 25 years, the impact of the budget is waning. Both in terms of the volatility it generates, so for day traders, as well as of the lasting impact it generates on share prices. So, with that backdrop in mind, clearly there are expectations that the government will use this platform to continue with, the recent momentum we have seen on the policy front, which, started in, say, August last year. Therefore, I think there is some expectation around it. So what can happen? Well, firstly, I think the most important thing is what is the fiscal target. But even more important than that is how credible the numbers are. And that, this has been all over the place over the past several years. Successive governments have intended to consolidate the fisc. And clearly we have struggled a bit on this front. The targets have been missed. And we have delayed the consolidation. Now, we're looking at 3% over the next couple of years. I think this year may not be that year we get there. Clearly, the trailing 12 months, there is going to be some slippage because of the tax cuts and because of the overall slowdown in the economy. So, I think from there, maybe we get some consolidation, but I don't expect a whole lot. The second is, what the government does with its expenditure. I clearly see the need to boost consumption or boost economic activity. So I'm hoping that there is increase in transfers to farmers. The government has a very good scheme in place where it is transferring cash to farmers, which was launched in December of 2018, or rather in February 2018 with February 2019 with retrospective effect from December 2018. I hope that scheme is enhanced because clearly there's pain in the rural sector and this is a direct way of addressing it. Of course, the government has already talked about boosting infrastructure spending, so we'll wait for some more details in the budget. Then the second thing is what it does with taxes. There's clearly room to rationalize taxes, and I'm hoping again, I don't know if I can say I'm expecting this, but I'm hoping that there is attention paid to capital markets. Whether it's dividend distribution tax, whether it's long-term capital gains tax, I think there's scope for us to rationalize these, and this may be a good year to do that with that direct implications on share prices and of course the economy, because remember, share prices reflexively act on the economy as well as the other way around. So it's not just the economy that influences share prices, but even share prices influence the economy. And maybe the third area that we should be looking at is, how the government wants to tackle, monetizing its balance sheet, what we call as privatization. Because clearly resources are constrained with the current economic backdrop, and therefore there is greater monetization of the balance sheet needed. I think they should get really aggressive about this. 2001 to 2003 is a good template to use when the erstwhile NDA government under the leadership of Vajpayee and Arun Shourie had launched a massive privatization program. So I think that's the type of privatization program I'm hoping gets launched for the next 12 to 24 months. And that will give the government much needed resources to heal the economy and to undertake more tax reform.
There's no debate that the economy clearly needs a boost. I think the big question is whether she'll go in for a short-term quick fix or look at stricter, more structural, long-lasting reforms. Which is the path you feel she'll take?
I think you need is a greater focus on structural reform, and there's a lot of low-hanging fruit on that front. And it's not the budget that is the platform for doing this. I mean, you can make the announcements there, but really the action has to happen on a daily basis. So whether it is liberalizing the investment environment, whether it is making investments more viable, whether it is actually getting manufacturing companies to start setting up capacities, those are the things I think that will actually revive the economy on a more sustainable basis. Yes, you can throw some money around and hope that people will spend it, but that's not actually going to create a sustainable recovery in the economy. What we can also wish for, and I think that's the Morgan Stanley view, is that there will be a modest improvement in global growth. Of course, there is this virus risk out there, and I hope that it fades away. And we have to keep a great vigilance about it, because it has the potential to spoil what has been a nascent economic recovery. And people underestimate the role of exports. We've been talking about this for a while. India's share in global exports has been stagnating for the last 6 or 7 years. On a physical plus services number, it is about 2%, and that needs to go up, because if you want greater economic prosperity, you need to trade with richer people. If poor people are trading amongst themselves, that is, if we remain a domestic economy, we're not going to actually create prosperity. So it's very imperative that we go out and trade with the rest of the world. So you need trade deals out there. You need a trade deal with the US done, with Eurozone done. So I think these are things which are outside the budget, which are far more sustainable.
All right, Rhythm Desai, thank you very much for joining us. Now I want to go back to the market positioning once again. One is what comes out of the budget today. B, what is in the price. Now before we just think that today's market action and reaction is going to be all about budget, bear in mind there is a weak handover which has come last night from US markets. Dow has dropped. It's a 600 plus point cut. So you will see a gap down start. Metal stocks, China related franchise like Tata Motors and other stocks will be under pressure. Now, but in less than 3 hours now, less than 2.5 hours actually, the finance minister would be coming out and she would be standing on the floor of the parliament, and like I said, arguably this would be one of the most important budget speeches the government in a sense has articulated. The market positioning, I want to go back to that whole issue of the market positioning once again. What exactly are markets betting on and what exactly are markets pricing in? Now that's how markets have moved in last 1 month. Nifty down by 1.5%. The mid and the small cap indices have taken an uptick of 5% plus. So it's interesting the way how markets have moved. Similarly, between last budget and now, even though you may optically feel that tax rate cut benefits would have kicked in, but factually the tax benefits have not really translated into great hurrah. Budget is all about taxes, and that's where I think the general view is. This is where the taxes are. You don't pay taxes if you are in the bracket of 2.5 lakh. You don't pay taxes. These are some of the other major tax deductions which really would be at play. So that's the bottom line I'm trying to indicate here, which is that for the moment the market positioning seems to be indicating and suggesting that the market are not approaching the budget with high expectations. CK has done some very interesting analysis on what exactly has happened to markets in this year, in this decade, and if markets they fall before the budget, what happens to the Nifty post-budget. So CK, good morning once again. This is just for the benefit of those who've just tuned in. You've done some brilliant analysis which talks about how markets have moved pre and post. So let's look at that data. That data will just come up on your screen. This is what markets have done in the last 1 month. There you go. CK, why don't you explain to our viewers that what is this green wall and what is this blue?
As it says, the green is the pre-budget move and blue is the post-budget move. Now, what I've done here is taken the history of the last about 15 years, and in that I found that 6 years out of the 15, the market has moved consistently up pre and post-budget. What also came out of that is an interesting study that in the past 15 years, there has been just one occasion in 2007 where the market fell before the budget and fell post-budget also. So where does that leave us with the rest? The rest, we find that there is a sequence of alternation. That is, if the market is up pre-budget, it falls. It generally tends to fall post-budget, and also vice versa. So, which is which is the graph which is kind of seen here.
Now the green one is that this is how markets have moved pre-budget.
Down.
Okay.
Pre-budget,
Okay.
and the blue shows that later on, post-budget, it actually moves up. So if
This has happened in 11, 12, 13, 18, 19.
in 11 and 13, it was actually down, and then it moved up.
Okay.
So now if you come to 20,
Okay.
we are actually down.
Okay.
And then if you look at it on an average, the movement is about 4.5%. And we are down about 3.5% already. So we are in and around the average as far as the declines are concerned. Now progressively it's becoming smaller. So we are at a level where we are pre-budget down as per averages.
So what CK is saying, ladies and gentlemen, is the following. Historically, when markets have fallen before the budget, there is a strong case for a post-budget rally. Now, why is that important this time? Well, there you go. Markets in the run-up to the budget from the peak have fallen down by 3.5%. So CK is sticking his neck out
Yes.
on a Saturday morning.
I'm basing it on history, right?
On a Saturday morning, and he's making a case that if you are a bull coming to work or watching ET now and trading long will be worth it. Let's take a break, but little later on the show. And before we take a break, CK, you may just want to hang in there because we want to be sharing an interesting did you know fact. Indira Gandhi was the first woman FM to present the budget in 1970. Yep. Interesting to bear. Let's take a break. Little later, it's Rakesh Jhunjhunwala, Vijay Kedia with his new song, and then Madhu Kela on what exactly he's betting on from this year's budget.
Years ago, whatever was that? When you were.
Nirmala Sitharaman reaching Parliament. I rise to present the budget for the year 2020.
This budget is presented with a 10-year vision in mind. So the emphasis is very clearly on overall development of the economy.
Karya Purusha Karena Lakshyam Sampadayate. With determined human effort, the task will surely be completed.
This is not a budget to remember. The budget does not provide the answers.
जन जन को समर्थ बनाने वाला बजट है। इस बजट से गरीब को बल मिलेगा, युवा को बेहतर कल मिलेगा।
यकीन हो तो कोई रास्ता निकलता है, हवा की ओट भी लेकर चराग जलता है।
Welcome back. You're tracking our special budget coverage and we've got lots in store for you. In fact, we're going to go across to Avan now, who's at a very special location interacting with some of the top minds on what we're watching out for today as they tune in to ET Now and the budget as well. Avan?
The operations.
Operations. Oh, okay.
Well, it may be budget day and the finance minister may be doling out the budget, but we are here on the greens of the Bombay Presidency Golf Club in Mumbai. Nothing is keeping our golfers away from the golf course. So let's introduce our panel. We've got with us Mr. Ravi Kunteti, who's a banker. There's also Rajiv Sehgal, who's managing partner at Equanimity Ventures, as well as Probal Banerjee, who's with us from the Bajaj Group. Thank you so much, gentlemen. So, you know, the saying goes that you drive for show and you putt for dough. So, what is it that you're expecting from the finance minister this time around? Some sort of big bang reforms or small effective measures?
You want to go first?
Well, my personal expectation is more to focus on the implementation, right? We have been having good policy announcements, but I think they've all been fraught with some implementation challenges. So how we make it easy for the taxpayers to pay and how we actually keep the compliance cost easier for the businesses, to me, I think that will go a long way to get better results.
Yeah.
I have a totally contrarian view, so to say, for the simple reason I expect big bang changes in this budget. For the simple reason, the economy has come down quite drastically, and as a result, this is the time for the government to take the bold steps and change the economy for good.
Yeah.
And I expect big bang changes in a couple of areas. Number one is that you have to restructure the personal income tax. They have done good enough for the corporate income tax, but I think the personal income tax realignment with the latest scenario of the economy is very, very important. I think that will be the first one.
Yeah.
Number two, very importantly, and they will do it for the simple reason that they need to do it to boost the economy, because we need to do a lot of spending on infrastructure.
Yes.
And the private investment in this country has gone down to the gutter, and there is nothing that you can do about it. So as of today, it's the government who have to take up the cudgels and spend the money. And as we all know, they are talking about spending about $1.43 trillion for the next couple of years. And if they have to do that, they will have to do that. There is no other option, because that is the only thing which will boost up the demand in the economy.
So, you know, you've spoken about infrastructure, etc., and I understand you're wearing the entrepreneur's hat as well. So, when it comes to startups, do you think we need a more conducive and easier business environment?
I think a lot can be done by the government in the startup early stage ecosystem front. First of all, they should do what they did with the IT industry 3 decades ago. Stay out, stay away, let them be. But if you want to facilitate, I think there's a lot more R&D budgets that can be sanctioned. There are a lot more tax-friendly measures that can be introduced to boost more investments into R&D, because that really is going to drive innovation going forward. I think that's not too much to ask. They should be doing that, I presume.
Do you think, we could see a deviation from the traditional method of sticking?
Straight away back again, you'll be in the same.
All right. Okay, we'll keep going back to the golf course there, but we've also got the pre-open rates on your screen right now, actually holding up a little in the green. So, building up that positive momentum as everyone anticipates, some measures coming in the budget today. That's the pre-open, markets opening in just about 15 minutes or so. We've also got Punita Kumar Sinha with us this morning, so let's in fact get her perspective as well on what we're watching out for today. Punita, markets are clearly hoping for the best. We have been awaiting some key reforms in this budget and at least a move when it comes to juggling on the taxation front in order to boost consumption. What's going to be top priority for you as you wait to hear what the finance minister says?
Well, I think the need of the hour is to stimulate the economy. And I think so, growth-oriented budget. And I suspect they're going to let the fiscal deficit targets be breached, because I think to grow the economy, you probably need to spend a lot more. And I think that's what they probably are going to do. The economic survey says that the growth could come back to 6.5%. And that there will be a lot of wealth creation. And to create that wealth, they may do something on the long-term capital gains or on the capital gains tax, personal income tax, etc., so that there are wealth creation opportunities that lead to further investment. So I suspect there'll be some divestment goals as well, because they do need the money and they need to find their sources of revenue somewhere if they're cutting rates, tax rates, etc.
All right. The significance of this envelope, just looking lovely, Aisha, this morning in this sari this color. I've got Anurag Thakur. They're all set. And a clear agenda that has, of course, been promoted by this government has been, that of national identity. And as they head into the budget as well, it's really going to be all about, once again, building India from ground up. Remember, even in the economic survey, alluding to the fact that growth has to be ground up. And talking about how, yes, taxation will need to be addressed. So this is really going to be key as we count down to what's in store in that envelope. And, as we wait to hear what she says. Remember, normally, of course, the speech is about an hour and a half or so. Last year, of course, we had a pretty long speech in the interim budget from Nirmala Sitharaman. This is her second budget now, and the only female finance minister, in fact, to announce two budgets. And we'll be keenly awaiting, what she has in store. It's going to be one budget where, the government's really not going to be able to get away without actually addressing the growth problem. And the one positive was that at least in the economic survey, they did address that. Punita, they're not shying away from the problem that, yes, growth has been lagging, but it's really what they come back with in order to address that. As you said, everyone's going to be watching out for it, but what are the tools you feel that they have that they can use currently, given the fact that we're stuck in this tight spot with the fisc?
Well, I think, as I said, one that they could do is on the tax rates to boost consumption, because demand is weak and we really need to boost demand. So I think they might do something, whether it's on the personal tax rates or potentially on the capital gains. I don't know if they'll do it, but I would expect that's one measure that they probably heard enough demand about. So that's one thing they would do. They also, I think they need to spend more on infrastructure, create more jobs. And that's probably what the government is also looking to do, because the unemployment and capex cycle in India has been quite weak. So those two need to be addressed as well. So I think those are two things that they're definitely going to do. I think, of course, the NBFC banking sector needs a lot of support. I don't know whether that's a budgetary issue, but to the extent they might be able to do something there, whether, it means making the banks lend more or whatever. So something in that area as well. might be seen as well, I think.
Saturday, and we've got some, well, I can't say music and dance, Abha, but we've got some Sher o Shairi in a musical andaz. So let's take it across to Nikunj. He's got Vijay Kedia with him. Vijay, I believe Nikunj has been practicing hours for his message to the Finance Minister, but in a musical andaz.
You know, Aisha, on a Saturday morning, well, start with that. Yes, budget is important. It's unfortunate what's happening to coronavirus, but my dear old friend Vijay Kedia, we've always met him and spoken to him as Vijay the investor or Vijay the old investor. But today it's going to be Vijay the new singer. How is the new definition? Not Vijay the old investor, but Vijay the new singer. Should we talk about markets or start with your lines on the budget?
You have got so many intellectual people to talk about the market, so many economists and chartered accountants. So that is not my subject.
So your subject today is that what should Finance Minister do to budget, right? That's the original song you've written.
Okay, I should sing that
yes,
song?
Please.
Okay, so this is what I want to tell Finance Minister. कहना है आज FM से पहली बार हो डिविडेंड के ऊपर लगाती हो मैडम टैक्स क्यों बार बार लॉन्ग टर्म पे जब से टैक्स है तब से डूब गया बाजार.
So that's a wonderful one. Congratulations. The markets are not that bad. You're looking at alternating career.
Yes. As I said, no, there is a, they call it AIF, Alternate Investment Fund.
Right.
So this is my alternate income fund.
But your stocks are at an all-time high. WebUp, GM, Sudarshan Chemicals.
And Everest Industries.
Everest Industries.
No, it's all-time low. Not all-time low. It's low.
Okay. It's budget today.
Yeah.
Let's talk about where the market positioning is. You've always said that, look, don't look at the event, look at what is priced in and what is not priced in. So this is where we stand, Vijay, in terms of the context graphic, that what has happened to the market in the run-up to the budget. Small and mid-cap stocks have gone higher and large-cap stocks have not outperformed. This is where we are, Vijay, in last 1 month. Nifty is down 1%, mid-cap index is up 5% and the small-cap index is up 6.5%. What is your sense? Irrespective of how good the budget is or bad the budget is, are markets already factoring in a lot of good news?
You see, earlier what was happening, large cap were rising or index was rising, right? And the mid cap were falling. So now I think this correction is happening. Now the stocks which were participating in the index earlier now falling or correcting to some extent, and mid cap is recovering. So I think there is, of course, there would be a lot of potential in mid cap to rise further, but I don't think that until unless this budget will support new bull market is there. I don't believe that. It depends on the budget.
I want to go back to that Bank Nifty graphic once again, just for our benefit of our viewers, Vijay, that the Bank Nifty in the run up to the budget is actually not at an all-time high, which means that traders are not really approaching the budget with high expectations.
Yeah, exactly. That is what I am saying. People are actually confused, let me tell you. I think there is a trust deficit with the government. People must be thinking, let me tell you, let me put it in this way. This is whatever team is there in this finance ministry, this is the new team. And the situation in the market, situation in the economy is very bad. So people would like to wait. They are not sure that what they can deliver. So until unless that surety is there, I think market will not go up or market will not take any call.
When Vijay Kedia comes on TV, our viewers want to know that what is the last declared purchase of Vijay Kedia. Declared purchase, right? You bought 2 stocks and those names will just come up on the screen. If you can step back, we'll just fire the 1 year or the 1 month chart of 2 stocks here. Newland Labs. That's how Newland Lab yesterday moved. That's the 1 month change of Newland Labs, and the other one you bought is JMC Projects. You've historically not bought pharma. Why have you bought into a mid-cap pharma like Newland?
First of all, let me tell you, both the stocks are down by 10 and 20% from my purchase price. Okay.
You're an investor, so it does not matter what happens in the short term.
Yes, and Newland Pharma, Newland Lab I bought because they are into API, and what I got to understand that the dominance of API in China is actually receding. So now somebody told me that maybe the time will come that when Indian companies, Indian API, they will export their product to China itself. So that is why I bought Newland Lab. And GMC because I'm very bullish in infrastructure, and I think that this budget will also be, will focus on infrastructure. So I found this company reasonably priced and balance sheet wise also sound. So that is why I bought.
Okay, now Rakesh Jhunjhunwala, I spoke to him a couple of days ago, and my question was very simple. How much of the current environment is pricing in a budget, and is there logic for STT and LTCG to coexist?
I think there will be a lot of policy announcement in the budget. I think there will be announcement in FDI in a lot of areas. I personally feel government should, make it long-term capital gains tax-free by enhancing the period. From 1 year, you make it 2 years. So up to 2 years become all short-term capital gain. I think it will lead to net gain to government revenue, and it will lead to a big gain in sentiment. Enhance the period of long-term capital gain, but make it tax-free. Then I think we should give a lot of relief to the real estate sector. We can make a view that anybody who buys a house in the next 12 months, whenever he sells it, there is no capital gains. First of all, people generally don't buy houses to sell them, right? And second thing is there is no immediate loss of revenue. If you say that whenever you buy a house, if you sell it after 2 years, minimum period, there will be no capital gains. And I think there should be other relief for the real estate sector, right? I think we should enhance the amount of, and I think there should be big relief for tax payments for income from 10 lakhs to 25 lakhs. And then also we have to communicate by the budget to the business community that we are on your side. We have to revive the animal spirits of the business community. And government, I think, if it removes the surcharge or reduces the surcharge, it will really help in getting back the sentiment. So government has to do some action by which it conveys to the business community that we are on the same side. Well, I don't think they're expecting anything negative. I don't know positive, right? But there is not there is no retail or public participation still in the market. I am personally hopeful it will come after the budget. They should not know in the world they do. So if the government, best thing is government abolish one of them. I think long-term capital gain is better because STT, the government gets the money 10-12,000 crores from 2 exchanges without any administrative cost, right? So I think it's better if we abolish long-term capital gains. If government cannot abolish it, make it 1 or 2 years. Well, I think the 20% dividend tax is not draconian, but the tax put on dividend income is according to me not needed. Direct dividend tax is most undesirable. Again, you have to, then do TDS, then collect the income. It is administratively a nightmare. This tax which the companies pay, I think, is much more convenient. But then anybody who has dividend income of more than 10 lakhs has to pay tax. I think that's unjustified. Because you have a 25% rate of tax, then you pay 20%. Again, you pay 10%, that becomes very high. So I think 20% rate of dividend distribution tax is okay, and I don't think we should tinker there.
Abba, yes. Saturday, markets are set to open. It's the budget day, yes. But there is a hangover of the coronavirus.
Absolutely.
These are factors which surely will have impact on the way how markets would open, because ultimately it's the global alignment which we need to monitor.
True, and until we actually have the next trigger, this is what's going to be top of mind for everyone. We've started off in the pre-open indicating a little bit of, sort of a breath of positivity. Nikun, just a touch. It looks like perhaps everyone's anticipating or hoping that there'll be something positive today.
That's the only challenge, Abba, that this time around, even though the smart guys are matured enough to know that budget is a one-day event and you should not expect much, and over the years market volatility has come down during the budget, the markets are telling you, look, the volatility, because of the backdrop what we have right now, we should expect something big from the government.
Right.
It may be bold, it may be creative, it may be out of box, but 1 or 2 extension of taxes, little bit of tax tinkering changes. Yeah. If tax hike dominate the large budget headlines, tax cut should dominate this year's budget headline. I think that is what we need to focus on.
Absolutely. I think we've got the opening bell, and we're actually now indicating a soft start, down about 0.5% right now. Even almost in the advanced decline, I think, it's being kept pretty neutral as we head in. You're probably right. Right now, the global cues and otherwise, the context is weighing a little heavy. The Nifty Bank is down 0.8%. The index is also down about 0.5% or so, as you can see on your screen. So we're tilted a little towards the negative. but that's not necessarily an indicator of how positions are shaping up ahead of the budget.
Yeah, so what would you look at typically? I actually want to look at some of the metal names right now, especially the ones which are connected with China. So you got to look at JSW Steel, you got to look at Tata Steel, you definitely have to look at Tata Motors. And if there is bad news in China, is that good news for some of the back home chemical companies like Sudarshan Chemicals or for that matter Aarti Industries? It's unfortunate what's happening in China, but markets are markets. We always tend to look at one man's poison is other man's food and vice versa. So chemical stocks back home here, steel stocks as a category, both ferrous and non-ferrous metal stocks will be important. And then purely from a budget standpoint, if I really have to identify one large trend, I would say if DDT changes are done, then you definitely would be watching out for those companies which pay a high dividend. So BSE, IOC, Vedanta, companies which have a high dividend payout, I think those would be very, very important.
That's what we're going to be watching out for. And remember, of course, broader markets have been in sync this last month. If we do hear sector-specific reforms as well, then we'll see a lot more positivity, whether it be infrastructure, retail, housing, some of these pockets where if we do see that boost coming in, fertilizers we've been talking about, so many specific pockets, agri, rural, if we hear anything announced, we could actually see a much better breadth as well.
Okay, well Aisha, it's been an okay start, but I guess the two focus points for me would be China related companies, metal, autos, chemicals, and then stocks which have or companies which have a high dividend payout, because if there is a tax change in the dividend distribution tax from the company to the receiver, some of those stocks could be in focus.
Yeah, I just want to mark two more names which would be reacting to their numbers as well, Unilever and ITC. So let's just quickly bring them up because they sure have had a positive start. Remember, ITC typically is the sensitive one as well. A sin tax is something that everyone fears. And the last few times we've not had any sin tax, even though the market was fearing one. And you've seen ITC has on an average gained about 1% on budget day. And of course, reacting to its earnings as well, which came by yesterday. That aside, I want to check in on what IndusInd Bank is up to. This is typically the one which has shown you maximum gains on any given budget day. About a 4% average move is what IndusInd Bank typically gives you. Today, though, it starts off lower by about 1%. But it's an okay market, at a time when you've got worries around the globe with regards to the contagion effect of the coronavirus. You've got a weak handover, remember, from US equity markets as well overnight. This is how you would expect to start. Sub that 12,000 mark, 11,921, and the breadth as well swinging in favor of the declines. And Punita, that's exactly what I wanted to chat about, the coronavirus contagion, because it seems that, no one knows the intensity of it as of now. Unfortunate as it may be, it's already spread across to 20 countries. And it seems it's going to definitely take its toll on the markets.
I think it is taking a toll on some of the Asian and emerging markets. Even the US markets today were weak. But I think the impact on India would be much less, as we are seeing just now, because A, we have the budget today. B, I think the valuation and India has underperformed most of the other larger markets. So I think there is more value. And if there's any positive news, I think we are also bottoming out on the economic front. So I suspect India could outperform. Now, of course, absolute returns are quite dependent on what happens globally and on flows, etc. But definitely all the enthusiasm that we had for US-China trade and that caused the Chinese markets, etc., to outperform now are getting hit with this virus. And travel, of course, business activity, everything is going to take a little bit of a hit. But, we've seen these markets go through so many of these viruses, SARS and so many other ones. And, at some point, if the fundamentals are good, then it becomes a buying opportunity. But at the moment, I think it's probably all going to be more favorable for India relative to the others.
Purita, just a word in the market context as well, because, budget aside, and historically, the data shows you that budget and markets don't have much of a correlation, and the market has been at best on an average just very flat on budget day. But besides that, just the market context in terms of the kind of broader market recovery that one has seen play out month to date, the fact that you've got the mid and the small cap index hold up by about 5 to 6% and the Nifty has actually receded. Do you think this re-emergence is here to stay, or do you think the budget as an event will have a bearing on whether the broader markets continue the recovery mode?
Well, if the budget is positive for the markets, then I think the mid caps and small caps will continue to outperform. You know, in my, I think a few months ago when I interviewed with you, I said that the mid caps and small caps is where the value was and they were likely to outperform. And so if the budget is positive, I still think there is value in the mid and small cap space. And that's where I think the likely benefit will come for investors. So I would say that theme, of course, if the budget is not received well and the coronavirus, comes to India as well and spreads and, all the negative things happen, then of course the large caps become a safe haven relative to the mid and small caps. But if there's any growth orientation that comes out today, I would be more in the mid and small cap.
Puneeta, just in terms of the market texture as well, given the broader market recovery play out, one has seen that there is consolidation play out across all sector categories, and it's really the market leader which is only strengthening further. The weaker ones are really completely getting shaken out. Do you think that's a trend as well which is here to stay before we actually see a more across the board, broader recovery where just about every and any stock within the sectors rise? And do you really think that this sector leadership is going to play out for some more time to come, wherein within a sector, the leader is only going to get more and more powerful?
Yes, I think, Aisha, you're right. I think within sectors, the leaders are going to get more powerful for two reasons. One is capital. Companies that have capital are going to be able to grow and leverage the opportunities better. Companies, second, governance. And if the increasing emphasis on ESG governance and a lot of investors having been burnt in mid and small caps and are going to really focus on governance going forward. So the companies with capital and good governance are going to be the ones which will become the leaders and will then hopefully be able to consolidate some of the other companies into their businesses.
Puneeta, we've got Vijay Kedia here in the studio. I don't know if you caught a bit of the song that he had for the finance minister. Would you like to throw some phrase or note, sing a note perhaps, Puneeta?
Cold and a cough. I don't think I can sing. Your viewers are going to run away and your viewership is going to decline. So you don't want me singing.
You know that's such a Delhiite tantrum, Puneeta, abhi nahi, abhi gala kharab hai types. Okay, we'll let you.
Vijay can sing instead of me, and what he said was music to my ears anyway. So
Vijay, one more time on popular demand. Come on.
Okay, for Puneeta ma'am.
Yes, for Puneeta.
कहना है आज एफएम से पहली बार हो डिविडेंड पे टैक्स लगाती हो मैडम जाने क्यों बार बार लॉन्ग टर्म पे जब से टैक्स है तब से डूब गया बाजार.
Yeah, applause all the way. It's already gone viral, Vijay, on social media sites. But Puneeta, before we let you go, what's the expectation on LTCG and DDT?
It's one is speculating. It's going to be only in an hour. You'll find out. So whatever anyone says is really throwing darts. But I think there's been enough demand from the market participants to cut rates. Tax rates. Now, whether that's personal tax rate, whether that's long-term gains or dividend, I don't know which one will happen, but I think there'll be some benefit to boost demand and some opportunities for wealth creation in the markets because the government does need to divest. And so they will like to see markets buoyant. So based on that, who knows what they'll cut, but I think they might.
All right, Puneeta, thanks so much for joining us this Saturday morning ahead of the budget, and let's see what's in store, as you said.
Friday night for her.
Friday night for her, yes. Yeah. All right. So Vijay, let's get your sense. Mood ठीक रहेगा कि नहीं आज?
Depend करता है कि let me tell you the market is light so far. Technical is concerned in the market. I don't think market is heavy with the position. So mood is very light in the market and people are confused. Although we expect a lot of things, everybody is expecting everything to come, but it is not possible. As I said earlier, you know, it is like you can please some of the people all of the times, or you can please all of the people some of the times, but you cannot please all of the people all the times.
So what will be the most important?
To me, most important is not dividend distribution tax or long-term capital gain tax. To me, as an investor, as a small investor, it's very important how do they revive the sentiments of the people. Yeah. To me, that is very important. Forget about it.
Yeah.
That is very important. Because stock market is not, country. What is good for the economy is good for the stock market. What is good for the economy is good for India. So my focus would be that how do they revive the economy and how do they revive the sentiment. The sentiment is weakening day by day. Earlier it was weakening because of the economy, now because of all these protests and all. So let us see even after the budget, let us see that how does this government handle all these situations. That is more important.
Sure. Vijay, do you also think, the messaging in terms of whether, the thought is to tax the rich, give to the poor is also important from a market perspective? Because, many are wondering whether or not there's going to be an inheritance tax on the super rich. Is that critical at all from a market sentiment point of view?
Asking me?
Yeah.
You see, I will give you an answer like this. You can certainly tax the super rich, but how does it matter? Until unless a lot of people are brought into the tax net, your economy will not solve your problem. So I would certainly like to see on this subject also that how do they bring more and more people into the tax net. That will actually revive your sentiment or your economy.
So we were hearing about these possible measures to start taxing online transactions, for example, really trying to widen the tax net and find alternative ways, to look at widening the tax net, so to say. Do you think some of these measures will have the desired impact, and won't they then kill sentiment on the other hand?
You see, I'm not, eligible to answer these questions, but I have one thing in my mind. Why don't they tax agriculture also? They should make some benchmark. Okay, the small farmers or having a 1 acre of land, or I don't know what that government should decide. Agriculture should also be taxed because a lot of black money is coming into the market or generated from agriculture only. So even agriculture should also be taxed.
Wouldn't that be a politically disastrous move, though?
Either you repair the economy or keep your political thing in focus. That depends on the government. But I think this government is adamant, so they are ready to take bold steps. So let us see if it does not happen this time. Sooner or later, they should think about it. They are the best to decide.
Okay. Well, we've had a whole lot of out-of-the-box ideas as we've been counting down to this budget. Whether it be from Vijay, from Swami, in terms of some of the unusual things that she can perhaps do. But let's also go across and listen in to a conversation with Madhu Kela on expectations this time around.
I think, as we are seeing, budgets are becoming less and less relevant because throughout the year, there is something or the other which the government has been doing from an economic perspective. So one important thing which I would like to talk, Nikunj, because there is a lot of debate which is going on as to why the economy is slowed down 4%, 4.5%, 5%. People are giving any number. So in my mind, what is less appreciated fact is the flow of credit into the economy. And this NBFC and HFC sector and some aggressive private banks like Yes Bank and other private sector banks and mutual fund all put together were putting in a lot of debt money into sectors which were really in need of that kind of money. So if you look at year-on-year basis, these numbers, pre-ILFS, what the number was, what was the growth which happened pre-ILFS year after year. So incremental growth from the NBFC sector was anywhere between 2.5 lakh crore rupees. So then you will be able to appreciate why the economy is slowing down. It is roughly 2 to 3% of the GDP which would have gone as a credit in the markets is not going. The other thing, you may make an argument that on an aggregate basis, the situation is not that bad. Yes, it may not be that bad, but Bajaj Finance is financing people for 6-9 months and they are doing consumer loans, while the need of the hour is developer loan or need of the hour is the industry loan, which impacts the economy much greater than what the loan of Bajaj Finance can do for the economy as a whole. So I am saying, whether it is today's event or whether after 2 months, this is one single most thing which personally I would like to focus, how that confidence is coming back and how the credit flow is improving into sectors where it is important.
Fair point. Okay.
Again, if you, I just add one more thing. You had a big tax, fantastic reform, very, very good. But it has gone to whom? It has gone to companies which did not need that kind of money. It has not gone to people or sectors where there is need is there. So that will do good, but it will do its own kind of good. But it is not stopping the bad on the state sectors.
Okay. Now let's address all the factors one by one. First, there is one caffeine and then there is green tea. I say caffeine is immediate relief, green tea is something which is structural and detoxes you.
Sure.
So in this budget, what should be that caffeine shot which will, take the economy higher? And what do you think should be the green tea approach where you can detox and clean the system and make some structural changes?
So Nikunj, what informally I also learned, the government is being very proactive. What I learned from my corporate friends, that a lot of industrialists have met Prime Minister himself and he has met a number of people. So there is a clear-cut recognition, and you and I know by our 30-year experience that the only way to solve problem is focus on growth. Because if you have growth, then a lot of these factors will get marginalized, what we are talking of today. Now, how do you build the growth? So as I tell, what I would like to watch in this budget, what is it which you are doing to boost up the confidence? Because see, it is such a paradox that 4 lakh crore rupees is being parked with the government, by the banks, with RBI, and there is no taker for that. And on the other hand, you have stress for companies that they cannot borrow. So the sector which need the liquidity, the entrepreneurs where liquidity is needed, even though they may also have, their credit rating might be questionable, but they have enough security to give, but they are not getting the money. So I would like to watch what is it which the government will do in this budget to boost up that confidence so that people are once again willing to borrow money and put up the capex, spend money for productive purposes. So that is one single most thing. Can we be convinced that this is going that? So then typically in a budget you watch what will be fiscal deficit number. So I think this time, at least from a capital market perspective, people have more or less reconciled that whether the number is, it can't be 3.3. Even by arithmetic, it can't be 3.3 because you are assuming 2.11 lakh crore rupees of economy and actual economy is only 2.04 lakhs. So only by the arithmetic that will go to 3.45 for last year. Then there will be some addition. So whether it is 3.7, 8 or 9, I don't think market will be perturbed. Now next year number, whatever you say, people will definitely want to see the arithmetic of how that number is arrived at. So I am watching for two things. One, what happens to telecom provisions for the next year. Second, the government got 1.75 lakh crores from RBI this year. What happens to that number? What is the assumption which you are going to take on that number? And third, what are your growth broad assumption? I think we have seen in the NDA government, in Modi ji's regime, even in Gujarat, I do not think they will go absolute haywire as far as fiscal is concerned. So that will be under the check. So that's the second thing which you watch in the budget. Third, from a capital market perspective, which is most important, I think market is watching for three things. One, what happens to dividend distribution tax? Now again, there is a lot of talk that dividend distribution tax from the company may be removed and it will be taxed to individuals. But if it is taxed at a real rate, then it may not be that positive. But if that taxation is curtailed for individuals, what it is today, which is like 14% maximum dividend tax, then it will be quite positive for the market. Second, if you remove dividend distribution tax, do you also do away with the buyback tax? So that's the second point. Third, what happens to our favorite topic of long-term capital gains? So I think these are the three things which people are watching from a capital market perspective.
Okay, that's the word coming in from Madhusudan Kela on what the markets want from the budget. By the way, the markets have started on a very quiet and somber note. Remember, we had a weak handover from the Globe overnight. And the markets haven't started off with much enthusement or rather excitement. Just about 11,950 thereabouts. The market breadth as well, pretty split and divided. Given that it's a Saturday, I won't be surprised if the volumes as well would be typically lower than what we clock on a daily average. But remember, this budget day, we've been giving you exclusives after exclusives. We've been telling you about what to expect from the budget. So let's quickly get you a slice of what our reporters on ground have been picking up from North Block. Ruchi Bhatia, my colleague, says that the FY21 disinvestment target is going to be 1.5 lakh crore rupees. And that is what she's picking up in terms of a budget cover. Also, she says that there will be a hike in tax rebate for home loan interest, which is likely. We've all been talking about as to how realty is one sector which has been grappling. Home buyers need the required push, and maybe that's going to come about in this budget, reports Ruchi Bhatia. Also, a US TARP-like mechanism to fix the NBFC stress. Liquidity, remember, has been choked in the system. NBFCs have been grappling with the issue. We've seen many defaulters as well. So seems like a US TARP-like fund could be in the works. Also, good news for manufacturing. It seems timeline extension is likely for some of the new units. That is what the budget cover we're picking up from North Block. My colleague Nayantara Rai reports that there will be a new border adjustment tax, which is also likely in the budget this time around. We've been reporting to you as to what are the kind of taxes that the government plans to slap or hike to try and garner more revenues. How is it they're going to build up their kitty? That is what she's reporting. Something that the markets have been wanting clarity on. DDT may go, no long-term capital gains beyond 3 years. That is Nayantara Rai's exclusive. That's the cover that she's picking up from North Block. Just an hour or so, and we will find out what exactly the government plans to do on DDT and LTCG. That, in the near term, is going to be a big sentiment mover for the equity markets for sure. But we also learned that of the several tax proposals that were considered by Finance Minister Nirmala Sitharaman, one of them is a digital tax of sorts and could be levied on e-commerce companies, aggregators, as well as digital platforms. Nayantara Rai joins in with this exclusive.
The other cover that we have when it comes to Budget 2020 is the Narendra Modi government is very serious about taxing the digital economy. It is a situation where it's looking at new sources of income, so it's looking at the digital economy. Globally, we still don't have a consensus on how this should be done. The OECD is, of course, working on that. India has flirted with the idea. It came out with a draft note as well on this issue, but we never saw the rules to this effect. So, till there's global consensus, the Modi government wants to look at the digital economy. So, you're talking about a tax for digital platforms, e-commerce sites, aggregators. That is the belief. So there are two options that we understand have been discussed by the finance minister. One, like a transaction tax, you have a digital transaction tax. It could also mean that the merchants will then build it up in the price, pass it on to the consumer, but the government will also get the revenue. The second option that was discussed was, why not have a flat rate on the turnover? Not the profits, because a lot of these companies say they don't make profits, but on the turnover. So that's the second idea. But of course, whatever action will be taken, it will be seen as controversial. Yes, the Indian government is trying to raise its own sources of revenue, but big technology companies, a lot of them which are based out of America, look at Uber, Airbnb, Amazon, they will obviously not be happy about it. We had seen something very similar in the past when India had started levying the equalization levy. 6% rate was to curtail advertising. And since then, we have seen the government get revenue from that. So it would be controversial as far as foreign policy goes. It would also include, of course, Facebook, Google, all of that. But the idea is very clear. You've got a robust digital economy. It's only growing. And therefore, the stakeholders must pay tax.
All right, we've got lots more coming up for you. In fact, a star panel that's joining us right after a very quick break. Some of the biggest voices that will help us decode and analyze the upcoming budget, from Sunil Singhania to S. Narain. and Ramdev Agarwal. It really doesn't get bigger than this. The most incisive budget analysis, that's coming up for you in just a couple of moments.
counting down to the budget, just an hour or so, and we'll finally hear out what Nirmala Sitharaman has in her Bhai Khata the second time around. But let's tell you, the star panel, which is going to be joining us, experts who know better than the best as to how to really read into the economy and have tracked budgets for decades now. None other than Swaminathan Iyer, consulting editor 80 Now, along with Maitli Pusnirmat as well. And of course, we've got a star market panel as well. We'll have with us A. Bala, Nilesh Shah from Envision Capital, as well as Vibha Padalkar from HDFC Live to try and dissect the nuances announced in the budget this time around. But back to the studio discussion, just want to monitor what the market as well is up to. Nothing really. We're going into the event very, very quiet, just circling around that 11,955 mark. And the breadth of the market as well as even Stephen, you can't really draw up a trend here. DLF is spiking up quite a fair bit. There's GAIL, which is holding out very well. Indiabulls Housing Finance after the restructuring, which was announced, 2.5% higher there. MGL is looking very good. And there's Amara Raja Batteries, which is actually your big winner today, about a 3.25% uptick coming in here. But yeah, and that's the thing, right? Budgets come and go and the markets remain. And the trend that one is seeing in the market is the re-emergence of the broader markets. The mid and small caps month to date outperforming about 5 to 6%, whereas the Nifty is consolidating now. We've seen already a 1.5% dip come by in the index. Do you think this re-emergence of the broader markets is here to stay? And what can the budget really do to ensure that this recovery stays put?
Market is moving in rotation. Earlier, 2 months back, all the large caps were rising, mainly the index shares and all. Few index shares obviously, and the mid caps was falling, and mid cap has fallen 50 to 80% from their peak. So now I think they are covering up. Now index is static and mid caps are catching up. So, and some of the mid caps are certainly very cheap because they have fallen because of the bad sentiment. So, and maybe the technical position in the stock, because mid cap at large is very illiquid. Even 1 crore worth of selling can destroy the market cap of 100 crore, So I don't think that one should read much into this. Personally, I am thinking there is still value in the mid caps. And if budget is good for the economy, not for the stock market, if it's good for the economy, then there's a lot of potential in the market to make money.
Give us a flavor of the small cap spaces, at least, which are on your radar. Not naming the stocks, but things that you're keeping on your radar from within small caps.
I'm very much focused, let me tell you, because whatever investment I have made in this market, I am focusing on my shares. That does not mean that I am not looking at other shares also. So I am bullish in infrastructure should be the main theme of this budget, because I remember the CA, Mr. Subramaniam, Krishnamurthy Subramanian, every time he's saying this thing that ultimately this growth in India should be led by infrastructure, not by consumption. So later on, I think they changed their mind and they added consumption also into infrastructure. I think this budget will be focused more on infrastructure. So maybe you will find some opportunity there.
All right. Okay. Let's also take a look at some more of the khabar that we're tracking for you when it comes to the budget, and what are some of the other elements of news that we're actually looking out for. This time around, we're of course taking a look at divestment and what they're going to do on that front. And Ruchi, in fact, has been finding some information on what could possibly be announced with regards to budget. The FY21 target is seen at about 1.5 lakh crore, which is the highest ever. So that's, of course, going to be top of mind as well. We're also going to be watching out for a hike in tax rebate for home loan interest rates as well. And will that be something that will be announced in the budget? And we'll get you more on that story. But let's also go across to Nayan for some of the other cover that she has with her.
Dividend distribution tax. There are some changes that are expected if it's not abolished. This is the other cover that we have on ET Now. A lot of people have been talking about it. In fact, the Finance Minister herself, Nirmala Sitharaman, on the floor of Parliament has called it regressive. So while there is one view that it should be abolished, another view is that how can you forego all of that revenue? So tweak it. tweak it so that it is the receiver who pays the dividend distribution tax. It will mean a lower tax incidence. It will also therefore mean that it will be proportionate to your income, it will fall into your personal income tax slabs. But this is being seen as perhaps the way to tweak dividend distribution tax, make it more fair. There have been a lot of calls against DDT, how it doesn't work. And on top of that, when it's about 10 lakhs, there's anyway the super rich tax that does kick in. So let's see if in the budget speech, Nirmala Sitharaman makes changes as far as the dividend distribution tax goes. If they see a change in the dividend distribution tax and the burden falls on the receiver, where will that leave the tax on the buyback? It would only be an educated guess that if you do this, the buyback tax also you should expect some changes. Of course, the markets want nothing more than a tweak on the long-term capital gains tax. That's a big ask. It's been part of various discussions between the Prime Minister's office and the Finance Minister as well. We understand from our sources. So let's see if that definition is changed either at all.
Well, Nilesh Shah of Kotak AMC will also be joining us in moments from now. But if I really have to set the tone of the market right now, well, markets are ignoring what's happening in the world. So what's happening in the world in terms of coronavirus, so far markets have really ignored that. Well, Nilesh Shah will be there on the set in a minute from now. But this budget, frankly, if you have to pick up the moot point is that the economy is in a fragile state. There are limitations on compulsions will perhaps force the finance minister to follow a disciplined approach. While markets may be excited if there is a compromise on the fiscal deficit, frankly my sense is that anything large and anything meaningful on the fiscal deficit side is not going to be there. So the most important talking point really could be that what happens to the direct DDT, dividend distribution tax. That tax is right now tax at the hand of the currently at the corporate. Will that be hand at the tax of receiver? So Nilesh Shah joins us now. Nilesh, good morning. Thank you for joining us.
Good morning.
You're supporting saffron colors?
This is not saffron. This is just a normal Indian jacket.
What's the moot point? Are we in for a big budget or compulsions will take over?
There is a need for a big budget. Growth has slowed down, so budget must support the growth. Investment is on back foot, so budget must support investment. Even sentiments are subdued, so budget must support sentiments. This is like, Rohit Sharma or Shardul Thakur going for that slog over. Yes, there is a challenge, but if we go with a positive mindset, we can deliver.
The challenge with the slog over is that you can get a 6 or you can get out.
It doesn't matter. In the second match, we lost 1 wicket and yet we won.
Okay, so I'm going to bring up dividend distribution tax. Markets are secretly hoping, some are praying that direct DDT, dividend distribution tax should move away from corporates to the hand of the receiver, which is in simple terminology from the company to the one who received that. What happens if this change comes through?
So why is this change needed? Because there is very high cost of capital. You want 100 rupee, you pay 35% by way of taxes. Now with new tax rate it may come down, but previously it was that with surcharge and everything else. Then you distribute, you put another 22% on it. Then when individual receives it, if it's above 10 lakh rupee, you pay 10% on it. With this kind of massive cost of capital, there was no money left for reinvestment. So at least by removing DDT from corporate to an individual, or from a company to a shareholder, we will ensure that the companies which want to make reinvestment will have their freedom. We must lower cost of capital so that investment revives, and we not only should lower the cost of capital in equity but also in MES and also in fixed income or debt.
Okay. So from a market terminology, if there is a tweaking in dividend distribution tax from the hand of the company stroke corporate to the receiver, do you think it's going to be a big re-rating moment for companies which have a strong dividend payout ratio, IT, to a large extent PSUs, names like BSC, because these companies pay a lot of dividend?
Definitely. We think as the taxation burden shifts,
come up on a screen, which are the companies which pay
as taxation burden shifts, the companies which are paying higher dividend will definitely get re-rated.
What would derate the market?
If this is not a pro-growth budget, if this budget fails to revive investment, if this budget fails to satisfy the expectations of the market on taxation, then certainly the markets could get derated. And there are real fears also. Yesterday we saw Dow Jones correct significantly. Coronavirus is there, but in that risk there is opportunity. Today world is issuing advisory not to go to China. Let's present a budget where the world gives an advisory, please go and visit India.
So I'm going to go back to that list of stocks once again, companies which pay a high dividend payout. So really on the other part of the screen, you can see companies which currently have a high dividend payout. We are not looking at percentage because the percentage really changes. I also want to look at how markets have moved in last 1 month. That graphic will just come up on your wall, and then I'll come to Nilesh to establish that are markets really approaching the budget with high expectations or with low expectations. So Nilesh, while that graphic is getting ready, small and mid cap stocks in the month of Jan, they have rallied. Large cap stocks have not rallied. What does that tell you about the market positioning?
So one, there was a wide valuation gap between small and mid cap and large cap. Before the small and mid cap rally began, 15 large caps were up 40% from Jan 18. 35 large caps were down 10% or 11%. But the mid caps were down 20% and small caps were down 40%. That plus 40 to minus 40% range had to narrow down someday. That reversal happened over last 6 months, but it got accentuated in the month of Jan, where small cap ran by almost 8%. Now we have 6 months of outperformance or positive return in small cap vis-a-vis large cap. At some point of time there will be consolidation, but if you take a longer term view, I think there is still juice in small and mid cap from a valuation point of view vis-a-vis large cap.
Nilesh, one easy way to give a caffeine shot to the economy is that you start spending more, but that's like a caffeine shot. That shot will have a limited impact in creating energy. The other way is that have the green tea approach, which is that you look at longer term detox, right? Between green tea and caffeine, I always choose a coffee in the morning. But do you think the finance minister should not compromise on the fiscal discipline, because this entire fiscal discipline what we currently have right now has come the hard way?
So your analogy is very, very good. We have already done green tea approach to economy. By pursuing path of fiscal prudence, it was green tea. By controlling inflation from double digit to lower single digit, it was green tea. By removing chronic capitalism and exposing NPAs and providing for it, it was green tea. By plugging loopholes in subsidies, again it was green tea. By improving tax compliance, again it was green tea. So there is already green tea given to the economy, but now economy needs a caffeine shot. Now there are two ways of creating this. One, having a decaf, or second, having a non-decaf. I will approach decaf mode. So it gives you caffeine, but it does not give you side effect. How do we achieve it? Government has lots of assets. They should think of monetizing it. I'll give you a small example. In 1960s, we created Custodian of Enemy Property Act to take over assets of people who had migrated to Pakistan. For almost now 6 decades, we haven't done anything with it. Why don't we monetize it? There are more than 9,000 properties whose market value could be about 100,000 crore. This is the time to monetize your assets which are lying unproductive, which are encroached into economy on a productive basis. So you get your caffeine shot without the side effect of caffeine.
Great point. So let's look at what we've managed to achieve in disinvestment so far. The number what was projected earlier this year in terms of a budget, I think we are going to be nowhere close to that disinvestment number. And which are the large blocks which could be used by the finance minister in her assumption for next year's disinvestment target. Now that's the finance minister, she's reached the parliament, but let's zoom in on this graphic. Now this is the block, Nilesh. BPCL, Sooty Stake, Air India, I don't know what happens there, but BPCL, Sooty Stake and SCI, these three are given.
So let me take a step back. Over last 5 years, between 2015 to 2019, government raised $45 billion by divesting various companies in markets, ETFs and so on and so forth. But the same government had to provide $45 billion for recapitalization of PSU Bank. So from a government's point of view, there was no net divestment. They raised $45 billion, they invested $45 billion. In the budget terms, when you raise money, it is income. When you invest, it is not an expenditure, so it's a separate matter. But in reality, economy never benefited from the actual divestment which it should have happened. Point number 2, when you do a piecemeal divestment, you don't get fair price. When you do strategic divestment, you get control premium. The government earned more money in selling 1% of Maruti Suzuki to Suzuki than larger stake to Suzuki because it was going with control premium. So we must move from this market-led piecemeal divestment to strategic divestment, which gives us better value for our assets.
Company lock, stock and barrel, and that will give you more money. Okay.
Managerial control.
Great point. Let's take a break for the moment, but you have to get warmed up. The Finance Minister has reached the Parliament. In a little bit in few moments from now, the Cabinet will first approve the budget, and then the budget would be tabled on the floor of the Parliament. So we are now less than 2 hours away, and then the Finance Minister, she will rise on the floor of the Parliament, argue and perhaps or arguably present the most important budget of the current government. Given the economic backdrop, does she have a magic wand or she has a secret sauce? Well, something needs to be done differently and thought differently in order to take us out from this slumber.
Just counting down to the budget, less than an hour to go, and we will hear out from the Finance Minister what she has up her sleeve this Saturday. We saw her take that red Bahi Khata out. Let's see what it entails for all of us. Just a quick check on the markets before I go across to our think tank panelists. Absolutely flat, just no movement at all. Remember, we've had a weak handover from the globe. The coronavirus fears clearly playing out for the equity markets, but our markets are completely choosing to ignore all of that. We've gone absolutely flat into the budget event, less than an hour. The breath as well is in somewhat of a recovery mode. You've got Unilever, which is holding out very smartly, GAIL, BPCL, all eyes on disinvestment, what the roadmap is going to be, and BPCL holds up by about 1% ahead of the budget speed. You've got SBI, Ultratech Cement, Bajaj Finance, a lot of these consumption, economy-related themes which are actually holding up in the market, and the big boy, L&T as well, going strong into the budget announcement, about 0.4% move. It's good to see names like Maruti, ITC all come back to the fore. Nikunj as well joins me in the studio. Nikunj, I'm wondering if the market has hopes high.
Asha, look, the market positioning I think is very interesting. I've never seen such a divided market, which is that large cap stocks have been in this slumber mode. You could blame it on coronavirus, unfortunate but true. You can talk about global liquidity waning away because what's happening to interest rates. But small and mid-cap stocks are, in this adrenaline rush of their own. So you have a very different market. And when I say different, the smart guys which are responsible or which normally invest in the bank nifty or the nifty, they say, look, we don't expect anything from this budget. The trader on the street is saying this budget is going to be different, it's going to be special, it's going to be path-breaking. So one particular genre of the market, whether the large cap investors or the small cap investors, one of them would be in for a surprise. I hope everybody gets it right. The best budget is that you do no harm. You change this entire attitude. If tax hikes have dominated the last budget's headline, let's hope that this time around tax cuts will dominate the headline. Swami joins us now. Swami, good morning. Thank you for joining us. Markets always expect the moon from the finance minister. But given what the reality is, do you think we should not expect more than a half-baked cake?
I would not be surprised that if she has some good news. I would not be surprised. In the world where there is such a huge gap between the maximum income tax rate of 42% and a corporate tax of 15%. I mean, that is an open invitation for everybody to shift his money from personal account to corporate account. I mean, that kind of gap is unsustainable. So, without going into the details of the current situation, that gap is so large, I think there is a good chance that it will be brought down purely on those technical grounds. It will of course be shown by Nirmala Sitharaman as being a great gift to the nation, to which we must all be grateful, and the stock markets will be very grateful for that if it indeed happens. I think there's a reasonable chance of that happening. I don't think there's very much chance of anything else on the long-term capital gains tax. Dividend tax, possibly it can be shifted entirely to personal account instead of being on company account. That too, I think the market will welcome, because it means that earnings per share go up. So yes, I think there is a chance that the market can find something in the budget with which it will be quite happy.
Actually, the stock markets, as we all know, is a very short-sighted beast. But this time around, things seem to be a little more different than that. What do you think the finance minister is going to choose to do? Is it going to be more short-term consumption-boosting measures, or is it going to be more structural reforms which will get growth back into the economy? It may take longer, but it will happen for sure.
No, I think she will take the advice of her CEA, Subramaniam, yesterday, that the spending has to be on investment. Consumption, you can only push, you can nudge, but it's not necessary that people will increase their consumption. Whereas when the government invests, and particularly when it invests in employment creation areas like road building, like bridges, like railways, that's where you create assets. At the same time, you also give income in the hands of people and the class of people who are going to spend. So clearly, I think there is a very strong case for her to ease the fiscal deficit. This year, it's a given. It's just happened, partly because the GDP itself has become smaller, and partly because government hasn't got the revenues. But I do hope she continues next year, because I've never been a fiscal zealot. I just don't understand the sanctity of this 3 or 3.3% which we've plucked out of thin air. When the economy is slowing, of course, the numbers now show it's not so bad. It's 5.7, not 5%. So that itself should be a note of cheer for her as she goes in to present the budget. Today, mind you, in a saffron sari.
Oh yeah, I was wondering whether that's suggestive or not, but we'll skip that for an off-cam discussion perhaps. Mr. Gopalan, good morning. Is it a given then that we'll have income tax across slabs come down, or was it going to be specific for the 5 to 10 lakh range?
I don't think they have the ability to reduce rates so much. But as Swami says, I have a feeling that, there is a possibility that the higher level income tax, they can tinker a little bit, and a lower level also there is a possibility to, if we improve the ability of the people to spend, obviously at that level there needs to be some amount of slab shifting which is likely to take place. But at the higher level, those abominable surcharges and those kind of things which certainly will have to go. But how much that slab can be brought down at this point in time in view of the fiscal constraints is a question. But once again, but if they go through the entire DTC's recommendations, then probably there could be some shift, but that requires a lot of other things, including slashing exemptions and those kind of things. So that is one thing which we need to look at, how DTC is taken on board at this point in time. Thirdly, there is a need to improve home, buying of property, flats. That's one way of investing, people investing in the assets. Now that can be done through some exemptions or some inclusion of the loan repayment and interest repayment in the deductions that can come about, and those kind of things would also be watched in the how the IT's income tax is going to work on these issues. So it's going to be a mix of a lot of things, but I can't say offhand that, well, yes, there is going to be a slash in the rates.
Budget buzz, and this is completely source based, unconfirmed. What we understand is that first time a new tax is going to be introduced. Now you may call it a digital tax, you may call it a transaction tax, but there is a chance and there is a scope that this time around a new tax could be introduced on digital platforms or aggregators. Like Amazon is an aggregator, Flipkart is an aggregator, Swiggy is an aggregator. Swami, that's where the growth is. That's where some would argue that digital companies, since they are aggregate loss making, they don't pay too much of taxes. Do you think there could be very limited objection if a new tax like a digital tax is introduced? It's high time we start taxing the growth, which is the digital growth in the economy.
I once wrote a piece saying you need to do this, but specifically for companies that are escaping tax, because most of it is coming from some kind of IPR which is located in an offshore location. This has been a huge matter of contention in Europe, and France has already levied a tax on companies like Facebook, Google and so on. But it's one thing to levy it on Facebook and Google, it's another thing to levy it on all companies. After all, there are a very large number of companies that are showing a loss, not because they have shifted the profit to some other headquarters, because they are in trouble. And if those guys are asked to pay an additional tax, it's another way of saying, I am going to kill you. So you need to make the distinction. And the question is, can you carefully enough pencil out these guys whom you want to act against? Second, please just see what Trump has done to France. He has said, if you are going to put this tax, I am going to put all these taxes on your champagne and on your cheeses. Do we want to be hit with a similar thing? Do we want to stand up with France and be shot down by Mr. Trump at this point of time? Maybe Mr. Macron can stand up to it. We are in a somewhat weaker position. So if we move in this direction, it should be very circumspect. I would say we need to move along with the OECD. So you'll put Mr. Macron and others in front of us and march behind them, rather than go out in front and say, kill me.
It's a very interesting trivia which we have this time on how many languages did Nirmala Sitharaman in a maiden budget she referred to. And Maithili, it's a difficult one, but it's a budget trivia nevertheless. How many languages do you think she used in her last budget?
That's a tricky one.
She used English, Hindi, Urdu and Tamil. And I think a little bit of Kannada because she quoted from Basveshwaraya.
Yes.
So maybe a total of 5.
1, 2, 3, 4, 5 or 6. What's your guess? 4, 5 or 6. What's your guess?
My guess is 5.
Swami?
Swami? I would say that, desperation to get away from the dismal finances into other issues where she will be on more comfortable ground. Then we will talk about the color of the sari and we will talk about, the budget papers brought in a red cloth or in a red file. I mean, these are desperate ways of getting...
But Swami, yesterday you were very happy that the survey was not colored saffron. You said, thank God it's lavender and not saffron. So Nirmala's made up for that today. But I've come in green. So maybe it's, we kind of counter each other.
Only one Maithili who's wearing green. We are supporting the bull. Saturday we are at work and markets are open. I was waiting for somebody to walk into at least supporting the market colors. Nobody's thinking about the market colors this Saturday morning.
No, but Nikunj, we've already increased the GDP magically from 5% to 5.7. What more can the market want? This is magic, market magic.
Absolutely. But I think markets will be looking at the fiscal math, Maithili, with a magnifying glass. What numbers do they arrive at and how do they arrive them for FY20 as well as FY21? What do you think is going to be done to the disinvestment target and how exactly would she plan to arrive at those numbers?
Ironically, even though there's been so much criticism over the lack of transparency, and I do agree, there's a lot of smoke and mirrors, a lot of fudging. But if you look at the December numbers, ironically, you will find that the government has actually borrowed more. The interest cost is much less because interest rates have fallen. So this really is the magic about macroeconomics. It's not a one-to-one relationship. So even though your fiscal deficit may not be accepted, may have, people have doubtful credibility, you have borrowed more, but your interest cost, in fact, one of the substantial savings this year, surprisingly enough, is your interest payments. So clearly, I think bond markets will accept a higher fiscal deficit, provided, as I said, the quality of that fiscal deficit is substantially different from what it was before. If you look at the primary deficit figures, which the CG has released yesterday for December, it's over 1,000% of the budget estimates. So that is what you need to create. Your revenue deficit is also much higher. So as long as your fiscal deficit is the right quality, and this fiscal deficit goes towards propping up growth, so that next year you have higher revenue, I think the markets will forget and they will forgive.
Just wanted to get a sense from you as to what exactly, and I recall chatting with you offline yesterday as well about that. You've been against the idea of fiscal expansion per se, and you've time and again written about that as well. What do you think the government should do or the finance minister should do to be able to boost expenditure then? I mean, it's a situation of, many a slip between the cup and the lip kind of tightrope walk situation that she's in this time around.
To me, because I've always been in favor of easing the fiscal deficit. I've not been a fiscal fundamentalist at all. In fact, this has been my position for the past 3 years because the slowdown in the economy was very marked. For the past 3 years itself, in fact, my grouse with Mr. Jaitley was whether the numbers that Chidambaram gave were clearly a fudge. And he ironically opted to stick to the roadmap which Jaitley gave. That was an opportunity at that time itself for him to set the economy on the right track. So I have not been a votary of sticking to the fiscal deficit. I've always been particular about the quality of the fiscal deficit. And look at the FRBM. The original target was 2008. We were supposed to get to 3%. Where 2019, we're nowhere near that 3%. And the Indian economy has done fairly well, thank you. So fiscal deficits per se do not either ensure growth, nor do they condemn an economy. But when there is no other investment happening, government has to necessarily step in. And this has been the case across the world. Counter-cyclical fiscal and monetary policy, but with not going overboard. And you need to withdraw the stimulus once the economy picks up. We made the mistake of not doing that in the past. RBI has done more than its job. Now the ball is in the government's court.
Actually, my question was to Swami. If you can just take my question to him.
I thought... Yeah, Swami, please.
Sorry, this is the question of where is the space for fiscal expansion, right?
Yes, that's right.
The thing most people will recommend is why don't you go on a more aggressive way of asset sales? Everybody agrees this is to be done. But as I said, past experience shows that each ministry seems to take so long on working out what is the objection from Mr. A, B, and C, and what will Mr. Trump say, and what will the Swadeshi Jagran Manch say, and then what will the market say. I mean, it goes on and on. So we need to get a template of saying we need to get these political and other issues out of the way. The moment the green signal is given, there is a template on which within 4 months you go from point 1, 2, 3, 4, and in 4 months it's out. And secondly, you need to start working on disinvestment from the day after the budget, instead of waiting till half the year has gone and suddenly finding, oh my gosh, no disinvestment so far, and let me try and do it by the end of the year. So one is disinvestment, which can go up. And yet I would say there are limits. There are not that many high quality public sector undertakings that you want to disinvest and that would be available. There are two other areas I've always recommended. Number one, for heaven's sake, legalize betting on cricket and put the 28% tax on it. I mean, why are you not doing it? It's an activity that is going on. You cannot stop it. All that you say is that how terrible, how terrible. Instead of saying how terrible as you were saying about liquor or cigarettes, please legalize it, tax it, collect the revenue from it and use it appropriately. The other one I've always said is, again and again, you'll find the finance minister will increase the duty on cigarettes and say this is bad for health, this has to go up. Yes, but then what about bidis? Everybody knows that bidis are just as cancerous as cigarettes. You don't raise it because there are so many vested interests and they say, oh, there are so many people employed in the industry. Well, you know, if you want to employ people to kill other people, there are other ways of doing it. You don't have to do it via bidis. There are many ways of doing it. So I would say if you go and equate the price of bidis and cigarettes on a program over 4 or 5 years, it can't be done overnight. You can again get, there are estimates of up to 2% of GDP you can get from something like this. So I said, these are low-hanging fruit. If you legalize betting on cricket, equate the tax on bidis and cigarettes, that itself can get you so much money that, you know, you can afford to double your PM Kisan and various other things.
Up with the most creative, out-of-the-box ideas. Here, Finance Minister. While we do that and analyze more on how these out-of-the-box ideas are going to work, we'll take a very quick break, just minutes to the Finance Minister's speech. We'll take a short break, come right back.
All right, in less than half an hour, Nirmala Sitharaman, she would stand on the floor of the parliament and present her second budget. And arguably this will be the most crucial budget of the current government, given that there are compulsions which are at play and expectations are running high. When I say expectations are running high, I'm simply talking about markets and what market men are betting on. The general view is that if last time around tax hikes, they dominated the budget headline, this time it really is going to be tax cuts. From a market standpoint, there are two taxes which are going to be of immense importance. Should the definition of LTCG be changed, and the way dividend distribution tax is distributed or taxed, should that come to the hand of receiver? That's something which is going to be, these are two things which are going to be very, very crucial from a market standpoint. Umang Vora also joins us. I think he's ready. We can connect with him. He's Managing Director and CEO with Cipla. Umang, good morning. Thank you for joining us. So Umang, on the dividend distribution tax, a tax which is going to change life for individuals and corporates, do you think there is a relief coming?
So let me begin by saying, I think the government's going to look at various measures. I hope that there is some relief coming on the taxes. But broadly, I think the three themes that we are looking forward to in the budget, much away from tax, etc., is really the theme of consumption, is the theme of employment, number two, and the theme of competitiveness. So we're looking at this budget from three areas with respects to the pharmaceutical and consumer sectors. So I think if the dividend tax becomes simplified, better for people, it's more cash available for them. But those are the three big themes we're looking for. What drives consumption, what drives employment, and what's going to drive competitiveness.
I want to also, bring an important teaser to for our viewers that in moments from now we'll also tell you what exactly is Rakesh Jhunjhunwala's view on the market is, and where exactly he feels markets currently are, and if the budget delivers, how much of a good news or a good scenario is in the price. Let me turn to my right, literally on my right. Vibha joins us now. Vibha, first the big picture. Good day, bad day, worth coming on a Saturday television studio, are we in for a good budget?
Absolutely. I think have a very good feeling about this, and I think we have to make best of what we get, and focus is on industry to buckle up, and so we maybe maximum Sunday that's about it. Monday we are back in the saddle, back in business.
No divine intervention. The growth is good. Things are looking up. You don't need capital. So from a budget standpoint, accepting DTT, the insurance industry should not have any specific demand.
It's not demand to fix things, but it's in terms of opportunity. And there, I do believe very fervently that the opportunity in the retirement and pension space, that's one. And second is in the protection space. A lot of positive signals can be done even with a relatively small gesture, like a 50,000, similar to an ATCCD, what NPS enjoys, similar to that in the pension that is sold by the insurance companies, because the scale is very, very much different. As well as protection, because people are now beginning to become aware of protection. So even a small carve out, all of us Indians love to take advantage of even if it's a small kind of a exemption or a slab, and it's more indicative than anything else.
Okay. Shefali, budget is all about taxes, 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 and taxes. Unfortunately, in last couple of budgets, we've started using the phrase more taxes, and higher taxes. Do you think tomorrow morning when Swami will write his budget piece in the Economic Times, he will say more taxes or less taxes? What should he write? And what do you think he will write?
Sorry, he already made his statement, right? He said that on the corporate tax side, the rates have been dipping, whereas on the personal tax side, the rates have been increasing. And somewhere we need to find that bridge to narrow the gap. I think globally we are on the right track because the corporate taxes worldwide are going down, and India has done well on it. I think we are at 22%, which is pretty consistent. On the personal taxes, we are on the higher side, but generally the grief has been that we don't have that much of social security, healthcare system, and therefore there is a need to moderate those taxes down.
Shefali, I'll tell you what, there's a bit of an audio issue there. When it comes to taxes, all of us had bit of a audio issue when the taxes were increased. So I'm going to go back to Umang and talk about, Umang, the another caffeine shot which the economy needs is to drive consumption. In your mind, what should be the approach? The caffeine shot approach, revive the economy, kickstart the consumption in the short term, or do you think the finance minister should just keep it simple, have more like a green tea approach where the economy is getting detoxed and let it cleanse?
No, I think there has to be some fiscal stimulus given, and I think the government's already made a fair number of moves to do that. I would strongly urge the government to actually up healthcare spending. In my opinion, you can't be wealthy if you're not healthy. I think it's pretty clear the government's already allocated 12,000 crore. We should not underestimate that what this 12,000 crore does for the ABPMJ, because it allows out-of-pocket expenditure in the rural pockets and people where they're constrained for spending on medical to be available for consumption in other areas. So I would urge that the spending goes up there. That's one way of transferring money to sections of the society if you cover them medically. That's one lever to increase consumption. I think more fiscal stimulus is needed around innovation. Jobs is an issue, and I think we need to reskill. We need to get more patent-friendly regimes in our country. And the third one is really policy certainty. I think we've had a period where we've had lots of initiatives being rolled out. Maybe just more policy certainty allows corporates like us and allows other small businesses to have a view of the future. So I would just urge this. I think India is a growing economy. We can't underestimate our potential, and just some certainty and some selective transfers through fiscal stimulus in schemes like...
All right, now, Aisha's at the ball, and she's with Puneet Chatwal, the man who runs the biggest hotel industry or the hotels of India. And Aisha, Saturday, long weekend, you have the right guy on the budget to get a sense on how to plan the long weekends also.
Yeah, but I'm not at a fancy Taj property. I'm right here in the studio, Nikunj. But yes, anyway, who better than Puneet Chatwal? Puneet, let's walk to the wall and really figure out, given the consumption slowdown, you must have felt the maximum heat, but surprisingly not. You've been one of those resilient ones. For the past 3 quarters, IHCL numbers have not really been impacted by the slowdown.
Well, I think the management has done a good job in navigating through tough times, and we are very pleased with the performance. Actually, not for 3. It's the 7th consecutive quarter of margin expansion, of growth and profitability, and the outlook also remains positive.
Yeah, but having said that, given the slowdown that one has seen, are you getting the feelers from your clients, from the people around who come to your hotels, that the sentiment has really been dampened? People are not willing to spend as much.
The sentiment has not been good, but when you have a diversified brandscape like we have, something keeps happening somewhere. So with the outburst of coronavirus, we had challenges in Maldives and Sri Lanka, which have had a lot of cancellations. But at the same time, London this year has done very well for us. It does well every year, but this year we also had the World Cup cricket. So we got the extra boost for a couple of months, and now we have coronavirus. But also the domestic markets have been quite strong. I think Mumbai has been strong, Delhi has been strong. Goa was not as strong in growth, but it's at the highest level in the country. Bangalore is strong. So, and we have a lot of hotels in these metros. So I think that has helped us deliver a good performance.
But tell me, what can the budget really do to address your industry and help really lift the sentiment and thereby benefit your industry as well?
I think it is high time. India stands at an inflection point. It has a lot of young population. There is no better multiplicator of jobs than tourism business. So I think tourism helps to create tolerance. Tourism helps to create awareness. Tourism helps to create GDP growth. Tourism helps to create jobs. So I think India is definitely ready to, give a little more importance to tourism. The government did a good job by reducing the GST a few months ago, but I think there is much more that can be done to boost private sector investments by creating, more friendly terms when we are looking for private investment for properties and spiritual destinations, in religious destinations, building the best convention centers in the in key cities, so you can attract global conventions happening in India. So we need those 1,000 room hotels. We need conventions for up to 2,000 people. We don't have any of that today.
So
I think
overall sentiment recovery is what your industry really needs.
Yeah.
Now tell me, which is the next celebrity wedding happening? Which of your properties? After Nick Jonas, Priyanka Chopra, who's getting married next? You must be having all the goss.
well, even if I had, I'm not supposed to say that on television.
Okay.
But,
so I'll hand it back to Nikunj and then you tell me.
Yes, that is.
Okay.
That
No,
Nikunj,
Aisha,
back to you. in
Aisha,
the
you can
studio.
stay with him as long as you get the gossip out. It's okay, I'll wait.
Okay, Nikunj wants the gossip.
Nikunj wants
As
to
well.
gossip, not sure, Nikunj.
Pre-booking inquiries kiski aayi hain?
No. We can't say that, but we look forward to as many celebrity weddings as possible. We have enhanced our portfolio in Udaipur by adding Fateh Prakash Palace to the Lake Palace. And also those weddings can take place in Jagmandir, catered by Taj. The Umaid Bhavan Palace is still there. Those who have not explored the Falaknuma in Hyderabad, it's high time you do that now. And nothing to beat the Jai Mahal and the Rambagh in Jaipur. So we are waiting to welcome celebrities as well as anyone else who wants to come.
Okay. On that note, Nikunj, back to you. No gossip, but I promise you I'll dig it out.
Yes, I look forward to it. But let's look at the assessment right now. And Shefali, I'll talk about tax. We lost you slightly there. Is there a serious case for direct DDT to really change from corporate to receivable now?
There is, and especially after the finance minister made that statement on the floor of parliament that it is a regressive tax. There seems to be a lot of expectation that the DDT regime is set to undergo change one more time. We've already had 3 to 4 times flip-flops between DDT and the withholding taxes. And there's also merit in the argument because when we switch the DDT tax back on the shareholders, there is going to be a higher incidence of tax on the shareholders, whereas many of the corporate shareholders or many of the other medium holding shareholders will get a relief in terms of the final tax impact. So it goes with the theme that, tax the rich individuals at a higher rate.
All right, let's take a break. And our last one before the budget is tabled on the floor of the parliament. The news from the market is that we are trading with a positive bias on a day when the handover from US markets last night was nothing scary, courtesy coronavirus. So let's take a break with the news that markets are trading, and this is a clear indication that if you're going against the grain, this market is trading in the green because budget is going to be tabled in less than half an hour.
इम्प्लीमेंट किया जाए।
All right, Bala and Nilisha would also be joining us, but we've got some very interesting budget trivia. The poet, Finance Minister Nirmala Sitharaman, she used in her large budget speech in Sanskrit, in Urdu, in Hindi, Tamil and Kannada. So whatever the budget will be, we are in for some interesting quotes and anecdotes, right? What's your sense, Bala?
Yeah, of course, yes. I think we have a history is such that we can learn a lot of things from what we've done in the past, and what Chidambaram used to do as a finance minister, what Nirmala has been using it as part of the same tradition of bringing in some kind of connect to the way I think economy is built in the olden days, as you rightly mentioned about Chanakya's theory, which all of us still practice it. I think those, of course, quoting it is one, and of course putting it into action and giving a right direction actually to the market, I think that would be extremely critical. And that's why I think that all the messages that we derive actually from the history, I think it can be made to be practiced and the form of an action. So I'm sure we will probably see as a budget which is being presented immediately after the economic growth slowdown, which is real. Earlier it was not being accepted, now it's real, people are saying it. Therefore, it can potentially turn around, it can be a turnaround time, as I would say.
Okay, now Nilesh, this is where we are. History may not repeat itself, it rhymes. You can read the graphs, Nilesh. Nifty, last 1 month down, small cap and the mid cap indices are higher. Do you think markets are telling you that the institutional investors who keep eye on the Nifty know that nothing big will come because of compulsions, and the HNI investors who normally invest in the mid cap index, in the small cap index, they think something big is coming? That's a naive way of looking at it, but is it the correct way?
I'm not sure whether it's the correct way or not, but clearly this reflects the expectations which essentially the market has, and especially some of the non-institutional investors have, in terms of what the finance minister will do in the budget. Typically mid-caps, small caps rally when there are expectations that there's going to be a booster dose in terms of growth, that growth will be more broad-based, that this will truly be a budget which is going to be pro-growth, pro-investment. It's also a signal that there has been some kind of a risk-on trade in the month of January or a month before the budget. So I think it's a reflection of all of this, that there would be measures in the budget which would lift growth, there would be measures in the budget which would be pro-investment, and therefore I think the leap of faith has been taken to some extent by both probably institutional as well as non-institutional investors.
Nilesh, now the opening turned out to be the lowest point of the day, and the backdrop is coronavirus. US markets have registered a 600-point drop. SGX was down, but when markets opened on a Saturday morning at 9:15, we picked up weight and we're trading at the highest point of the day. So Nilesh and Bala, the markets are telling you the expectations at least are high, because if you're going against the world, that means something locally is different, right?
So I think one is, of course, as you rightly said, expectations are running high. Two, today being a Saturday, it's quite possible that, the foreign, the FIIs, FPIs are not very active today. Third, good results or satisfactory results from a couple of big boys, HUL, ITC, some of the auto numbers which have come out for January at least are showing growth. It may not be stellar growth, it may not be high single digit growth, but there is really no degrowth if you look at the numbers of Escorts or Maruti. So I think it's a combination of all of this, but I'd probably say the single big factor is essentially expectations from the budget.
Okay, Sunil Singhania also joins us now. Sunil Singhania, good morning. So Sunil, last two budgets, capital markets have got precious little. 2018 it was LTCG, last year a surcharge on FPI. The headline writers like me after every budget have started using terms like hike in taxes. Do you think this time around we may be using the words lowering of taxes?
Actually, there's not too much room to hike taxes. So, either it can be status quo or lowering of taxes. But just to take the point forward, which Nilesh was mentioning, I think even the GST numbers for January have stacked out well. So I think the market have already sort of been very cautious ahead of the budget. And, just look at take it as a devil's advocate kind of a thing, I think not too much is expected. And in case something happens, then obviously, we might see a small rally in the market.
Okay, Bala, it ultimately comes down to two taxes, LTCG and direct dividend tax. If direct dividend tax, if the way it is treated, currently it is at the hand of the company, if it moves to the hand of individuals, people like you and me, how will that change the market? How will that change the P multiple of the market? Will this re-rate stocks like a Bombay Stock Exchange or a IOC or a Coal India or a TCS, companies which normally have a fat dividend payout?
I think definitely dividend distribution tax, if it is cut, it of course it improves the cash flow in the hands of people.
Names of companies which pay high dividend.
Yes. So it definitely, of course, it improve, of course, the way I think the balance sheet is structured in terms of bringing back the ratios much better. But at the same time, one has to also keep in mind that this has been the largest contributor of tax to the government directly comes from a dividend distribution tax.
Okay, now Bala, on this graph, where do you expect a change? Corporate, debt mutual fund, equity mutual fund. Corporate for individuals, then corporates and individuals both are there.
Yes.
Where do you expect a change?
I would probably change coming actually in the LTCG. I think more than the dividend distribution tax, maybe they could tweak it, but given the fact that government has to balance the fiscal quite well and also improve the tax collection efficiency, probably I would assume they would probably touch long-term capital gain tax.
This one?
This one.
Nilesh, 12 months, where do you think it could move?
Well, either it's entirely eliminated, or basically the period is extended from 12 months to 24 months or something like that, or something more radical, saying all asset classes, anything more than 3 years is long term, no taxes.
Okay. I want to go back to that list of stocks or companies which have a high dividend payout. These are companies which traditionally give a lot of cash away to their shareholders. Nilesh, 10 seconds. If dividend distribution tax, if the way it's treated is changed, which is one stock which will get re-rated out of this?
Well, I think it's hard to pick one, but I think it probably could be a combination of Hindustan Zinc and Vedanta, because their payout ratios are very high. These are companies which in the past have probably taken on debt and paid out dividends.
I'll tell you what, Rakesh Jhunjhunwala, I spoke to him a couple of days ago, and he feels that STT and LTCG, no, they should not coexist together. It's never happened in the world, so it should not happen in India also.
I think there will be a lot of policy announcement in the budget. I think there will be announcement in FDI in a lot of areas. I personally feel government should, make it long-term capital gains tax-free by enhancing the period. From 1 year, you make it 2 years. So up to 2 years become all short-term capital gain. I think it will lead to net gain to government revenue, and it will lead to a big gain in sentiment. Enhance the period of long-term capital gain, but make it tax-free. Then I think we should give a lot of relief to the real estate sector. We can make a view that anybody who buys a house in the next 12 months, whenever he sells it, there is no capital gains. First of all, people generally don't buy houses to sell them, right? And second thing is there is no immediate loss of revenue. If you say that whenever you buy a house, if you sell it after 2 years, minimum period, there will be no capital gains. And I think there should be other relief for the real estate sector, right? I think we should enhance the amount of, and I think there should be big relief for tax payments for income from 10 lakhs to 25 lakhs. And then also we have to communicate by the budget to the business community that we are on your side. We have to revive the animal spirits of the business community. And government, I think, if it removes the surcharge or reduces the surcharge, it will really help in getting back the sentiment. So government has to do some action by which it conveys to the business community that we are on the same side. Well, I don't think they're expecting anything negative. I don't know positive, right? But there is no retail or public participation still in the market. I am personally hopeful it will come after the budget. They should not know in the world they do. So if the government, best thing is government abolish one of them. I think long-term capital gain is better for STT. The government gets the money 10,000-12,000 crores from 2 exchanges without any administrative cost, right? So I think it's better if we abolish long-term capital gains. If government cannot abolish it, make it 1 or 2 years. Well, I think the 20% dividend tax is not draconian, but the tax put on dividend income is according to me not needed. Direct dividend tax is most undesirable. But again, you have to, then do TDS, then collect the income. It is administratively a nightmare. This tax which the companies pay, I think, is much more convenient. But then anybody who has unit income of more than 10 lakhs has to pay tax. I think that's unjustified. Because you have a 25% rate of tax, then you pay 20%. Again, you pay 10%, that becomes very high. So I think 20% rate of dividend distribution tax is okay, and I don't think we should tinker there.
Okay. Swami, what are the chances that this budget just ends up becoming a vision statement. Last time there was a lot of sloganeering which was done in and around when will India become a $5 trillion economy. So do you think this budget may in a sense may be just one of those vision statements when nothing comes out, minor tweaking there, minor tweaking here, that's about it, but the main masala will not be there, Swami?
No. I think there will be a lot of rhetoric, there will be a lot of action in this budget. I would expect changes. When a government first of all starts, you can just come out, throw out targets. $5 trillion GDP, 1 lakh crore for infrastructure, that kind of thing. So the time for those long-term targets is over. You now have to face up with a massive slowing of the economy, of a projection of only 4.5% growth in that last quarter. Of course, with the revision of the base, it might be slightly higher. But we are now facing, I would say, the biggest slowing since 2008. So that is going to be addressed. This cannot be addressed just by a statement of what the accounts are. So I think we are going to see some serious changes. In what direction, I'm not entirely sure. I personally would hope that one of the changes would be that you come clean on the fact that your fiscal budget has been nothing like 3.5%. It's been 4.5%, 5.5%, much higher. Come clean on this and say from now on we'll glide down. If you do that, that would be a very major, spectacular new budget. I do hope we will see that. But even that apart, I would expect to see some really big figures for things like asset sales and perhaps a plan to accelerate this. Perhaps we'll see the more names, which are the other big names for which we can expect privatization. So I would expect a lot of excitement in this budget.
All right, we've got Sunil Singhania also with us. Sunil, we're counting down now, just a couple of minutes to go. I mean, usually we always see a whole lot of rhetoric before we actually get to the meat, and particularly the taxation, announcements that we're all waiting for today. Are you hoping that we'll hear something more concrete as we kickstart in just about a couple of minutes?
Yeah, I think, what the market is looking at is obviously, something on kickstarting the economy. So maybe the plan expenditure in the figure will be very, very crucial. Obviously, if something comes out on the long-term capital gain side, whether it is increasing the term to 2 or 3 years and making it tax-free, that itself will be quite positive. And maybe a small tinkering on personal taxation just to get the feel good as far as the retail or the individual taxpayer is concerned. So I think I would say few concrete things, but each of them can have the potential of at least creating a feel good kind of a situation in the market.
Okay, just 23 seconds and we will hear from the Finance Minister, and we will come back to our think tank experts right after the speech as well. So you'll stay right there with us. Nikunj, almost ticking the clock, getting there, and I just want to quickly mark the market positioning because it seems like the market is anticipating something good. We've completely ignored the global cues. We're lying flat at the 12,000 mark, but mind you, it's a good 0.6% recovery. The breath is open well in favor of the advances, and it's all those economy-related stocks, Nikunj, Ramco Cement, NCC, Piramal Enterprises, these holding up ahead of the budget tells you something.
Well, you've gone against the global markets in a very significant manner. I mean, last night was not an ordinary fall. It was a coronavirus-led scary fall of more than 600 points on the Dow. And on that, if you've gone completely against it, and you know that coronavirus is something which is going to have impact on the Chinese economy and the world economy, that just tells you that at least for the day trader is approaching a Saturday morning with high expectations. I want to go back to that graphic where we could see, that's the speaker. I think we will cut to the parliament when Madam Finance Minister, Ms. Sitharaman, she would stand on the floor of the parliament and present the budget. We had this interesting budget trivia which talked about that how many languages and how many poets she quoted in the last budget speech. I'm reasonably confident that number will not increase beyond that. So, yeah, 6 is the maximum.
She covered all.
Yeah, I mean, at least I can predict that. Okay, there you go. I think she is about to present the first budget of this year, her second budget, and the first one for the decade. We just cut across to the minute she gets ready, but let's look at one pack which you should definitely keep an eye on, and those are some of those high dividend, yield stroke payout stocks like a TCS, Vedanta, Hindustan Zinc, where and there's no briefcase. The cat is out of the bag. The file is about to be opened. And eyes down for the
Bahikhata.
Well, the Bahikhata. 30 seconds, and there you go. The floor is hers.
Following papers. Report of the 15th Finance Commission for the year 2020-2021. Explanatory memorandum on the action taken on the recommendations contained in the report of the 15th Finance Commission.
Item number 2, श्रीमती निर्मला सीतारमण जी, नए दशक का पहला आम बजट में मैं आप सबका अभिनंदन करता हूं, स्वागत करता हूं.
So I rise, with your permission, to present a statement of the estimated receipts and expenditure of the Government of India for the year 2020-2021.
दो हजार 2021 के लिए भारत सरकार के अनुमानित प्राप्तिय और वे विवरण प्रस्तुत करेंगी निर्मला सीतारमण जी.
I rise to present the budget for the year 2020-2021. So in May 2019, Prime Minister Modi received a massive mandate to form the government again. With renewed vigor, under his leadership, we commit ourselves to serve the people of India with all humility and dedication. People of India have unequivocally given their Janadesh for not just political stability and also reposed faith in our economic policy. This is the budget to boost their incomes and enhance their purchasing power. Only through higher growth we can achieve that and have our youth gainfully and meaningfully employed. Let our businesses be innovative, healthy, and solvent with use of technology. For today's youth, born at the turn of the century, for every member of the scheduled castes and scheduled tribes who seek a better life, for every woman wishing to stand up and get counted, for every individual from the minority sections of our society, this budget aims to give and have your aspirations and hopes addressed. We wish to open up vistas for a vibrant and dynamic economy with a gentle breeze of new technology. This vibrant India shall be a caring society which shall attend to its weak, the old, and the vulnerables among its citizens. During 2014-19, our government brought in a paradigm shift in governance. This shift was characterized by a twin focus: fundamental structural reform and inclusive growth. Fundamentals of the economy are strong, and that has ensured macroeconomic stability. Inflation has been well contained. Banks saw a thorough cleaning up of accumulated loans of the past decade, and then they were recapitalized. Companies were provided an exit through the IBC. Several steps on the formalization of the economy were taken up. Of the structural reforms, the Goods and Services Tax, the GST, has been the most historic in our country. Its chief architect is not with us today. I pay homage to the visionary leader, late Sri Arun Jaitley. At the time of rollout of GST, he had said, and I quote, "India will be an India It will be an India where the center and states will work harmoniously towards the common goal of shared prosperity. The unanimity of the constitutional amendment and the consensus of the GST Council highlights that India can rise above narrow politics for the nation's interest. With the GST, neither the state nor the center loses its sovereignty. In contrast, they will pool their sovereignty on decisions on indirect taxes, unquote. True to this vision for the historic structural reform, the goods and services tax has been gradually maturing into a tax that has integrated the country economically. It has consolidated numerous taxes and cesses to one tax and facilitated formalization of the economy. It has resulted in the efficiency gains in logistic and transport sectors. The turnaround time for trucks has witnessed a substantial reduction to the tune of 20% due to abolition of checkposts in the GST. The dreaded Inspector Raj has also vanished. It has also led to a significant benefit to MSME by way of enhanced threshold and composition limit. The effective tax incidence on almost every commodity came down substantially. Through several rate reductions, an annual benefit of 1 lakh crore rupees has been extended to consumers. It amounts to 10% reduction in overall tax incidence. An average household now saves about 4% of its monthly spends on account of reduced GST rates. During this phase of maturing, GST did face certain challenges. This was natural as transition was daunting. GST Council has been proactive in resolving issues during the transition. In the last 2 years, we have added more than 60 lakh new taxpayers. A total of about 40 crore returns were filed. 800 crore invoices were uploaded and 105 crore e-way bills were generated. There has been extensive engagement with stakeholders. A simplified new return system is being introduced from 1st April 2020. A former Prime Minister had once voiced a concern that the fruits of the welfare schemes were not reaching the intended citizens. The common and deserving citizen was only receiving 15 paise of every rupee sent to him. Guided by Sabka Saath, Sabka Vikas, Sabka Vishwas, our government and our Prime Minister added manifold speed and scaled up the implementation of schemes and programs that directly benefited the poor and the disadvantaged. I wish to list out only a few as examples. 1. Welfare schemes with direct benefit transfer embedded in them. 2. Sanitation and water as provision of basic needs and as a measure of preventive health care. 3. Healthcare through Ayushman Bharat. Clean energy through Ujjwala and solar power. 4th. 5th. Financial inclusion, credit support, insurance protection to vulnerable sections and pension scheme. 6th, digital penetration with broadband and UPI. And finally, affordable housing for all through PMAY, the Prime Minister Awas Yojana. The milestones achieved are unprecedented, globally recognized and benchmarked against international indices. This strategy changed the established order of a few individuals, cornering most of the benefits, and was appreciated by the people. this had immensely positive outcomes. We have moved on from a growth rate of just over 4% in 1950s to 6% in 80s and in the 90s. However, during 2014 and 19, we clocked a growth of 7.4% on average, with inflation averaging around 4.5% itself. It is worthwhile to note that inflation was close to 9% in the and ranged 10.5% during 2009 and 14. Between 2006 and 16, India was able to raise, I repeat that line, between 2006 and 16, India was able to raise 271 million people out of poverty, which we are now the fifth largest economy of the world. India's foreign direct investment got elevated to the level of $284 billion during 2014 and 19 from $190 billion that came in during the years 2009 to 14. The central government debt that has been the bane of our economy got reduced in March 2019 to 48.7% of GDP from a level of 52.2% in March 2014. Just between 14 and 19, I recall this figure, the central government's debt in March 2019 has come down to 48.7% of the GDP from a level of 52.2% in March 2014. With this backdrop, our government shall work towards taking the country forward so that we can leapfrog to the next level of health, prosperity, and well-being. We shall strive to bring ease of living to every citizen. I am mindful of presenting this budget in the backdrop of two cross-cutting developments. One, proliferation of technologies, especially analytics, machine learning, robotics, bioinformatics, and artificial intelligence. And also, number two, the number of people in the productive age group, that is 15 to 65 years of age in India, being at its highest. So these are the two cross-cutting streams, keeping in the backdrop while we are talking about the budget today. This combination is special to contemporary India. Across the world, if there is a shrinking of globalization, equally there is a debate on the efficacy of monetary policy too. The efforts we have made in the last 5 years and the energy, the enthusiasm and the innovation of our youth are the ignition required to push forward. This Indian spirit of entrepreneurship, which weathered several storms over the centuries, inspire and motivate us. We recognize the need to support and further energize this spirit. This budget is woven around three prominent themes. One, aspirational India, in which all sections of the society seek better standards of living with access to health, education, and better jobs. Two, economic development for all, indicated in the Prime Minister's exhortation of Sabka Saath, Sabka Vikas, Sabka Vishwas. This would entail reforms across swathes of the economy. Simultaneously, it would mean yielding more space for the private sector. Together, they would ensure higher productivity and greater efficiency. And three, ours shall be a caring society that is both humane and compassionate. Antyodaya is an article of faith. So, I repeat, this budget is woven around three prominent themes: aspirational India, economic development, and a caring society. The digital revolution, which has placed India in a unique leadership position globally, will see the next wave. We shall aim to achieve seamless delivery of services through digital governance, to improve physical quality of life through national infrastructure pipeline, risk mitigation through disaster resilience, social security through pension and insurance penetration. Each one of these initiatives and their components would be benchmarked to international standards, and the indices would be announced soon. Before I move to elaborate on each of these three themes, I wish to recite a small verse in Kashmiri. सोन वतन गुलजार शालीमार हूँ, सोन वतन गुलजार शालीमार हूँ, दल मंज फोलवून पंपोश हूँ, नवजवान अन हुंद भूषण खुमार हूँ, म्योन वतन च्योन वतन सोन वतन Nundboni Vatan. I'll read this in Hindi, not as a poem, but for the meaning. Hamara Vatan, खिलते हुए शालीमार बाग जैसे. हमारा वतन खिलते हुए शालीमार बाग जैसे. हमारा वतन डल लेक में खिलते हुए कमल जैसा. नवजवानों के गरम खून जैसा. नवजवानों के गरम खून जैसा. मेरा वतन, तेरा वतन, हमारा वतन, दुनिया का सबसे प्यारा वतन. It is everything that we do here, everything that we speak through the budget, and everything that this government everything that this government does with the guidance and leadership of the Prime Minister is for this Pyara Vatan. This poem, I must mention, is a poem written by Pandit Dinanath Kaul, who is a Sahitya Academy awardee. Honorable Speaker, sir, I now move to the first of my theme, which is the aspirational India. I shall cover programs and plans related to agriculture, irrigation, and rural development. That's my first under the aspirational India theme. Second, wellness, water, and sanitation. That's a second under aspirational India. And the third is education and skills. I move to talking about agriculture, irrigation, and rural development. Our government is committed to the goal of doubling farmers' incomes by 2022. We have provided energy sovereignty through Kusum and input sovereignty through Paramparagat Krishi Vikas Yojana. We have provided resilience for 6.11 crore farmers insured under Pradhan Mantri Fasal Bima Yojana. Focus on cultivation of pulses, expansion of micro-irrigation through Krishi Sinchai Yojana have raised the self-reliance of the country. Provision of any annual supplement of the income to the farmer directly is done through PM Kisan. Connectivity through PM GSY, Gram Sadak Yojana, financial inclusion have helped raise farm incomes. Prosperity to farmers can be ensured by making farming competitive. For this, farm markets need to be liberalized. distortions in farm and livestock markets need to be removed. Purchase of farm produce, logistics, agri-services need copious investments. Substantial support and hand-holding of farm-based activities such as livestock, apiary and fisheries need to be provided for. Farmers desire integrated solutions covering storage, financing and processing and marketing. Adopting sustainable cropping patterns and bringing in more technology are integral to our plan. All this and more can be achieved through working with and in cooperation with the states. The following 16 action points indicate our focus. We propose to encourage those state governments who undertake implementation of following model laws already issued by the central government. My first of the action points, 16 action points, but the first one is to encourage those state governments who undertake implementation of following model laws which are already passed and issued by the central government. First, Model Agricultural Land Leasing Act of 2016. Model Agricultural Produce and Livestock Marketing Act of 2017. Model Agricultural Produce and Livestock Contract Farming and Services Promotion and Facilitation Act of 2018. So 3 model agriculture related laws we would like state governments to consider favorably. Second of the 16 action points, water stress related issues are now a serious concern across the country. Our government is proposing comprehensive measures for 100 water stressed districts. Our government is proposing comprehensive measures for 100 water stressed districts. Third of the 16, in the budget speech of July 2019, I had stated that Annadata can be Urja Data also. The PM Kusum scheme removed farmers' dependence on diesel and kerosene and linked pump sets to solar energy. Now I propose to expand the scheme to provide 20 lakh farmers for setting up standalone solar pumps. Further, we shall also help another 15 lakh farmers solarize their grid-connected pump sets. In addition, a scheme to enable farmers to set up solar power generation capacity on their fallow and barren lands and to sell it to grid would be operationalized. Speaker, sir, this is a major step forward in which we are saying that farmers, if they have fallow or barren lands, now will be helped to set up solar power generation units so that they can then sell that which is being generated, solar power, to the grid, and through the grid, having given the solar power from their barren land, they will be able to make a living out of their barren land also. Fourth of the 16, our government shall encourage balanced use of all kinds of fertilizers, including the traditional organic and other innovative fertilizers. This is a necessary step to change the prevailing incentive regime which encourages excessive use of chemical fertilizers. So this is an important point. I'd like to repeat it. This is a necessary step to change the prevailing incentive regime which encourages excessive use of chemical fertilizers. Honorable Speaker, sir, in Tamil Nadu, there was a very wise old woman saint poet who lived more than 3,000 years ago. And she had used every letter of the Tamil alphabet to teach children moral stories. Not stories, moral lines. Each line was only 3 worded ones. They were very simple ones. They are called Aati Chudi, written by Avayar. Whilst talking about effective use of land, taking care of your land, removing weeds and making sure you tend to it properly, she had just used 3 words in a little sentence, which says it all. And that's exactly what our Prime Minister is aiming to achieve, so that the farmlands are used with proper manure, not excessive manure, and limited water to grow their grains. Bhumi Tirutti Un is the line from Attichudi, which was said by a saint poet, a woman called Avayar. Bhumi Tirutti Un. First, tend to your land, take care that you're not excessively leaving it, and then trying to take a crop out of it. So the 5th point out of my 16 action points. India has an estimated capacity of 162 million metric tons of agri warehousing, cold storage, reefer van facilities, and so on. NABARD will undertake an exercise to map and geotag them. In addition, we propose creating warehousing in line with Warehouse Development and Regulatory Authority WDRA norms. Our government will provide viability gap funding for setting up such efficient warehouses in the block or taluk level. This can be achieved where states can facilitate with land and are on PPP mode. Food Corporation of India and Central Warehousing Corporation shall undertake such warehouse building on their own land too. 6th action point. As a backward linkage, a village storage scheme is proposed to be run by SHGs. This will provide farmers a good holding capacity and reduce their logistics cost. Women SHGs can avail of Mudra or NABARD assistance and regain their position as Dhanya Lakshmi. We've heard of Dhana Lakshmi often, and many of us are familiar with Dhanya Lakshmi, and I'm sure many of us do recall the days when women in the villages were the ones who kept the seed for the entire village, and they would distribute seeds as and when a farmer required it. So we would like to restore women SHG groups to play that role or at the village level as Dhanya Lakshmis, being assisted by Mudra and being assisted by NABARD. To build a seamless national cold supply chain for perishables inclusive of milk, meat and fish, the Indian Railways will set up a Kisan Rail through PPP arrangements. There shall be a refrigerated coaches in express and freight trains as well, so that perishable goods can be quickly, easily within the country transported, and the benefit will accrue to the farmers. Krishi Udan will be launched by the Ministry of Civil Aviation, not just trains. Krishi Udan will be launched by the Ministry of Civil Aviation on international and national routes. This will immensely help improve value realization, especially in Northeast and in the tribal districts. Horticulture sector. So this is very important. Point number 9 of the 16th. Horticulture sector with its current produce. It's a very important point, sir. Horticulture sector with its current produce of 311 million metric ton exceeds the production of food grains. Horticulture exceeds the production of food grains. For better marketing and export, we propose supporting states which, adopting a cluster basis, will focus on one product, one district, so that a high focus is given at the district level for products in horticulture to really gain that momentum. 10th of the 16 action points. Integrated farming systems in rain-fed areas shall be expanded. Multi-tier cropping, beekeeping, solar pumps, solar energy production in non-cropping season will be added. Sir, I had mentioned in my July budget, zero budget natural farming. That shall also be included in our activities. The portal on Jaivik Kheti, online national organic products market, will also be strengthened. So the next point, the 11th, financing on negotiable warehousing receipts, ENWR, has already crossed more than 6,000 crores. Financing on negotiable warehousing receipts. This will be integrated with National Agriculture Market, the electronics one. The next point is the 12th of the 16th, non-banking finance companies and cooperatives are active in the agriculture credit space. The NABARD refinance scheme will be further expanded. Agricultural credit target for the year 2021 has been set at 15 lakh crores, 15 lakh crores, agricultural credit availability. All eligible beneficiaries of PM Kisan will be covered under the KCC, Kisan Credit Card Scheme. 13th of the 16th, our government intends to eliminate foot and mouth disease, brucellosis in cattle, and also what is called the PPR in sheep, which is a French expression. Sorry for those who know French, I'll try to pronounce. Peste des petits ruminants. PPR in sheep and goat by 2025. So foot and mouth disease, brucellosis in cattle, and also PPR in sheep and goat by 2025 will be eliminated. Coverage of artificial insemination shall be increased from the present 30% to 70%. Manrega would be dovetailed to develop fodder farms. Further, we shall facilitate doubling of milk processing capacity from 53.5 million metric tons to 108 million metric tons by 2025. From 53.5 million metric tons of milk to 108 million metric tons by 2025. 14th point, blue economy. Our government proposes to put in place a framework for development, management and conservation of marine fishery resources. 15th, youth in coastal areas benefit through fish processing and market. By 2022-23, I propose raising fish production to 200 lakh tons. Propose raising fish production to 200 lakh tons. Growing of algae, seaweed and cage culture will also be promoted. So this coming point is very important. Our government will involve youth in fishery extension work. Through 3,477 Sagar Mitras and 500 fish farmer producer organizations, we hope the rural youth, particularly those who are in the coastal areas and inland fishing areas, will work as Sagar Mitras and also form 500 fish farmer producer organizations. You know that we already have a farmer producer organization, which is FPO. Now we are expanding it to cover fish farmer producer organizations. 16th and the last action point, sir, under Deen Dayal Antyodaya Yojana for alleviation of poverty, 58 lakh SHGs have been mobilized. We shall further expand on SHGs in this regard too. Now, for the fund allocation, for the 16 different steps that I have announced, they are being stated under two broad categories. They are being stated under two broad categories. For the sector comprising of agriculture, allied activities, irrigation and rural development, an allocation of 2.83 lakh crores has been made for 2020-21, and it is divided, among other things, for agriculture, irrigation and allied activities, 1.6 lakh crores. For rural development and Panchayati Raj, 1.23 lakh crores, both put together, it is about 1.73 lakh, 2.8 lakh, 83 lakh crores, 2.83 lakh crores. Wellness and water and sanitation is the second under Aspirational India. I said my three themes: Aspirational India, Economic Development and Caring Society. Under each, I state three which contain specific programs. Aspirational India, already I've mentioned about the rural development and so on. Now I talk of wellness, water and sanitation. We have a holistic vision of healthcare that translates into wellness for citizens. Mission Indradhanush has been expanded to cover 12 such diseases, including 5 new vaccines. Fit India movement is a vital part of fight against non-communicable diseases coming out of lifestyle issues. A very focused Safe Water Jal Jeevan mission and comprehensive sanitation program Swachh Bharat mission have been launched to support the health vision that would reduce the disease burden on the poor. Presently, under PM Jan Arogya Yojana, there are more than 20,000 empaneled hospitals who help in Ayushman Bharat. We need more such hospitals to be empaneled in Tier 2 and Tier 3 cities for poor people in these areas to benefit from them. It is therefore proposed to set up a viability gap funding window for setting up hospitals in PPP mode. In the first phase, those aspirational districts will be covered. We know there are 112 of them. So those aspirational districts from 112 that we have, where presently there are no Ayushman empaneled hospitals, will be given priority. So from 112 of aspirational districts, those which don't have an empaneled hospital for Ayushman treatments will be given the first priority, so that in Tier 2 and Tier 3 we have more such hospitals. This would also provide large-scale employment opportunities to youth. Proceeds from taxes on medical devices. This is very interesting. It has a bearing on what I will be saying during taxation, the Part B. Proceeds from taxes on medical devices would be used to support this vital health infrastructure which will get built in the aspirational districts. Using machine learning and artificial intelligence in the Ayushman Bharat scheme, health authorities and the medical fraternity can target diseases with an appropriately designed preventive regime. TB harega, desh jeetega. TB harega, desh jeetega. This campaign has been launched. I propose to strengthen this campaign to realize our commitment to end tuberculosis by 2025. I propose to expand also Jan Aushadhi Kendra scheme to all districts, offering 2,000 medicines and 300 surgicals by 2024. I have provided for the health sector about 69,000 crores, that is inclusive of 6,400 crores for Prime Minister Jan Arogya Yojana. So now the important point on sanitation. Our government is committed to ODF Plus. We know ODF is already there, launched, successfully sort of covered, saturation reached. But our government is committed to ODF Plus in order to sustain ODF behavior, because it has a lot of impact. If behavioral patterns don't remain consistent, it can have a negative bearing. So our government is committed to ODF Plus in order to sustain ODF behavior and to ensure that no one is left behind. Now more needs to be done towards liquid and grey water management. Focus would also be on solid waste collection, source segregation and processing. The total allocation for Swachh Bharat mission is about 12,300 crores for this year, 2020-21. Aiming to provide piped water supply to all households, Prime Minister announced from the Red Fort the Jal Jeevan Mission. Our government has approved 3.6 lakh crore for this mission. 3.60 lakh crore for this mission is being approved. This scheme also places emphasis on augmenting local water resources, recharging existing sources, and will promote water harvesting and desalination. Cities over 1 million population will be encouraged to meet this objective during the current year itself. During the year 2021, this scheme would be provided a budget exclusively of 11,500 crores. So I now move to the third under Aspirational India, education and skills. The third and the final item under Aspirational India is education and skills. By 2030, India is set to have the largest working age population in the world. Not only do they need literacy, but they need both job and life skills. Dialogues have been held with state education ministries, members of parliament, and other stakeholders about education policy. Over 2 lakh suggestions were also received. The new education policy will be announced soon. It is felt that our education system needs greater inflow of finance to attract talented teachers, innovate and build better labs. Therefore, steps would be taken to enable sourcing external commercial borrowings and FDI so as to deliver higher quality education. Students in general stream as opposed to those in services or technology stream, sciences and technology stream, need their employment opportunities improved. About 150 higher education institutions will start apprenticeship embedded degree diploma courses by March 2021. The government proposes to start a program whereby urban local bodies across the country would provide internship opportunities to fresh engineers for a period up to 1 year. So local bodies, as you know, do undertake a lot of public work program, and their manpower is also limited. But yet, young engineers who are ready to serve for the purpose of learning how it is to work with the government are also going around seeking opportunities. So here we have created an opportunity by saying urban local bodies should now give opportunity for fresh engineers so that they can help them plan better and in turn also learn as an intern under the local bodies. So this is for a period of 1 year that we've opened up. In order to provide quality education to students of deprived section of the society as well as those who do not have access to higher education, it is proposed to start a degree level full-fledged online education program. This shall be offered only by institutions who are ranked within top 100 in the National Institutional Ranking Framework. Initially, only a few such institutions would be asked to offer such programs. Sir, India should also be a preferred destination for higher education. Hence, under its Study in India program, an IND SAT exam is proposed to be held in Asian and African countries. It shall be used for benchmarking foreign candidates who receive scholarships for studying in Indian higher education centers. A national police university and a national forensic science university are being proposed in the domain of policing science, forensic science and cyber forensics. There is a shortage of medical doctors. There is a shortage of qualified medical doctors, both general practitioners as well as specialists. In order to meet this requirement, it is proposed to attach a medical college to an existing district hospital in PPP mode. Those states that fully allow facilities of the hospital to the medical college and wish to provide land at a concession would be able to receive viability gap funding from the centre. Details of the scheme would be worked out soon, so we aim to have at the district level with hospitals which are being extended for medical college training and also for producing more doctors, viability gap funding will also be extended. So the National Board of Examination imparts PG medical qualification, diploma and fellow of National Board, DNB and FNB. The government will therefore encourage large hospitals with sufficient capacity to offer resident doctors the DNB and FNB courses under the National Board of Examinations. There exists a huge demand for teachers, nurses, paramedical staff and caregivers all abroad. There exists a huge demand abroad for teachers, nurses, paramedical staff and caregivers. However, their skill sets many a time do not match the employer's standards and therefore need to be improved. I propose that a special bridge course be designed by the Ministries of Health, Skill Development together with professional bodies to bring in equivalence. Language requirements of various countries need also to be included. All these should be achieved through a special training package. Our government proposes to provide about 99,300 crores for education sector in 2021 and about 3,000 crores for skill development. So I move to the second theme, economic development. Aspirational India, economic development and caring society. I'm now talking on economic development. And in economic development, industry, commerce and investment are the ones which come first in our. So the most important thing as an introduction I'd like to say here, the guilds of Saraswati Sindhu civilization and the Harappan seals are remarkable. Saraswati Sindhu civilization is about 4,000 before the Common Era. The seals in particular belong to 3,300 BCE, before the Common Era. Words from the Indus script, which are all hieroglyphs, have been deciphered. Words from those hieroglyphs have been deciphered. Interesting words which we need to know when we're talking about commerce and industry. Commerce and trade-related words show how India for a millennia has been a continuing civilization with rich skills in metallurgy, rich skills in trading and so on. Sreni is a word found in the Harappan seals, which means guild. Seti is a word found in the Harappan seals, which means wholesale merchant. Seti was a wholesale merchant in the Sindhu civilization, Saraswati Sindhu civilization. Poddar is an affair of metal into treasury. And also, India is a continuing maritime power in terms of commerce and industry. Sakara Khurmi is using word which shows blacksmithery and also iron and tinsmithery existed that time. So, India's commerce, India's industry, India's trade in such materials which were all unique to India have existed and continues to exist over the millennia. So entrepreneurship has always been the strength of India. That's the point I wanted to explain. I'm sure many members already know it and therefore they are a bit restless. Entrepreneurship has always been the strength of India. Even today, young men and women have given up greener pastures elsewhere to contribute to India's growth. They are risk-taking and come up with disruptive solutions to festering challenges. Equally, Established old industries are resetting themselves in a changing global and domestic situation. We recognize the knowledge, skills, and risk-taking capacities and capabilities of our youth. He is no longer a job seeker. He is a creator of jobs. Now we wish to create more opportunities and remove roadblocks from this path. I propose to set up an investment clearance cell that will provide end-to-end facilitation and support, including pre-investment advisory, information related to land banks, and facilitate clearances at the center and also in the state level. It will work through a portal. There is a case for maximizing the benefits of three separately developing economic activities: the upcoming economic corridors, revitalization of manufacturing activities, and technology and the demands for aspirational classes. We have to benefit from their convergence. Hence, it is proposed to develop 5 new such smart cities in collaboration with states and in PPP mode. Such sites would be chosen that offer the best choices in terms of the aforementioned principles. India needs to manufacture networked products that will make it a part of global value chains. This in turn gets more investment and generates more employment for our youth. Electronics manufacturing industry is very competitive, and India has shown its cost advantages. The potential of this industry in job creation is immense. India needs to boost domestic manufacturing and attract large investments in the electronics value chain. Here I propose a scheme focused on encouraging manufacture of mobile phones, electronic equipment, and semiconductor packaging. The details will be announced sooner. With suitable modifications, this scheme can be adapted for manufacturing of medical devices too. India, sir, imports significant quantity of technical textiles worth $16 billion every year. To reverse this trend and to position India as a global leader in technical textiles, a national technical textiles mission is proposed with a 4-year implementation period from 2020-21 to 23-24 at an estimated outlay of 1,480 crores. Honorable Speaker, sir, from the Red Fort, our Prime Minister spoke about quality and standards when he spoke of zero defect, zero effect manufacturing. In September last year, I had called for a time-bound adoption by industry of all necessary mandatory technical standards and their effective enforcement. All ministries during the course of this year would be issuing quality standard order. So to achieve higher export credit disbursement, a new scheme, NIRVIC, is being launched, which provides for higher insurance cover, reduction in premium for small exporters, and simplified procedure for claim settlements. It is proposed to digitally refund to exporters. That was NIRVIC. I'm coming to a different point now. It is proposed to digitally refund to exporters duties and taxes levied at the center, state, and local levels, such as electricity duties, VAT, the VAT, on fuel used for transportation, which are not getting exempted or refunded under any other existing mechanism. This scheme for reversion of duties and taxes on exported products will be launched from this year itself. Honorable Speaker, it is the vision of our Prime Minister that each district should develop as an export hub. Efforts of the centre and state governments are being synergized, and institutional mechanisms are being created in order that every district becomes an export hub. Government e-marketplace, GEM, is moving ahead for creating a unified procurement system in the country for providing a single platform for procurement of goods, services and works. It offers a great opportunity for medium and small and micro enterprises. 3.24 lakh vendors are already on this platform. It is proposed to take its turnover to 3 lakh crores. I propose to provide about 27,300 crores for development and promotion of industry and commerce for the year 2020-2021. So under economic development, the second point that I want to focus on is a very important point, and it is on infrastructure. Honorable Speaker, in his Independence Day speech of 2019, the Prime Minister has highlighted that 100 lakh crores would be invested on infrastructure for the next 5 years. As a follow-up measure, I had launched the National Infrastructure Pipeline on 31st December 2019 of 103 lakh crore worth projects. It consists of more than 6,500 projects across sectors and are classified as per their size and stage of development. These new projects will include housing, safe drinking water, access to clean and affordable energy, healthcare for all, world-class educational institutions, modern railway stations, airports, bus terminals, metro, railway transportation, logistics and warehousing, irrigation projects, etc. The National Infrastructure Pipeline envisions improving the ease of living for each and every individual citizen in the country. It will also bring in generic and sectoral reforms in development, operation and maintenance of these infrastructure projects. A huge employment opportunity exists for India's youth in construction, operation and maintenance of infrastructure. National Skill Development Agency will give special thrust to infrastructure-focused skills and their development opportunities. I propose to set up a project preparation facility for infrastructure projects. This program would actively involve young engineers, management graduates, and economists from our universities. It is also proposed to direct all infrastructure agencies of the government to involve youth power in startups. They will help in rolling out value-added services in quality public infrastructure for citizens. A national logistics policy will soon be released. Among other things, it will clarify the role of union government, state government, and also the key regulators. It will create a single window e-logistics market and focus on generation of employment, skills, and making MSMEs competitive. So also, accelerated development of highways will be undertaken. This will include development of 2,500 kilometer access control highways, 9,000 kilometers of economic corridors, 2,000 kilometers of coastal and land port roads, and 2,000 kilometers of strategic highways. The Delhi-Mumbai Expressway and two other packages would be completed by 2023. Chennai-Bengaluru Expressway would also be started. So the fast-track mechanism encourages us towards greater commercialization of our highways so that NHAI can raise more resources. I propose to monetize at least 12 lots of highway bundles of over 6,000 kilometers before 2024. In carrying out its duty, the Indian Railways performs a service to the nation. Within 100 days of assumption of this government, it has commissioned 550 Wi-Fi facilities in as many railway stations. It has eliminated unmanned level crossings and aims to achieve electrification of 27,000 kilometers of tracks. This will call, obviously, for optimization of costs. Railways has small operating surplus. About Indian Railways, there are 5 measures, among other things, that I wish to highlight. Setting up a large solar-powered capacity. Setting up a large solar power capacity alongside the rail tracks on the land owned by railways. A proposal is under consideration. 4 station redevelopment projects and operation of 150 passenger trains would be done through PPP mode. The process of inviting private participation is underway. More Tejas type trains will connect iconic tourist destinations. High-speed train between Mumbai and Ahmedabad would be actively pursued. 148-kilometer Bengaluru suburban transport project at a cost of 18,600 crores would have fares on metro model. Central government would provide 20% of the equity, and it will also facilitate external assistance up to 60% of the project cost. Sir, our seaports need to be more efficient. Technology has to be used to improve performance. A governance framework keeping with global benchmarks needs to be put in place. This government would consider corporatizing at least one major port and subsequently its listing on the stock exchanges. Inland waterways received a boost. Inland waterways received a boost in the last 5 years. The Jal Vikas Marg on National Waterway 1 will be completed. Further, the 890-kilometer Dhubri-Sadiyar connectivity in Assam will be done by 2022. Honorable Speaker, sir, developing waterways has its impact on the ecosystem on both the banks of the river. Our Prime Minister has conceptualized Arth Ganga. Plans are afoot to energize economic activity along the river banks. Air traffic has been growing rapidly in the country as compared to global average. 100 more airports would be developed by 2024 to support the Udaan scheme. It is expected that the air fleet number shall go up from the present 600 to 1,200 during this time itself. I propose to provide 1.7 lakh crores for transport infrastructure in 2021. So taking electricity to every household has been a major achievement of this government. However, the distribution sector, particularly the DISCOMs, are under financial stress. The ministry intends to promote smart metering. I urge all the states and union territories to replace conventional energy meters by prepaid smart meters in the next 3 years. Also, this would give consumers the freedom to choose the supplier and the rate as per their requirements. So this is a very important step in reaching electricity to all people. This would give consumers the prepaid meters, the smart meters, would give consumers the freedom to choose the supplier and the rate as per their requirements. Further measure to reform DISCOMs would be taken. I propose to provide 22,000 crores to power and renewable energy sector for the year 2020-21. So now I come to oil and natural gas. In the upstream sector, oil and gas, The Open Acreage Licensing Policy, OALP, is a success, having awarded 1,37,000 square kilometers for exploration to private sector and to the CPSEs. City gas distribution rights are also awarded. Further, it is proposed to expand the national gas grid from the present 16,200 kilometers. At the moment, it is 16,200 kilometers only. We propose to expand it to reach 27,000 kilometers. To deepen the gas markets in India, further reforms will be undertaken to facilitate transparent price discovery and also ease of transactions. So I come to talking about the new economy now. The new economy is based on innovations that disrupt established business models. Artificial intelligence, Internet of Things, 3D printing, drones, DNA, data storage, quantum computing, etc. are all rewriting the world economic order. India has already embraced a new paradigm such as the sharing economy with aggregator platforms displacing conventional businesses. Government has harnessed new technologies to enable direct benefit transfers and financial inclusion on a scale like never before. It's now a cliche, data is the new oil. And it is true that analytics, fintech, and Internet of Things are changing the way we deal with our lives. To take advantage of this, I propose to bring out soon a policy to enable private sector to build data center parks throughout the country. Building data center parks throughout the country. It will enable our firms to skillfully incorporate data in every step of their value chains. Our vision is that all public institutions at the Gram Panchayat level, such as Anganwadis, health and wellness centers, government schools, PDS outlets, post offices, and police stations will all be provided with digital connectivity. So, the fiber to home FTTH connections through BharatNet will link 100,000 Gram Panchayats this year itself. 1 lakh Gram Panchayats this year itself will be connected to the optical fiber FTTH program. It is proposed, therefore, to provide 6,000 crores to BharatNet program 2020-21. We need to expand the base for knowledge-driven enterprises. Intellectual property creation and protection will play an important role. Several measures are proposed in this regard, which will benefit the startups. A digital platform would be promoted that would facilitate seamless application and capture IPRs. Also, in an institute of excellence, a center would be established that would work on the complexity and innovation in the field of intellectual property. Honorable Speaker, sir, knowledge translation clusters would be set up across the different technology sectors, including new and emerging sectors, for designing, fabrication, and validation of proof of concept, and further scaling up technology clusters, harboring such test beds and small-scale manufacturing facilities would be established. Mapping of India's genetic landscape is critical for next-generation medicine, agriculture, and for biodiversity management. To support this development, we will initiate 2 national-level science schemes to create a comprehensive database. The government proposes to provide early life funding, including seed fund, to support ideation and development of early-stage startups. So critical to our quantum technology. Quantum technology is opening up new frontiers in computing, communications, cybersecurity with widespread applications. It is expected that a lot of commercial applications would emerge from theoretical constructs which are developing in this area. it is proposed to provide an outlay of 8,000 crores over a period of 5 years for the national mission on quantum technologies and applications. India would probably be the third biggest and pioneering nation if we are able to break into this technology of quantum technology related to computing and other applications. Sir, I come to the third theme, the last theme in my part A, after which, of course, I will speak of a few others. Caring society. In our third theme, we focus on women and child, social welfare, culture and tourism, and also on environment and climate change. Women and child and social welfare, sir. I am pleased to inform the House that Beti Bachao, Beti Padhao has yielded tremendous results. Gross enrollment. Sir, if you hear the data, I think it's important not to politicize issues related to women. Beti Bachao, Beti Padhao has yielded tremendous results. Gross enrollment ratio of girls across all levels of education is now higher than boys. At elementary level, it is 94.32% as against 89.28% for boys. At secondary level, it is 81.32% as compared to 78% for boys. At higher secondary level, girls have achieved a level of 59.70 compared to only 57.54% for boys. So girls are actually under Beti Padhao benefiting from the scheme. Health of mother. Sir, health of mother and child are correlated closely. Nutrition is the critical component of health. To improve nutritional status of children 0 to 6 years, adolescent girls, pregnant women, and lactating mothers, our Prime Minister launched a Poshan Abhiyan in 2017-18. More than 6 lakhs Anganwadi workers are equipped with smartphones to upload the nutritional status of more than 10 crore households. Sir, Honorable Speaker, sir, for the benefit of those who may not have heard this line, because it's very important, I'd like to repeat it. To improve the national nutritional status of children in 0 to 6 years of age, adolescent girls, pregnant women and lactating mothers, our Prime Minister launched a Poshan Abhiyan in 2017-18. More than 6 lakh Anganwadi workers are equipped with smartphones to upload the nutritional status of more than 10 crore households. The scale of this development is unprecedented. So the next is, women's age of marriage was increased from 15 years to 18 years in 1978 by amending erstwhile Sharda Act of 1929. As India progresses further, opportunities open up for women to pursue higher education and careers. There are imperatives of lowering MMR, maternal mortality rate, as well as improvement of nutrition levels. Entire issue about age of girl entering motherhood needs also to be seen in this light. I propose to appoint a task force that will present its recommendations in 6 months' time. I propose to provide 35,600 crores for nutrition-related programs for the financial year 2020-2021. So in continuing with our government's commitment to welfare of women, this budget provides for about 28,600 crore for programs that are specific to women. Our government is determined that there shall be no manual cleaning of sewer systems or septic tanks. Suitable technologies for such tasks have been identified by the Ministry of Housing and Urban Affairs. The ministry is working with urban local bodies for the adoption of these technologies. We will now take this to its logical conclusion. We will now take it
एक मिनट बंद मैं सभी माननीय सदस्यों से आग्रह करूंगा आपको बजट पर पर्याप्त समय और पर्याप्त अवसर दूंगा उस समय आप बोलना और दादा विशेष रूप से आपको बोलने की परमिशन दूंगा
Thank you, sir. No. Thank you, Speaker, sir. We will now take this. We will now take this to its logical conclusion through legislative and institutional changes. Financial support for wider acceptance of such technologies will be provided. In furthering this government's commitment towards the welfare of scheduled castes and other backward classes, I propose a budget provision of about 85,000 crores for 2020-21 for scheduled castes and other backward classes. I repeat, I propose a budget provision of about 85,000 crores for 2020-21. In furthering the development and welfare of scheduled tribes, sir, I provide in the budget for the year 2020-21 an amount of 53,700 crores. For scheduled tribes, I repeat, we provide 53,700 crores. This government is mindful of the concerns of senior citizens and Divyang. Accordingly, an enhanced allocation of about 9,500 crore is being provided for 2020-21. So now I move to the second of the third topic theme that I have, which is culture and tourism. Our government proposes to establish an Indian Institute of Heritage and Conservation under Ministry of Culture. It shall have the status of a deemed university to start with. Acquisition of knowledge in disciplines such as museology and archaeology are essential for collecting and analyzing scientific evidence of such findings and for dissemination through high-quality museums. Currently, lack of trained manpower is a handicap for both these disciplines, and therefore it also has a negative impact on tourism. 5 archaeological sites would be developed as iconic sites with on-site music. They are Rakhi Ghadi, Haryana; Hastinapur, Uttar Pradesh; Shiv Sagar in Assam; Dholavira, Gujarat; Adichanallur, Tamil Nadu. I repeat, 5 archaeological sites would be developed as iconic sites with on-site museums. They are Rakhi Ghadi, Haryana; Hastinapur, Uttar Pradesh; Shiv Sagar, Assam; Dholavira, Gujarat; and Adichanallur in Tamil Nadu. Our Prime Minister in January 2020 announced recuration of the Indian Museum in Kolkata, which is the oldest in the country. In the historic Old Mint Building, Kolkata, a museum on numismatics and trade will also be located. 4 more museums from across the country shall be taken up for renovation and recuration so that a world-class experience can be offered to our visitors. Our government shall also support setting up of a tribal museum in Ranchi, Jharkhand. So I spoke about the Sindhu-Saraswati civilization. A maritime museum would be set up at Lothal, the Harappan Age maritime site near Ahmedabad, by the Ministry of Shipping. I propose to provide 3,150 crore for Ministry of Culture for the year 2021. Sir, India has moved up from the rank 65 in 2014 to 34 in 2019 in the Travel and Tourism Competitive Index, the World Economic Forum's index. Foreign exchange earnings grew 7.4% to 1.88 lakh crores for the period January to November 2019 from 1.75 lakh crores. From 1.75 lakh crores, it has gone up to 1.88 lakh crores. Growth of tourism directly relates to growth and employment. States have a critical role to play. I expect the state governments to develop a roadmap for certain identified destinations and formulate financial plans during 2021 against which specified grants will be made available to the states from the centre in the year 2020-21. For purpose of tourism promotion, sir, I propose to allocate 2,500 crores for 2020-2021. So I now move to the third under this theme, environment and climate change. In September 2019, the Prime Minister has launched the Coalition for Disaster Resilient Infrastructure with its secretariat in Delhi. This global partnership is the second such initiative, international initiative, after the launch of, as members would recall, after the launch of International Solar Alliance. That was in 2015. This global partnership will help in addressing a number of sustainable development goals, as also the aims of Sendai framework. It will enhance climate change adaptation with a focus on disaster-resilient infrastructure. India submitted its nationally determined contribution under the Paris Agreement in 2015 on a best effort basis, keeping in mind the development imperative of our country. Its implementation effectively begins from 1st January 2021. Our commitments as action will be executed in various sectors. Honorable Speaker, sir, I interrupt here only to say this is a very important point because a lot of our commitments which have been given in the Paris Climate Change Conference on best effort basis will start kicking in from 1st January 2021. Our commitments as action will be executed in various sectors by the departments and ministries concerned through a normal budget process. They will do it through the normal budgeting process. There are, however, yet thermal power plants that are old and their carbon emission levels are very high. For such power plants, we propose that utilities running them would be advised to close them if their emission is above the preset norms. The land so vacated can be put to alternative uses. In large cities having population above 1 million, clean air is a matter of concern. I'm sure a lot of our members will be keen to know about what steps are being taken for cities and clean air. The government proposes, Honorable Speaker, to encourage such states that are formulating and implementing plans for ensuring cleaner air in cities above 1 million. Parameters for the incentives would be notified by the Ministry of Environment, Forests and Climate Change. Allocation for this purpose is 4,400 crores for 2020-2021. So there is something which before I move to talking about governance, because the three themes that I put before the members is coming to a close, I fall back on the wise words of Thiruvalluvar. And this, it's very important, sir. We have heard several words of wisdom from Thiruvalluvar. Thiruvalluvar has spoken about what a good country is. What a good country is actually got to be like. And what makes up for jewels of a good country. I first read it in Tamil, then I'll give you the meaning. Pini inmai, selvam, vilai inbam, emam. Pini inmai, selvam, vilai inbam, emam. Ani enba nattin vaindu. Ani enba nattiv vaindu. There are 5, what Thiruvalluvar says, which are jewels for a good country. The first is pini inmai, meaning the country will have to be without epidemics or illnesses, major illnesses. The second, he says, it should be wealthy. It should have wealth. It should have wealth. Vilai. It should also have velachal. In the sense, from the fields, it should have good crop. It should have inbam. It should have happiness. It also should have emam, which is security and safety of the country. So the 5 jewels. 5 jewels. Pini inmai, selvam, vilai inbam, emam, and inbam. Prime Minister Modi. Prime Minister Modi. Ayushman Bharat. Ayushman Bharat for health for all is penny in mind. Selvam. Wealth creators will be respected in this country. Wealth creators will be respected in this country. Selvam. Vilaichal. Having good crops. Farmer PM Kisan. Doubling of income, use of fertilizers and proper growth leads to surplus in horticulture, surplus in Silhan, surplus now probably also in Dalhan. So the Prime Minister's program at health, at creating and giving respect for wealth creators and improving agricultural output and looking at ease of living, bringing happiness to people, and above all, the 5th, emam, this country's national security. You have enough proof to say national security is the top priority of this government. So, if Thiruvalluvar,
आपको कुछ होना चाहिए, तमिल में पढ़ा है, बैठ जाइए.
That's right, sir. If Thiruvalluvar identified the 5 jewels for a good country, those 5 jewels are the ones which Prime Minister Modi is now addressing through his programs. For health, Ayushman, for wealth creators, a respectable and honorable climate, good crops, happiness through ease of living, and national security. So, now with all that said, the bouquet of flowers which I would like to give every citizen with trust and faith, had flowers under aspirational India, had aspirational India, a set of flowers under aspirational India, had set of flowers under environment and economy and also commerce and industry. A third set of flowers was under the caring India, caring society that we want to have. Now this bouquet of flowers is held by 2 hands, governance and other financial institutions. I speak about governance, sir, which is very important. Good governance is what is going to be giving faith to the people. Honorable Speaker, sir, All the while, I have explained the color and composition of the bouquet of flowers, schemes and programs. They were grouped under Aspirational India, Economic Development and Caring India. Now I speak about the two hands that will hold them. One such a hand is governance, which is clean, corruption-free, policy-driven, and good in its intent. And most importantly, trusting in faith, trusting every citizen, the aspirational youth, the hard-working women. Honorable Speaker, sir, trusting every citizen, I repeat, trusting every citizen, the aspirational youth, the hard-working women, the risk-taking entrepreneur, the ever-hopeful and untiring farmer, or the wise and old senior citizen. Many among them are taxpayers. Others may not be taxpayers now. Our Prime Minister has laid before us ease of living as a goal to be achieved on behalf of all citizens. An important aspect of both ease of living and ease of doing business is fairness, efficiency of tax administration. We wish to enshrine, this is important, Honorable Speaker. This is important, sir. Money being allocated to various programs is finance of this country. This is very important, sir. Businesses should have the confidence that things are being fair and the efficiency of the tax administration. We wish to enshrine in the statutes a taxpayer charter. Through this budget, a taxpayer charter is getting institutionalized into the statutes. It's going to be enshrined as a part of our laws. That's building trust. A taxpayer statutes will be a part of a taxpayer charter will be a part of our statutes. Our government would like to reassure taxpayers that we remain committed to taking measures so that our citizens are free from harassment of any kind. We mean it, and we are willing to put it in the law. Tax harassment cannot be tolerated when we are talking about citizens and wealth collectors. There has been a debate about building into statutes criminal liability for acts that are civil in nature. This is important, sir. There has been a debate about building into statutes criminal liability for acts that are civil in nature. Hence, for Companies Act, certain amendments are proposed to be made that will correct this. Similarly, other laws would also be examined where such provisions exist, and attempts would be made to correct them also. The government intends to introduce major reforms in recruitment to non-gazetted posts in governments and public sector banks. At present, candidates have to appear for multiple examinations conducted by multiple agencies at different points of time for similar posts. This places enormous burden on time, effort, and cost for young people. To mitigate the hardship so faced, it is proposed to set up a national recruitment agency as an independent, professional, specialist organization for conduct of computer-based online common eligibility test for recruitment to non-gazetted posts. A test center in every district, particularly in the aspirational districts, would be set up. For the speedy disposal of commercial and other disputes, government has constituted various tribunals and specialized bodies. It is proposed to evolve a robust mechanism for appointment, including direct recruitment to these bodies to attract best talents and professional experts. A stable and predictable business environment is a key objective of this government. There is also a strong argument for ensuring that contracts are honoured. India has a sound framework related to Contracts Act. We shall deliberate upon strengthening it. There is a growing need, sir, for Indian statistical system to meet the challenges of real-time monitoring of our increasingly complex economy. Data must have strong credibility. The proposed new national policy on official statistics would use latest technology, including artificial intelligence. It would lay down a roadmap towards modernized data collection, integrated information portal, and a timely dissemination of information thus collected. I am happy to inform that India will host G20 presidency in the year 2022. That is the year of 75th anniversary of independence of the Indian nation. During this presidency, India would be able to drive considerably the global economic and development agenda. For this historic occasion, I allocate a sum of 100 crore to begin the preparations. 100 crore rupees. Sir, Northeastern region has a very high priority in government's developmental agenda. Government is ensuring smooth access to financial assistance from multilateral and bilateral funding agencies to help introduce innovative and global best practices. Central government has effectively used an online portal to reduce gestation period of online. This has improved the flow of funds to the Northeast region. The government is fully committed to supporting the all-round development of the newly formed Union Territories of Jammu and Kashmir and the Union Territory of Ladakh. Accordingly, an amount of 30,757 crore has been provided for the financial year 2020-21. An amount of 5,958 crore has been provided for the Union Territory of Ladakh. So that was one hand, which is governance. Now I come to the other, which is the financial sector. If governance was described as one of the pair of the hands holding the bouquet consisting of aspirational India, economic development and caring India, the other is the financial sector. A clean, reliable, robust financial sector is critical to the economy. A clean, reliable and robust financial sector is critical to the economy. In our efforts to achieve the US $5 trillion economy, the financial architecture should evolve. The financial architecture should keep evolving and move from strength to strength. We had earlier approved consolidation of 10 banks into 4. In the last few years, the Government of India has infused about 3,50,000 crores by way of capital into public sector banks for both regulatory and growth purposes. Governance reforms would be carried out in these banks so that they become more competitive. A few among them will be encouraged to approach capital market to raise additional capital. Sir, I wish to inform this august House that robust mechanism is in place to monitor the health of all scheduled commercial banks and that depositors' money is absolutely safe. I wish to underline this point, sir, that this August House should know that robust mechanism is in place to monitor the health of all scheduled commercial banks and that depositors' money is absolutely safe. Further, the Deposit Insurance and Credit Guarantee Corporation has been permitted to increase deposit insurance coverage for a depositor, which is now standing at 1 lakh of rupees to 5 lakh per depositor. Sir, the insurance cover for a depositor is at 1 lakh now Now we are raising it to 5 lakh for each depositor. So to strengthen the cooperative banks, amendments to the Banking Regulation Act are proposed for increasing professionalism, enabling access to capital, and improving governance and oversight for sound banking through the RBI. The limit for NBFCs to be eligible for debt recovery under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interests under the SARFAESI Act 2002 is proposed to be reduced from 500 crores to asset size 100 crores only, or loan size from existing 1 crore to 50 lakhs. Therefore, we feel many of the small NBFCs which can come for debt recovery would be far easily done for smaller companies. In the last few years, the government has taken concrete steps to bring our banking system to be robust. However, there is a need for greater private capital. Accordingly, it is proposed to sell the balance holding of Government of India's IDBI Bank to private, retail and institutional investors through the stock exchange. There is a need, sir, to take further steps to bring in transparency and greater professionalism in public sector banks. The government will take appropriate measures towards this end. So to help easy mobility while in jobs, we wish to infuse into the universal pension coverage with auto-enrollment. Also, we wish to place such mechanisms which can enable interoperability and provide safeguards for the accumulated corpus. Regulating role of PFRDAI, which is the pension regulatory body, requires strengthening. Necessary amendments would be carried out in Pension Fund Regulatory Development Authority of India Act that will also facilitate separation of NPS trust for government employees from the PFRDAI. This would also enable establishment of a pension trust by the employees other than from the government. I am confident that this will motivate citizens to plan for their old age. So this section, which I will now speak, will relate to the MSMEs. MSMEs are vital to keep the wheels of our economy moving. They also create jobs, innovate, and also risk takers, and they are risk takers. Several measures for the MSMEs have been taken in the past few years. There are more steps proposed in this budget also. I propose to make necessary amendments to the Factor Regulation Act 2011. This will enable NBFCs to extend invoice financing to the MSMEs through TREDS, thereby enhancing the economic and financial sustainability. Working capital credit remains a major issue for the MSMEs. It is proposed to introduce a scheme to provide subordinate debt for entrepreneurs of MSMEs. This subordinate debt to be provided by banks would count as quasi-equity and would be fully guaranteed through the Credit Guarantee Trust for medium and small entrepreneurs. The corpus of the CGT MSE would accordingly be augmented by the government. More than 5 lakh MSMEs have benefited from restructuring of debt permitted by RBI in the last year. The restructuring window was to end on 31st March 2020. Government has asked RBI to consider extending this window till 31st March 2021, one more year, so that whoever wants, they can go and approach. An app-based invoice financing loans product will be launched. This will obviate the problem of delayed payments and consequential cash flow mismatches for the MSME. Many mid-sized companies are successful domestically, but not in export markets. For selected sectors such as pharmaceuticals, auto components and others, we propose to extend hand-holding support for technology upgradations, R&D, business strategy planning, and so on. A scheme of 1,000 crore rupees will be anchored in the Exim Bank together with the SIDBI. Both these institutions would contribute 50 crores each. This 100 crore would be achieved towards equity and technical assistance. Debt funding of 900 crores from banks would be made available. Sir, financial markets. I would like to give a few of the major steps and initiatives being taken by the government for the financial markets. Last year in my budget speech, sir, I had mentioned about deepening the bond markets. To achieve the aspirational growth rate, we would require flow of capital in our financial system. A lot of work has been done on this in consultation with the RBI. Honorable Speaker, sir, I am pleased to inform this House of the developments. Certain specified categories of government securities would be opened fully for non-resident investors, apart from being available to domestic investors also. The limit for FPI in corporate bonds, currently at 9% of outstanding stocks, will be increased to 15% of the outstanding stock of corporate bonds. To improve investors' confidence and to expand the scope of credit default swaps, we propose to formulate a legislation to be placed soon before this House for laying down a mechanism for netting of financial contracts. The debt-based exchange-traded fund, the ETF, recently floated by the government was a big success. Government proposes to expand this by floating a new debt ETF consisting primarily of government securities. This will give retail investors access to government securities as much as giving an attractive investment for pension funds and long-term investors. So to address the liquidity constraints of the NBFCs and the HFCs, this was very much talked about between July and December last year, sir, 2019. Liquidity constraints was very frequently mentioned to us. So to address liquidity constraints of the NBFCs and the housing finance corporations, post the Union Budget 2019-20, the government formulated a partial credit guarantee scheme for the NBFCs. To further the support of providing liquidity, a mechanism would be devised. Government will offer support by guaranteeing securities that are so floated. Infrastructure financing. Government's commitment for investment in infrastructure was reiterated when 103 lakh crore national infrastructure pipeline projects were announced. I would also like to inform that about 22,000 crores of rupees has already been provided as support for infrastructure pipeline. On December 31st, if honorable members would recall, the national pipeline consisting of more than 6,500 projects were announced. 22,000 crore has already been provided as support to infrastructure pipeline. This would cater for equity support to infrastructure finance companies such as the IIFCL and a subsidiary which is of NIIF. So two institutions, IIFCL and the subsidiary of NIIF, take it. They would leverage it as permissible to create financing pipeline of more than 1 lakh crores. This would create a major source of long-term debt financing for infrastructure projects and fulfill a long-awaited requirement. So, the IFSC, GIFT City, has the potential to become a center of international finance as well as a center for high-end data processing. GIFT IFSC has an approved free trade zone for housing vaults. It already has 19 insurance entities, 40 banking entities. It has also provided for setting up of precious metals, testing laboratories for them, and refining facilities also. With the approval of the regulator, GIFT City would now set up an international bullion exchange in GIFT City IFSC as an additional option for trade by global market participants. This will enable India to enhance its position worldwide, create jobs in India, and will lead to better price discovery of gold. Sir, in the recent years, there has been a surge in trading volumes of Indian rupee in the offshore financial centers. The government and the RBI has taken various measures to permit rupee derivatives to be traded in the International Financial Services Center at GIFT City, Gujarat. So just a very quick word on disinvestment. Listing of companies on stock exchanges brings discipline, and it disciplines the company and provides access to financial markets and unlocks its value. It also gives opportunity for retail investors to participate in the wealth so created. The government now proposed to sell a part of its holding in the LIC by way of initial public offer. Initial public offer. Sir, fiscal management. The 15th Finance Commission. The 15th Finance Commission has given its first report pertaining to financial year 2020-2021. In the spirit of cooperative federalism, I am pleased to announce that we have in substantial measure accepted the recommendations of the Commission. The Commission would submit its final report to the President during the latter part of the year for 5 years beginning 2021-22. It is decided to transfer to the GST Compensation Fund balances due out of the collection of the years 2016-17 and 17-18 in 2 installments. Hereinafter, transfers to the fund would be limited only to the collection by way of GST compensation cess. A fundamental overhaul of centrally sponsored schemes and central sector schemes is necessary so that we can align them with emerging social and economic needs of tomorrow and to ensure that scarce public resources are spent optimally. Recently, there has been a debate over transparency and credibility of the projected fiscal numbers. Let me assure the House that the procedure adopted is compliant with the FRBM Act. This is also consistent with the practices hitherto followed. However, for greater clarity, I have enumerated those central government debt that are not part of the market borrowing and are used to fund the expenditure at the annex. I'd like to repeat this line, sir. I'd like to repeat this line, sir. For greater clarity, I have enumerated those central government debts that are not part of market borrowing and are used to fund the expenditure at the annex. Servicing of interest and repayment of these debts, as hitherto done, are done out of Consolidated Fund of India. So now I come to some numbers. Revised estimates of expenditure for the financial year 2019-20 are at a level of 26.99 lakh crores and the receipts are estimated at 19.32 lakh crores. We have estimated nominal growth of GDP for the year 2020-21 on the basis of trends available at 10%. Accordingly, we have estimated, sir, let me finish, sir. So we have estimated the nominal growth. We have estimated the nominal growth of GDP for year 2020-21 on the basis of trends available at 10%. Accordingly, receipts for the year 2020-21 are estimated at 22.46 lakh crores. And keeping in mind commitment of the government towards various schemes and the need for improvement of the quality of life, level of expenditure has been kept at 30.42 lakh crores. Sir, during the year, government has unfailingly worked towards keeping up capital expenditure. Actually, there is substantial enhancement. All the flagship schemes of the government have been fully provided for. Details may be seen in the annexes to the printed copy of my speech. Every budget must appropriately address the issue of fiscal deficit. Every budget must appropriately address the issue of fiscal deficit. Recently, government has undertaken very significant tax reforms for boosting investment. However, expected tax buoyancy will take time. We estimate a fiscal deficit of 3.8% in RE 2019-20 and 3.5% for BE 2020-2021. This estimation is consistent with the government's abiding commitment to macroeconomic stability, and it comprises of A, 3.3 for year 2019-20 and 3 for the 2020-2021 budget estimate, and B, Section 4.2 of the FRBM Act, which provides for a trigger mechanism for a deviation from the estimated fiscal deficit on account of structural reforms in the economy with unanticipated fiscal implications. Therefore, I have taken a deviation of 0.5% consistent with the Section 4.3 of the FRBM Act, both for RE 2019-20 and BE 2020-21. Accordingly, the return path is being laid before the Parliament as a part of the medium-term fiscal policy cum strategy statement. This fiscal path commits us to the path of fiscal consolidation without compromising the needs of investment out of public funds. Accordingly, net market borrowings for the year 2019-20 would be 4.99 lakh crore, and for the year 2020-21 it would be 5.36 lakh crores. A good part, this is very important, sir, a good part of the borrowings of the financial year 2020-21 would go towards capital expenditure of the government that has been scaled up by more than 21%. As I had previously mentioned, another about 22,000 crores have already been allocated for equity to fund certain specified infrastructure finance companies who would leverage it manifold and provide much needed long-term finance for infrastructure sector. That should spur the growth impulses in the economy. So I would now move to part B of my speech. Direct tax. No, thanks. Sir, part B of my speech starts with direct tax, sir. Honorable Speaker, sir, our government has spearheaded radical fiscal measures to ensure that Indian economy continues to tread the path of high growth. There are times when countries are competing with each other like never before to become the most attractive destination for doing business. Therefore, to make sure that India stays globally competitive and a favored destination for investment, we took a bold historic decision of reducing the corporate tax rate for new companies in the manufacturing sector to an unprecedented level of 15%. Similarly, for the existing companies, the rate has also been brought down to 22%, which is the lowest in the world now. This will enable companies to expand their businesses and make fresh investments in the coming future. Though we will have loss of substantial revenue due to these measures in the short run, I am certain that our economy will reap huge returns on this score in due course. So one quick verse from Raghuvamsa, written by Kalidasa. Prajanam eva bhutyartham satabhyo balim agrahit. Prajanam eva bhutyartham satabhyo balim agrahit. Sahasra gunam utsrashtam adatte hi rasam ravihi. Surya, the sun, collects vapor from little drops of water. He collects only from little drops of water. So does the king. They give back copiously. They collect these from the people only for their well-being. So the collection of taxes or the vapor from the water drops are only from small trickles, but they all go back to the people manifold. So the purpose of taxation and also the way in which it is done has been voiced even then. And this in Raghuvamsa refers to the Purvaja or the elders belonging to Ikshvaku dynasty, father of Ayodhyapati Rama, Dilipa, grandfather. It refers to Dilipa, the king. So in continuation of the reform measures already taken so far, the tax proposals in this budget will introduce further reforms to stimulate growth, simplify tax structure, bring ease of compliance, and reduce litigation. Personal income tax and simplification of taxation. So in the interim budget of 2019, our government exempted individuals having income up to 5 lakh of rupees from paying any income tax. Presently, an individual pays 20% on income between 5 lakh and 10 lakh and 30% on income between 10 lakh. That's the prevailing matrix. Further, currently the Income Tax Act is riddled with various exemptions and deductions which make compliance by the taxpayer and administration of Income Tax Act by the tax authorities a burdensome process. It is almost impossible for a taxpayer to comply with income tax law without taking the help from professionals. In order to provide significant relief to the individual taxpayers and to simplify the income tax law, I propose to bring a new simplified personal income tax regime wherein income tax rates will be significantly reduced for the individual taxpayers who forego certain deductions and exemptions. Under the new regime, sir, an individual shall be required to pay tax at a reduced rate of 10% for income between 5 lakhs to 7.5 lakhs against the prevailing 20%. So, anyone who's earning between 5 to 7.5 lakhs, sir, today pays 20%. We are now reducing it in the new regime, which is devoid of exemptions, to 10% only. So 20% comes down to 10%. Sir, the next example. For income between 7.5 lakhs to 10 lakhs, I earlier said about 5 to 7.5, now I'm saying about 7.5 to 10 lakhs. So for income between 7.5 lakh to 10 lakh, he or she will pay at the reduced rate of 15% only against the current prevailing 20%. Sir, similarly, for the income between 10 lakhs to 12.5 lakhs, presently the tax is 30%. For income between 10 lakh to 12.5 lakh, the present prevailing rate is 30%. That is now being brought down to 20% only. Sir, the income between, I spoke about 10 to 12.5 lakhs. Now, 12.5 lakhs to 15 lakhs will be taxed. At the moment, 12.5 to 15 lakhs is taxed at 30%. Now, those earning between 12.5 lakhs to 15 lakhs will be charged at 25% only. Sir, incomes above 15 lakhs will be continued at 30%, but no exemptions at all. Those earning up to 5 lakhs shall not pay any tax either in the old regime or in the new regime. So the proposed tax structure will provide significant relief to taxpayers and more so to those in the middle class. I just want to very clearly read out 0 to 2.5 lakhs exempt now, will be exempt in the new scheme also. 2.5 lakhs to 5 lakhs, 5% now will be 5% in the new tax rate. 5 to 7.5 lakhs, 20% now will become 10% in the new rate. 7.5 to 10 lakhs, 20% now will be 15% in the new. 10 to 12.5 lakhs, 30% now will now come to 20%. 12.5 to 15 lakhs, 30% now, 25% in the new rate. Above 15 continues at 30%. In the new tax regime, sir, substantial tax benefit will accrue to a taxpayer depending upon the exemptions and deductions claimed by him. For example, just to make it clear, for example, a person earning 15 lakh of rupees in a year and not availing any deductions whatsoever will pay 1,95,000 as compared to 2,73,000 that is paying now in the old regime. So his tax burden shall be reduced by 78,000 rupees. That will be the reduction in the tax that he has to otherwise pay. Then this is the example of somebody who earns 15 lakhs. He would still be a gainer. He would still be a gainer in the new regime even if he was taking deduction of 1.5 lakh under various sections of Chapter 6A of the Income Tax Act under the old regime. The new tax regime, sir, shall be optional for taxpayers, so there's no compulsion. Those who want to be in the old regime can continue to be in the old regime, in the old rates, in the whole sets of exemptions and deductions. But those who wish to come into the new are welcome to come into the new. An individual who is currently availing more deductions and exemptions under the Income Tax Act may choose to avail them and continue to pay the tax in the old regime. A new personal income tax rates will entail estimated revenue foregone of 40,000 crores per year. We have also initiated measures to pre-fill income tax return so that an individual who opts for the new regime would need no assistance from an expert to file his return and pay income tax. Sir, I will have to put this observation here. In order to simplify income tax system, I have reviewed all the exemptions and deductions which got incorporated in the income tax legislation over the past several decades. In fact, I have that list with me, sir. I have reviewed all the exemptions and deductions which got incorporated in the income tax legislation over the past several decades. It was surprising to know that currently more than 100 exemptions and deductions of different nature are provided in the Income Tax Act. No wonder the code is like this, the book. I have removed around 70 of them. I have removed around 70 of them in the new simplified regime. We will review and rationalize the remaining exemptions and deductions in the coming years, with a view to further simplifying the tax system and lowering tax rates. Sir, the dividend distribution tax. Currently, companies are required to pay dividend distribution tax on the dividend paid to its shareholders at the rate of 15% plus applicable surcharge and cess, in addition to the tax payable by the company on its profits. It has been argued that the system of levying DDT results in increase in tax burden for investors, and especially those who are liable to pay tax less than the rate of DDT if the dividend income is included in their income. Further, non-availability of credit of DDT to most of the foreign investors in their home country results in reduction of rate of return on equity capital for them. In order to increase the attractiveness of the Indian equity market and to provide relief to a large class of investors, I propose to remove the DDT and adopt the classical system of dividend distribution tax, under which companies would not be required to pay DDT. The dividend shall be taxed only in the hands of the recipients at their applicable rates. Further, in order to remove the cascading effect, I also propose to allow deduction for the dividend received by holding company from its subsidiary. The removal of DDT will lead to estimated annual revenue foregone of 25,000 crores. This is another bold move, sir, which will further make India an attractive destination for investment. Sir, concessional rate for electricity generation companies. In order to give boost to the manufacturing sector, new provisions were introduced in September 2019, offering a concessional corporate tax rate of 15% to the newly incorporated domestic companies in the manufacturing sector, which start manufacturing by March 31st, 2023, the corporate rate cut which happened in September. In order to attract investment in power sector, I propose to extend the concessional corporate tax rate cut down to 15% to new domestic companies engaged in the generation of electricity as well. So that corporate rate, which came down to 15% for the new manufacturing companies, will now be available even for power generation companies too. So tax concession for foreign investments. In order to incentivize the investment by foreign sovereign wealth funds of foreign governments in the priority sector, I propose to grant 100% tax exemption to their interest, dividend and capital gains income in respect of investment made in infrastructure and other notified sectors before 31st March 2024 with a minimum lock-in period of 3 years. Honorable Speaker, sir, in order to make available foreign funds at lower cost, I propose to extend the period of concessional withholding rate of 5% under Section 194 LC for interest payment to non-residents in respect of monies borrowed and bonds issued up to 30th June 2023. I also propose to extend the period up to 30th June 2023 for lower rate of withholding of 5% under Section 194 LD for interest payment to foreign portfolio foreign portfolio investors and qualified foreign investors in respect of bonds issued by Indian companies and government securities. I further propose to extend the concessional rate of withholding of 5% under Section 194 LD to the interest payment made on the municipal bonds. In order to incentivize listing of bonds at IFSC exchange, I propose to further reduce the withholding rate from 5% to 4% on interest payment on the bonds listed on its exchanges. Startups. Startups have emerged as an engine of growth for our economy. Over the past year, our government has taken several measures to handhold them and support their growth. During their formative years, startups generally use Employee Stock Option Plan, the ESOP, to attract and retain highly talented employees. ESOP is a significant component of compensation for these employees. Currently, ESOPs are taxable as perquisites at the time of exercise. This leads to cash flow problem for the employees who do not sell the shares immediately and continue to hold the same for long term. In order to give a boost to the startup ecosystem, I propose to ease the burden of taxation on the employees by deferring the tax payment by 5 years or till they leave the company or when they sell their shares, whichever is the earliest. Further, an eligible startup having turnover of up to 25 crores is allowed a deduction of 100% of its profits for 3 consecutive assessment years out of 7 years, if the total turnover does not exceed 25 crore rupees. In order to extend this benefit to larger startups also, I propose to increase the turnover limit from existing 25 crores to 100 crores. Moreover, considering the fact that in the initial years, a startup may not have adequate profit to avail this deduction, I propose to extend the period of eligibility for claim of deduction from the existing 7 years to 10 years. So the corporate rate cut in September has led to a lot of cooperatives who are asking for level playing field. Cooperative societies play an extremely important role in our economy in facilitating access to credit, procurement of inputs, and marketing of products to their members. These cooperatives are currently taxed at the rate of 30% with surcharge and cess. As a major concession, and in order to bring parity between cooperative societies and corporates, I propose to provide an option to the cooperative societies to be taxed at 22% plus 10% surcharge and 4% cess with no exemption or deductions. Further, I also propose to exempt these cooperative societies from alternative minimum tax, the AMT, just like companies under the new tax regime are exempted from minimum and alternative tax, the MAT. MAT for corporate tax, corporates were removed, and similarly now AMT for the cooperatives is also being moved. Medium and small and micro enterprises, the MSMEs, currently businesses having turnover of more than 1 crore rupees are required to get their books of accounts audited by an accountant. In order to reduce the compliance burden on small retailers, traders, shopkeepers who comprise the MSME sector, I propose to raise by 5 times the turnover threshold for audit from the existing 1 crore to 5 crores. So up to 5 crores, there wouldn't be a requirement for auditing of their accounts. Further, in order to boost less cash economy, I propose that the increased limit shall apply only to those businesses which carry out less than 5% of their businesses and business transactions in cash. So we wish to move to greater digitization, affordable housing. For realization of the goal of housing for all and affordable housing, in the last budget, I had announced an additional deduction of up to 1,50,000 rupees for interest paid on loans taken for the purchase of an affordable house. The deduction was allowed on housing loans sanctioned on or before 31st March 2020. In order to ensure that more persons avail this benefit and to further incentivize the affordable housing, I propose to extend the date of loan sanction for availing this additional deduction by 1 more year. Further, in order to boost the supply of affordable houses in the country, a tax holiday is provided on the profits earned by developers of affordable housing projects approved by 31st March 2020. In order to promote the affordable housing projects, I propose to extend the date of approval of affordable housing projects for availing the tax holiday by 1 more year again. I propose to extend the date of approval of affordable housing projects for availing this tax holiday by 1 more year. So next is the concession to real estate transactions. Currently, while taxing income from capital gains, business profits, and other sources in respect of transactions in real estate, if the consideration value is less than the circle rate by more than 5%, the difference is counted as income both in the hands of the purchaser and the seller. In order to minimize hardship in the real estate transaction and provide relief to the sector, I propose to increase the limit from 5% to 10%. Charity institutions. Acknowledging the important role played by the charitable institutions in the society, the income of these institutions is fully exempt from taxation. Further, donation made to these institutions are also allowed as deduction in computing taxable income of the donor. Currently, a taxpayer is required to fill the complete details of the in the donation done in the income tax return for availing deduction. In order to ease the process of claiming deduction for donation, it is proposed to pre-fill the donee's information in taxpayer's return on the basis of information of donations furnished by the donee. This would result in hassle-free claim of deduction for the donation made by the taxpayer. Further, in order to claim the tax exemption, the charity institution had to be registered with the income tax department. In the past, the process of the registration was completely manual and scattered all over the country. In order to simplify the compliance for the new and existing charity institutions, I propose to make the process of registration completely electronic, under which a unique registration number shall be issued to all new and existing charity institutions. To facilitate the registration of the new charity institution, which is yet to start their charitable activities, I propose to allow them provisional registration of 3 years. Faceless appeals. Our government is committed to bringing in transformational changes so that maximum governance is provided with minimum government. In order to impart greater efficiency, transparency, and accountability to the assessment process, a new faceless assessment scheme has already been introduced. Currently, most of the functions of the income tax department, starting from the filing of return, processing of returns, issuance of refunds, and assessment, are performed in the electronic mode without any human interface. In order to take the reforms initiated by the department to the next level and to eliminate human interface, I propose to amend the Income Tax Act so as to enable faceless appeal on the lines of faceless assessment. So faceless assessment was done, now faceless appeals will also be possible. Sir, Honorable Speaker, Vivad Se Vishwas scheme. Vivad Se Vishwas scheme. No dispute, but only trust scheme. If I can say it in English, no dispute, but trust scheme. Vivad Se Vishwas scheme. Sir, in the past, our government has taken several measures to reduce tax litigations. In the last budget, Sabka Vishwas scheme was brought in to reduce litigation in indirect taxes. It resulted in settling over 1,89,000 cases. Currently, there are 4,83,000 direct tax cases. 4,83,000 direct tax cases pending in various appellate forums, Commissioner of Appeals, Income Tax Appellate Tribunal, High Court, Supreme Court, and so on. This year, I propose to bring a scheme similar to the indirect tax Sabka Vishwas scheme for reducing the litigation even in the direct taxes. Under the proposed Vivad Se Vishwas scheme, a taxpayer would be required to pay only the amount of disputed tax and will get complete waiver of interest and penalty provided he pays by 31st March 2020. Those who avail this scheme after 31st March 2020 will have to pay some additional amount, but even then they can come in. The scheme will remain open till 30th June 2020. So the first thing is 31st March 2020, where you just pay the disputed tax amount, no penalty, no interest. In case you don't do it before that, you move over to 30th June, but where you pay some additional amount. Taxpayers in whose cases appeals are pending at any level can benefit from this scheme. I hope that taxpayers will make use of this opportunity to get relief from vexatious litigation process. So losses of merged banks. As part of consolidation of the financial sector, our government has brought out schemes for merger and amalgamation of public sector banks in order to ensure that amalgamated entities are able to take the benefit of unabsorbed losses and depreciation of the amalgamated entities. I propose to make necessary amendments to the provision of the Income Tax Act. Taxpayers' Charter. I mentioned it briefly in Part A. Any tax system requires trust between taxpayers and the administration. This will be possible only when taxpayers' rights are clearly enumerated. Towards this end, and with the objective of enhancing the efficiency of delivery system of the Income Tax Department, I propose to amend the provisions of the Income Tax Act to mandate the Central Board of Direct Taxes, CBDT, to adopt a taxpayer's charter. The details of the contents of the charter will be notified soon. Instant PAN through Aadhaar. In the last budget, I had introduced the interchangeability of PAN and Aadhaar, for which necessary rules were already notified. In order to further ease the process of allotment of PAN, soon we will launch a system under which PAN shall be instantly allotted online on the basis of Aadhaar without any requirement for filling up of detailed application form. Sir, our government brought in the GST as a historic reform of the indirect taxes in 2017. We also took a path-breaking step of simplifying and rationalizing corporate tax in September 2019. More importantly, we offered a rate of corporate tax which perhaps is the lowest in the world. Continuing on this path, we have now put the personal income tax at its lowest ever rate and totally removed the DDT at the company's hands. Further, the direct taxes are now the lowest, simplest and the smoothest. Direct tax on the startups have also seen many reformatory steps in quick succession. Even ease of compliance is seeing unprecedented changes. Last but not the least, personal interface with tax administration is at the minimum level. So last, indirect tax. Indirect tax, sir. As I mentioned earlier in part A of my speech, reforms are continuing in the GST. A simplified return shall be implemented from 1st April 2020. This is under the pilot run. It will make return filing simple with features like SMS-based filing for nil return pre-filling, improved input tax credit flow, and overall simplification. Refund process has been simplified and has been made fully automated with no human interface. Electronic invoice is another innovation wherein critical information shall be captured electronically in centralized systems. It will be implemented in a phased manner starting from this month itself on optional basis. It will facilitate compliance and return filing. Several measures have been taken for improving compliance. That has been a worry for many of the states, sir. Aadhaar-based verification of taxpayers is being introduced. This will help in weeding out dummy or non-existent unit. Dynamic QR code is proposed for consumer invoices. GST parameters will be captured when payment for purchases is made through the QR code. A system of cash reward is envisaged to incentivize customers to seek invoice. Deep data analytics and AI tools are being used for crackdown on GST input tax credit refund, and other frauds, and to identify all those who are trying to game the system. Invoice and input tax credit matching is being done, wherein returns having mismatch more than 10% or above a threshold are identified and pursued. Significant policy level changes have also been made. GST rate structure is also being deliberated upon so as to address issues like inverted duty structure. Customs. A number of measures have been taken for ease of doing business. India's quantum leap in the trading across border parameter of ease of doing business rankings by the World Bank is a testimony to these efforts. India's rank on this parameter improved from 146 to 80 in 2018 and further to 68 in 2019. Measures have also been taken for providing a level playing field to our domestic manufacturers, particularly the MSME sector, and for securing our borders. It has been observed that imports under free trade agreements are on the rise. Undue claims of FTA benefits have posed threats to domestic industry. Such imports require stringent checks. In this context, suitable provisions are being incorporated in the Customs Act. In the coming months, we shall review rules of origin requirements, particularly for certain sensitive items, so as to ensure that FTAs are aligned to the conscious direction of our policy. Speaker, sir, we are also strengthening provisions relating to safeguard duties, which are applied when surge in imports causes serious injury to domestic industry. Amended provisions shall enable regulating such surge in imports in a systematic way. The provisions for checking dumping of goods and imports of subsidized goods are also being strengthened for ensuring level playing field for domestic industry. These changes are in line with international best practices. Exemptions from customs duty have been given in the public interest from time to time. However, a number of these have outlived their utility or have become outdated. On review, certain exemptions are being withdrawn. Remaining customs duty exemptions shall be comprehensively reviewed by September 2020 for taking a view on their relevance. I propose to crowdsource suggestions for such reviews. Suggestions would also be invited in respect of the customs laws and procedures for aligning them with the needs of changing times. Sorry. Labor-intensive sectors in MSME are critical for employment generation. Cheap and low-quality imports are impediment to our growth. Special attention has been taken to put measured restraint on import of these items which are being produced by our MSMEs with better quality. Keeping in view the need of the sector, customs duty is being raised on items like footwear and furniture. Our policy of Make in India has started giving dividends. Need more water. Our policy of Make in India has started giving dividends. India is now making world-class goods and exporting such products. We have made considerable progress in medical equipments too. Thank you. We have made considerable progress in medical equipment too. Till a few weeks back, we were dependent on imports for medical equipment. Now, not only we are manufacturing medical equipment, but also exporting them in large quantities. This sector deserves further fillip. Government has also been committed to provide health services to all. Ayushman Bharat has made it possible to achieve the twin objectives of giving impetus to the domestic industry and also to generate resources for health services. I propose to impose a nominal health cess by way of duty of customs on the imports of medical equipment, keeping in view that these goods are now being made significantly in India. I'm finished. No. There are only 2 more pages. To achieve the twin objectives of giving impetus to the domestic industry and also to generate resources for health services, I propose to impose a nominal health cess. In case you feel like having a speech, just take something. No, I've got a statement. I propose to impose a nominal health cess by way of duty of customs on the import of medical equipment. Keeping in view that these goods are now being made significantly in India, the proceeds of this cess shall be used for creating infrastructure. So I think I will lay the rest of the pages, sir. Please consider as read. Thank you.
The first budget of this year and the first budget of the decade has been tabled, and indeed markets and a lot of market men were hoping for a strong caffeine shot. On that account, she has delivered because taxes have been brought down. Assumptions and the fine print, well, we'll talk about it right now, but the first market reaction is that markets are happy but that they are not too excited.
No, Nikunj, markets are down and significantly so.
That's because global markets were also down.
Volatility.
That's also global markets.
Yeah, from when we started off with the budget,
Right.
we went in flat and now we're down almost 200 points. The breadth as well is reversed. And I'll come to insurance stocks which are really bleeding.
Yeah, no, but Aisha, the first point which I'm just going to throw it to Swami is that, Swami, everybody was looking for a caffeine shot to boost the consumption part and investment. Has the finance minister delivered on that short-term hope of giving a caffeine shot to the economy?
No, I would say a dilute dose of caffeine at best. Certainly not full-blooded coffee. So we are, she has trod a reasonable line of balance. On the one hand, the fiscal deficit, she's taken advantage of the 0.5%, which is allowed under the FRBM rules, and say, okay, I'm going to go up to 3.8. However, we do not know what are the off-budget borrowings which she says she's going to list. So I think everybody else is going to say, okay, fine, I'm happy enough with the fiscal deficit figure. What about the total? I think we will now, like the RBI has core inflation and real inflation, we will now have to talk about a core fiscal deficit and total fiscal deficit. And I think the attention will have to shift to that. Let's look at that figure before we come to an actual conclusion on what has happened. I think people will be happy with the fact that some of the tax proposals, the income tax, basically you have made the middle class somewhat happier by allowing them to pay a little less if there are no exemptions. However, the gap between the top income tax rate of 42% and corporate tax of 15%, this gap is seen nowhere in the world. I thought it might be brought down. It is not being brought down. And to that extent, I think there would be some disappointment. Abolition of dividend distribution tax, I think, will come as a relief to the big traders. No doubt about it. That should be good for them. I regret to say on the protectionist thing, every year we seem to think that Make in India is to be done by more protection. We are continuing on that same trend this year with some additional protection on footwear and furniture rather than seeing any kind of rollback. And this does not speak well for the chance of are we preparing ourselves for entry into more free trade agreements. The higher our duties are, the more problematic more free trade agreements would become, whether with RCEP or the UK or the EEC or the USA. But broadly speaking, I would say that, there has been a reasonable amount of caution. You have not gone overboard on spending. That's a good thing. Some of the tax proposal increases, fine. You're reducing the number of exemptions. You're making life a little easier for the middle class man. I mean, those things are fine. The big broad picture is still unclear to me. Are you going to have enough public investment which actually takes place to produce a boom? I mean, I find budget after budget, there are declarations of good intent. Actually, it doesn't happen. And one reason is while it might say, let me spend another 100,000 crores on infrastructure, do you know how difficult it is to suddenly increase? I mean, it's not like spending money on buying chana or buying lollipops. The amount of time taken to prepare a new program is so long that it's a little difficult to do that. So I do hope we will get that particular boost. I would say the LIC being opened up, IPO would be very, very good news. I think this can fetch a lot of money, introduce a lot of enthusiasm into the thing. Overall, I would just say that it's a reasonable budget. a pretty good budget, but I would like to see the off-budget borrowing figures before I come to a firm conclusion.
For the fine print, but I'm going to get Vibha in here, and Vibha, the diluted caffeine shot has been given to the consumer, but the consumer today has options not to use life insurance, which is your products, in order to do tax saving. For life insurance, tax saving has been a big reason why the growth is coming. Are you disappointed, sad, unhappy, very unhappy? You're still smiling.
Yeah, because insurance is a long-term business. We take a 100-year view, right? So still smiling. But it's more in terms of sentiment because ATC was getting more and more crowded. So Q4 and the whole tax-led investments was actually going down. For HDFC Life itself, it was beginning to go down from about 44% to 35% in Q4. So still 35%, but not as acute as 44%. But the sentiment, as you can see, is that the smaller saver, especially those now who used to pay higher tax rate, will be on the lower slab, especially what FM mentioned, that without exemptions to ease tax filing, etc., might take that and say, why should I save for the longer term? Let me just take the money and hopefully not blow it up, but that could be an outcome. So while I understand the ease of business and ease of filing taxes, but long-term savings is a requisite for a young economy like us.
And for your business, it spells bad news per se.
It is not a positive news. And the other sting in the tail is also DDT, while we'll need to see what is the fine print. But dividend distribution tax was also providing life insurance companies a tax shield, because otherwise there would be double taxation. We are in the business of also managing money. So income that has already suffered dividend distribution tax, we would get a deduction for it against the tax we have to
listing.
pay. LIC listing overall definitely
Competition coming in the listed market.
It's already there.
How much you'll have to fight with LIC?
Well,
still with a smile.
Yes.
Yeah, very welcome. They're already there. They're a big player, and I think it is good that the opening shot has been fired in terms of disinvestment.
Okay. Umang Vora joins us now. Umang, let's get going in terms of your first key takeaway. I'm not talking about the messaging, but the actionable stuff which to your mind will change Cipla's life and a consumer's life.
Okay, thank you. Well, I was actually asking, thinking that the budget would give us three things, which is consumption, jobs, right? Boosting consumption, boosting job growth, and at the same time providing a little bit more of stability to the environment. So if I was to talk about all these three, I think at an Uber level, the fact that the government's increased the amount of spending it's going to do on infrastructure, the general increase in spending, government spending, and not coming down, I think that's a boost. I think the infrastructure sector and the jobs that they will create in the hinterland may be quite high. And I think that's a welcome thing. And mixed to this is all the tax benefits that the lower salaried, the 5 lakh to 10 lakh, the 10 to 15 lakh, the bulk of India, I think all of them, I think have got a great boost. So I think that's very appreciated. I think on the consumption part, a lot more could have possibly been done. I was hoping that personally that there would be more allocation to the PMJ than probably we've seen. The numbers don't seem to suggest that that's gone up dramatically, but that would have been a very good thing to give back more money to families that are otherwise spending it on healthcare. And let's look at stability. I want to talk a little bit about this because I think the decriminalization, the non-antagonism of the tax authorities, I think those are welcome moves. The decriminalization in the Companies Act, the measures to allow tax settlements. I hope that they had also done this for some other litigation categories that corporate India is involved with. But I think those are welcome positives. Overall, maybe a lot more could have been desired for health than what is probably in the budget today.
Quick comment from Bala. And Bala, why are markets nervous? Markets have pretty much got what they wanted, a focus on consumption, reduction on DDT, a number which is committed to the fiscal discipline, and the macro discipline is not going to be compromised for next year. It's a tick mark perhaps on all the so-called wish list. With this kind of a market, are markets unhappy about budget, or are markets today reacting to coronavirus?
Of course, market has reacted on two things. I would assume one is there is a widespread expectation that LTCG would be removed, and therefore that can actually boost the higher level of participation in the market. Second, of course, I think if you look at the fiscal, though they are keeping it for 3.8, the large proportion of fiscal balance is also coming on account of 2,10,000 crores of divestment proceeds they are taking, which includes, of course, LIC's divestment proceeds. So that's something probably we could see some kind of slip in that. And third, with respect to the any private sector investments, the big boost investment that could come, while government, of course, allocating more money towards building infrastructures, building towards the rural economy, mainly on the agriculture sector and so on and so forth. It's good and can, I think as somebody else also mentioned about, can boost the level of employment that could come from inner parts of the inner lands of the countries. There's absolutely no doubt on that. But having said that, there is no major investment that could come from the private sectors. Therefore, the capital expenditure coming from the private sectors could also be relatively less as a result of that. I think that's why I think the market, of course, is reacting. But I think if you look at it in the broader basis, I think given the constraint that we have, some of the expectations like dividend distribution tax is something actually will improve the ROE of companies and reduce the tax burdens at the companies levels. And of course, at the individual levels, have gone has to pay the tax. At the same time, giving an option to the taxpayers to choose either exempted related tax paying structures or without availing their exemptions and then pay tax, where it reduces the tax burden for the large pool of middle class income payers, should also, I think, boost the consumptions. So quite a balanced approach, I would say. The market, of course, reacting because the pending
and budget is all about taxes, taxes and taxes. In the fine print, anything which you managed to figure out, Shefali, so far, which we can say, oh my God, that was not in the speech, so it's come out.
We are yet to see the fine print, Nikunj. But overall, I think on the tax front, at least, the finance minister seems to have delivered fair bit. And almost all the changes that were expected, barring the long-term capital gains, have come true. So this is overall a very good budget from a tax perspective.
Just one clarification, and correct me if I'm wrong. So TDT has been removed, but is it going to be included in the income of the shareholder?
That's correct. That was always the anticipation. It was never the thought that they would completely do away with taxation of dividends. But it does benefit that set of investors, who are taxed at the lower marginal rate, as well as foreign investors who are coming from treaty countries, and therefore the treaties offer a lower withholding rate. And that is where I think they will see a huge benefit by declaring the dividends from India or using it for reinvestment.
Okay, the man who runs India's biggest real estate company, Ashok Tyagi, joins us now. Mr. Tyagi, if I pick a leaf from what markets and what's happened to your stock, markets are saying real estate sector needed a lot of help, nothing has come from the finance minister, and there is a sell-off in your stock. Whereas consumers will get more money, but the quantum of money which they will get because of tax cut is not going to generate real estate demand. So can I say that the real estate sector and you personally at DLF are disappointed?
Okay, so I think, unfortunately, the answer cannot be a straight yes and no. So really, if you see the real estate sector, you have to look at it cumulatively. There's already an entire REIT regime that's been introduced and is establishing itself, which is a huge, fillip. There was the 25,000 crore fund that the FM had introduced, which to be fair, hasn't yet got off the ground, but I think is very close to getting off the ground. So there were two big initiatives already done well before the budget. And of course, there was a reduction of corporate tax rate. In this budget, obviously, people were expecting, more big bang reforms, but it is not that real estate has necessarily been overlooked. If you were to just, one, on the smart cities, then we'll have to see how that pans out, but for the first time, they're talking of PPP in the smart cities. There's also the entire thing of building data centers in private space, and that again is potentially one thing big, especially for a huge rental company like ours. On the other matters, the approval window for affordable housing tax exemption has increased by a year. Ditto for the interest subvention piece. The difference of that circle rate with vis-a-vis transaction price, which was earlier a very narrow 5%, has increased to 10%, which is slightly more. And again, the DDT exemption, at least from a company standpoint, is a positive. I think the two pieces which we had hoped would happen haven't happened. One was clearly we were all hoping that the interest exemption for housing loan interest, even in the hands of non-affordable customers, the bigger customers, would increase from the 2 lakhs it is, and that obviously is not going to happen. And the second point was obviously that while obviously DLF itself is not impacted by it, but we were hoping that from a stressed developer standpoint, there would be a window of restructuring that will be announced like it was for the MSME sector earlier. So those are, I think, the two disappointments. But I think given the entire constraints within which the FM was operating and the number of initiatives that she had to do, I think it's a decent set of packages that's been announced.
So Tyagi, all is not lost because a lot of announcements nowadays are happening outside the purview of the budget, like the corporate tax cut. But if you really had to tell the finance minister the three things that that are needed right now to prop up real estate as a sector, what would it be besides what you've already highlighted?
So I think clearly, more money in the hands of the consumer was important, and linked to that the interest exemption on housing loans, I think, which is at a paltry 2 lakhs, did need an increase. The stressed developers getting a window for restructuring was important. We were hoping for some additional incentives on rental housing, etc. So those are the things which we were hoping that while we are ourselves not slated to go immediately for it, but that like the InvIT structure, there would also be the announcement of a private REIT structure that could come in. So some of these things, I think, this is an evolving thing. Frankly, as we have seen now in the last year, budget is not the be-all and end-all of the policy announcements. But clearly, these are some of the directions that we would hope that the government, sort of heeds and continues to react to.
To Nilesh in a minute from now. Nilesh, let me just take before that one very small comment from Umang. Umang, last time the budget, when the taxes were announced, when super tax on rich was announced, dividend distribution, there was no clarity, nothing came on LTCG. So from that standpoint, this entire feeling which came through that, okay, government is against wealth creators, I guess at least that feeling has got arrested. Will I be wrong if I say that, Umang?
No, I think I don't think you'd be very wrong if you were to say that. I think, look, the finance minister last year said that if you're wealthier, you ought to be paying more for the society, and I think that that's gone down relatively well with most HNIs. I don't think there's an issue there. I think the bigger issue was really providing stability. A lot of them were worried about the government reopening cases, about criminalizing, acts in the Companies Act, not providing certainty on a policy environment. So I think this budget has kind of moved the needle there, right? About moving some things around the area, but also most HNIs and everybody else in the environment, in the society today realizes that the fiscal math, right? At this point in time, I'm not sure the government should cut necessarily its expenditure, because I think what's needed is more jobs. So the government expenditure does need to rise a little higher. And therefore, if I don't think anyone was expecting in the HNI categories or the larger tax-paying categories a necessary reduction in the rate. So from my perspective, I think you're going to be right if you say that the FM has moved a little closer towards trying to work with the HNIs without reducing the tax rate, but doing other things that makes it a little bit more simpler.
I think Mr. Pawan Goenka as well is with us, or will be shortly ready. Can I take it across to him? Okay, Mr. Pawan Goenka is right there. Mr. Goenka, hi, afternoon. Thanks for joining in today on ET Now. More more money in the hands of the consumer. Is it going to be more M&M cars on the roads then? Are you happy with the budget?
Well, obviously the income tax reduction that has been done, it's more for the middle class, and the total benefit may be of the order of 30, 40, 50,000. That is good for sort of small ticket consumer items, and those sales will go up. For cars, it may make a marginal difference, but I don't think it directly will have a huge difference on demand for cars, especially given that in the next couple of months, the prices will go up.
A very quick take from Maithili on this. Maithili, we've not looked at the fine print. The entire budget document is just about to hit our mail in moments from now. You always use this terminology of watch out for smokes and mirrors. what could be the smoke in the mirror in this budget? Why do you think the assumptions for FY21 will get challenged?
Well, for me, the main doubt really is about the disinvestment target of 2.1 lakh crores, because this year's was 1.05 lakh crores and we've achieved just about 18,000. So given that, and given the fact that disinvestment is always part of the government's policy and they've been so ridiculously slow to really act on it, I'm very skeptical over that 2.1 lakh crore, and that's a humongous amount, because unless the economy really recovers, we're going to see the same shortfall in revenue receipts next year as well as this year. Of course, the increase in the GDP growth that we've got, the bump up that we got yesterday, courtesy the revision might help. But at the same time, I think this is a very worrisome number of 2.1 lakh crores, 90,000 crores of which is strategic disinvestment. Now, I'm not sure that the government really will do it, given the kind of political opposition they seem to have run up against. So that is one big really worry for me. The other worry is really is that if you look at the revenue deficit, it's still very high for the next year. As much as 77% of our fiscal deficit for next year is revenue deficit. So I think the opportunity to improve the quality of your fiscal deficit, which is sorely needed, that seems to have been given the go by. So I think these two things, and one last thing, there's no money set aside for recap bonds for public sector banks. Given that public sector banks will have to increase their provisions, we've already seen the RBI's financial stability report, which said that the NPAs would go up. I think we'll find the PSU banks falling short of required capital and may not lend.
Right. Okay, so Mr. Goenka, you said there is going to be more money at the hand of the shareholder. The taxpayer will have more money now. But where do you think this budget has lacked or has done something special to fix the basic challenge? The basic challenge is investment has broken down, consumption is not there, exports have plateaued, and government spending is measured. These are the four basic issues, Mr. Goenka. Where do you think this budget has done something different to address it? Because whatever allocations are there, Mr. Goenka, they are all incremental. Little bit here, little bit there. There is no big departure from the last year's budget, excepting last year's budget taxes went higher and this time taxes have come lower, at least on the personal tax side.
Well, I would have to say that while there have been good focus on the three themes that the Finance Minister talked about, the aspirational India, economic development and caring society, those are very well articulated. But where the budget perhaps should have done more is how to revive demand. And as we have been saying all along that the biggest concern right now for the economy is how to get the demand cycle going. And there have been a lot of indirect things here, but at least right now, without seeing and going to detail, it's only 10 minutes. Without going to details, I don't see that big sort of thunder that could potentially sort of give a fillip to the demand. There are a few things talked about in how to increase manufacturing, but that's again on the supply side, and that will not necessarily increase the demand. So the three things about the government expenditure, about the more money in the hands of the customers or people, and infrastructure push. So government expenditure will probably go up, but like you said, it's not something very big. Maybe the 3.5% should have been taken to 3.7, 3.8% to allow the government to spend more money. As far as income tax is concerned, I still don't know how the math would work out, because exemptions are being taken out, and for people earning up to 15 lakh, I don't know whether exemptions benefit will be completely offsetted by the reduction in the tax cut. We'll have to do the math and see what the benefit would be.
Mr. Goenka, the big issue in the economy was not just the slowdown, but also that liquidity was completely jammed. Do you think the budget has done enough to address that issue?
The export issue, you said?
No, just liquidity overall in the system, sir.
Liquidity. Yes, there have been few things that have been talked about, but I cannot fully make out from that on how much impact it would have. And again, one will have to go through some analysis of that. I think the issue was on sort of in the radar, and I cannot right now say whether enough has been done.
Expected lines, excise duty on tobacco and cigarettes has gone higher. Nilesh Shah, can you hear me? Okay, Nilisha is going to be ready in a second from now. Let me very quickly mark markets once again. And if I have to just look at where, let's look at ITC, guys. Let's look at ITC. IDC cigarette excise duty on cigarette and taxes has gone higher. Shefali, excise duty, does it come in budget?
They always announce, especially anything to do with the tobacco always makes it to the budget.
I'm not surprised.
Yes.
No one's surprised with this one. Markets, however, they've recovered from the lowest point of the day. So, it's just, Aisha, we must remind our viewers that today markets are not going to be reacting to only budget. They will be reacting to this Saturday effect, and then the handover from US markets last night was so poor. One of the biggest gut-wrenching fall Dow Jones has registered last evening. So that adjustment somehow will have to kick in. From my standpoint, I guess this budget is going to be one of those no harm budgets, excepting for insurance, right?
Absolutely.
But is it a
No, I
good,
think it's a
good
no harm
harm?
budget
No
for
harm,
everybody,
yes, but
excepting
no good
insurance.
also, or no?
No, I think
I don't
certainly.
know how to come back with this question.
I think there is good. There is definitely good.
There is, yeah. Especially on the pension. Yeah, there is.
Mr. Tyagi, there's a long-awaited demand that real estate needs a booster. And I wonder what that booster really could be.
I think the fundamental issue on real estate continues to be that magic key to kickstart all those stalled projects. I don't know the number of stalled units. It is anywhere north of 200,000. So I think till I also don't think that all the sort of solutions lie in the budget. But clearly, till the banking system, the regulatory system, and the government are unable to find a consensual solution on how to kickstart a majority of those stalled housing projects, they will continue to be an overhang of sentiment, of actual money being blocked by customers. So obviously, select developments will continue to do well, but I think overall, especially in the 2 or 3 bigger geographies, I think till such time that really a magic solution is found, we will continue to have some degree of stress.
Bala, can I go to him?
What I appreciate the budget is they are quite deep dived in terms of what could drive the growth.
Okay. All right, guys. I'm going to go to Mr. Pawan Goenka for one quick closing. Well, pardon me, just one of those days where we're just losing some connection.
It's Saturday. I think
It's
people are now saturated. It's been a very long speech, the longest in the history. They're kind of done
This is
for
the
the
longest
day.
in industry, I would imagine.
Yeah, it is.
I mean, Jayesh is working on, every year we come up with a concept called word cloud, where we analyze that which word has been explicitly used in the budget speech. Last year it was tax. This year I don't think it will be tax. It's going to be growth or something else. Let's see.
Yeah.
We're just waiting for the
This
data.
has now become India's longest budget speech by time. She's broken records.
All right. Something new, which we learn and we understand every day. I'm going to get one closing comment from Umang Vora. And Umang, this entire, idea of removing DDT at a corporate level and giving it back to the receiver. For an individual who is in the HNI category, it means nothing. But for somebody who has little, small holding in equities, I think this is a great move. What is your sense?
I completely agree. I think it's a great move to give it back. And realistically, I mean, let's step back for a minute. I think most corporates would probably jump up the dividend that they pay out for the tax that they're losing. Right? So earlier they would had to pay the DDT and then they had to pay dividend. I think most corporates would probably gross up that amount. So eventually the shareholders would be getting a lot more of the dividend. And I think what happens with that is that, they have various ways to see how they want to use it. So I think it's a great positive. I think it's on the same theme of giving more back to people to drive consumption. And I think it's a great move.
Ali, you wanted to make a point? Sorry.
Yeah, so on the dividends, I think the other, the positive of this move of switching it back to the shareholders is that a lot of litigation that was there on 14A deductions that were denied to the shareholders will now no longer be there. So I think from a dispute resolution perspective, this is a great move too.
Ramdev Agarwal joins us now. Ramdev, there are two things from a market standpoint. One, consumers will get more money, and the incremental money which will come because of tax saving, it may not boost up the real estate demand, but it will certainly boost the discretionary demand. Second, LTCG has not been changed, but the structure of dividend DDT has been changed. Let's get comments on the three topics which I just raised.
Yeah. So let's talk about DDT first. DDT has been abolished at a company level. Now it has far-reaching effect. Right now it is a structural change. I mean, it has been going on for last 20 years. So this particular structure has been changed. So that is a good thing to happen. Now, so a lot of small shareholders who were unnecessarily paying 22-25% dividend distribution tax in the through the company's deduction, now at least they will get their marginal tax rate. So if somebody is retiree, they don't have to pay any tax. So to that extent, 20-25%, if the dividend remains same, they can get. So for a minority shareholder, it is a very good move. But for promoters, I think one has to see what is the implication, because the promoter shares held directly in his name, it means he has to pay 43.5% tax. So earlier total tax used to be 33%. My understanding is that tax on larger dividend portion will go up to 43.5%. So it will be very, very coercive for the promoters, but good for the minority shareholders. That's the prima facie understanding I have.
Now, Nilesh, do you fall in the HNI category, the ultra HNI category? I won't get into it, Nilesh. But
maybe
this
FII.
Maybe which category? So I won't get into this. Budget, Nilesh, is not the forum to get into it. But Nilesh, prima facie, this is a no-harm budget. Unlike last time when we got worried about government's attitude toward taxing super rich, nothing came out in terms of an economic booster. This time, Nilesh, 8 out of 10 tick boxes of the wish list which the industry had, markets had, they have been ticked. Yet the market reaction is very feeble.
Yes, Nikunj, I think because clearly the markets had also expected a LTCG tax going away. So that has not happened. Two is, of course, for financials in the short term, there is going to be a knee-jerk reaction, because for banks, the insurance cost on deposits will go up, and of course the allocations to mutual funds and insurance companies by individuals now may not essentially grow at the same kind of pace. So that is something which is going to basically impact. And then of course, third, of course, we have some of the global headwinds which have been there, and the market is now again trying to kind of come back and address those headwinds as well. So I think on the whole, I would probably say that the knee-jerk reaction that the markets are giving right now is both a combination of global headwinds and some of the expectations which were there around LTCG tax, which of course have not been met. So I think that's essentially the dual impact which the market is right now facing.
Even in our pre-budget chats as well, you've always talked about that the messaging has to be right for the market fraternity. Did that come across really in the Finance Minister's speech today?
Yes, I think there's been a combination. It depends upon what you kind of really look at. So if you look at, of course, a lot of the challenges which some of the foreign investors had, sovereign wealth funds had, essentially a lot of their concerns have been addressed. The dividend distribution tax issue, that has been addressed. So I think basically for the financial investors, there is of course some aspects to take home, but of course there were one or two areas which have essentially not got addressed. So I think on the whole, for financial investors, it's been a mixed bag.
Worried about what will happen to insurance now that deduction option is not available. Will Birla AMC be looking at buying insurance stocks on Monday morning? Monday morning, you think budget would be forgotten and we would be talking about SARS and other things?
Of course, it's a surprise provision, Nikunj. Definitely, the extent of focus that I think was brought in under the Section 80C, the big collections are coming through both the insurance product and the ELSS product. Definitely now giving an option to the taxpayers not to avail those exemptions and then reduce your tax burdens, and then making it easy for the filing of tax returns. Definitely, I think we'll shift away some of the investors who have been traditionally using the 1,50,000 rupees route for saving tax as well as create long-term wealth. While of course the negative from the long-term wealth creation for those investors' point of view, definitely it makes sense from the individual point of view. But of course, stocks of course is about reaction, is more of temporary reaction. Ultimately, will come back on what is the rate of growth that I think on an overall basis I think will come. Again, we will have to look at it from the ELS schemes point of view. As from part of the mutual fund assets, ELS is not the large component of the assets under management. It's about 5-6% of the total equity assets under management that one would have. Therefore, the stock I think should not get reacted too much on these provisions alone.
Ramdev, just wanted to get your reactions on, the fact that LIC IPO has been announced. What did you make of the disinvestment announcements, which was just a sort of brush through? One was awaiting some more clarity, maybe a detailed roadmap on how disinvestment is going to play by, because these are things that the market was awaiting. Ramdev?
Yeah, so I think, yes. So I think this LIC divestment and listing of LIC is a huge event, and I think it will bring to the fore that insurance is a very seriously large sector, and the prominence of LIC, and actually the scrutiny of LIC's own books, which was, since it was very large book and it was not listed, so people are not getting to know what exactly is happening. So I think that will more transparency will come in the books of LIC, and since it is the by far largest, I think 50% market share of all the life insurance is there, and I think the total market share of their underwritten policies must be very high, maybe 70-75%. I think it is going to be one of the huge event in it's like a Armco listing. So it is a very defining moment, and that shows the government's intention to look at the markets for providing liquidity and valuation for their large enterprises. I think this is a very significant event for the capital markets.
Singhania, life as normal or little bit of smile has come now that the budget event or the budget risk is over? I mean, you can go for your Saturday night movie without thinking about how much taxes you will pay now, if you're worried about it in the first place.
Yeah.
Come on, smile more, sir. You'll be not paying more taxes.
I think it's been, frankly...
Somehow Sunil, Bala, Nilesh, Naren and Ramdevji, nobody is smiling.
I think the budget...
Okay, Sunil. Now you're smiling. Let's talk.
No, I think it's been a non-event, frankly. It's been a little bit disappointing. We would have loved a little bit more on the structural sort of push towards kickstarting the economy again. And I think one other thing is it again gets a little complicated as far as the taxation is concerned. You have an option of opting for one or the other. Again, you do multiple calculations. And I think this dividend distribution tax on the face of it might seem to be welcome, but all said and done, the marginal tax rate on dividend will now become 43%, which is much higher than what it was earlier. Plus, the reason why the dividend distribution tax was introduced was there was a large number of dividend recipients who were not paying taxes on those dividends. So again, those whole complication of whether TDS will be applicable on the dividend which the companies deduct and so on and so forth will come into play. So I think all in all, I would say it's a little bit of a slight disappointment as far as the budget is concerned. But you are right, there's been no increase in taxation, there has been no sort of unfurling of any surprises. So it's okay, status quo.
Sunil, I must confess that if we were having any awards over here, the most honest answer award would definitely go to you. Naren, are you going to be as honest in critiquing the budget? What were your positive and negative takeaways list?
See, basically we have to look at who are the people in trouble. Clearly, equity market people who are not in trouble. You are at all-time high. Markets have done well for years now. Basically, you have had some 8-9 years of markets doing well. You are at all-time high. So who are in trouble? Clearly, the rural area people were in trouble. It's not an area who can be helped very easily. You have SMEs who are in trouble, again an area who cannot be helped very easily. You have challenged middle class in trouble. And I think the tax concessions that have been given are for the challenged middle class. Suppose you are a household who is not able to save on taxes, then you can't, you had a high tax rate. Today with the new tax concession, if you are a challenged household who can't save, at least your tax rates are lower. So I believe at least they are trying to help the challenged middle class household. And in real estate, they have a problem. They've kept trying to help affordable housing. But you have one overvalued real estate problem sitting in some of the metros. And over the years, they have not known how to solve that problem. How do you solve the problem of $1 million houses and multi-million-dollar houses in Bombay and Delhi? That's a problem they are struggling with to solve. So I think the easier problems they have been able to solve. Now, how to help the million SMEs in India, that is the challenge. And I think for the equity market to have got huge boosts when they have been the biggest beneficiaries of all this globalization and everything else at this point of time was, I think, unnecessary. We need to get help, but we'll get help when the market in some other year is at a low and not this year. That's how I looked at it. I think clearly, if you look at it at this point of time, we need the rural SME and the real estate sector to revive. If they revive, I think the economy will revive automatically.
Gentlemen, stay with us. Shefali, I'm going to quickly come to you because the fine print is out and I believe there are a lot of notes to taxation. Just why don't you quickly enlist what we need to look out for?
Right. So I think we are still reading the fine print, but one of the main changes seems to be again in relation to ease of doing business. There was an ask that the foreign companies that receive only royalties or technical service fees, they should not be required to file the tax returns. So there are certain dispensations in the finance bill on that. The announcement on the faceless appeals is also very encouraging. We already have faceless e-assessments, but now that will be extended to cover the appeals as well. The new dispute settlement scheme along the line of the indirect taxes that was announced in the last budget, I think that is also looking promising. Although there is no concession on the tax claim, 100% taxes have to be paid, but the concession on interest and penalty will certainly attract some taxpayers to come forward with that. Lastly, the taxpayers charter. I think we've never had the finance ministers address that and wanting to include that in the statute itself. So this is again a very promising sign that there will be more transparency.
You've used tax 5 times in last 30 seconds. Nirmala Sitharaman has used it today 132 times in her speech.
That just says it all.
Her speech was also longest in the
for the
history.
first time, tax has been used so much and yet taxes have been reduced.
Yes,
Let
indeed.
us recognize that. Last time taxes were used, but taxes were increased.
Yes.
So that is good news, and I am still going to request everybody on my panel to smile once again, because not all of them on the panel pay less taxes, but a lot of Indians will be paying less taxes, because even though she's used tax 132 times in this tax speech, taxes have gone down. Nilesh, the advantage given to sovereign fund, no one's spoken about it. Nobody in the panel has raised it.
No, absolutely. I think it's a huge advantage, and I think it provides a huge trigger to sovereign wealth funds to basically come into India and kind of invest and finance infrastructure projects. This was something which was badly needed, and I think it's happened. So I think that's a huge positive. And I think the government has done a nice balancing act by extending this benefit only to sovereign wealth funds, because they clearly have a long-term perspective and are essentially not looking out for some really super high returns. So I clearly think that this is very positive. You're going to get quality investors, and I think that quality money is now going to flow into a lot of big bang infrastructure projects. These are sovereign wealth funds who have deep pockets. So I think this essentially, I think, is a huge positive for essentially the overall investment cycle as well as for the infrastructure sector of India.
Right. Bala, just wanted to get a sense from you about how do you treat consumption right now? Because we know that's a sector which has been jammed for almost a year now, be it autos, be it FMCG, barring a few odd exceptions here and there. But now with more money coming in the hands of consumers, that immediate effect will be felt on low ticket items, maybe two-wheelers, maybe more soaps and shampoos. Do you now per se tactically turn bullish in some of these consumption names?
I think more than turning bullish, whether the trajectory will look upward as against what you have seen in the last 1 year, The answer is definitely yes, given the fact that the high focus has been given for the rural, high focus is given for improving the infrastructure in general across the country, which again means I think more employment opportunities could also be created, the new business opportunities could be created, and that I think detailing to the extent that they have done, I think looking at the every business activities from the district level, that's in something, my view, not only create employment, can also boost the consumptions. I think the personal income tax, what you talked about, I think ultimately everyone actually would like to have an ease of filing of tax returns and choosing the option of the new tax regimes. Naturally, of course, it gives more money in the hands of people, therefore the spending can go up. I think from the sector's point of view, while of course there has been a big recognition from the money managers' point of view, despite they trading at high PE multiples, of course it now gets further justified on the trajectory that can change in terms of retaining the high valuations.
Okay, Bala, thank you very much. Ramdev, just a follow-up question. Now that the DDT treatment is changed, do you think it's a matter of time that something on buyback tax should also come? Because then the arbitrage again comes back, Ramdev. And if not, then is this a re-rating movement for companies like IT and other sectors which have done buyback?
Not really. I mean, see, stock market prices will go up on its earnings rather than on the DDT or dividend distribution tax. But I think in the finer prints we have to see whether the buyback tax or DDT in lieu of dividend while you are buying back. So has that been abolished or it stays as it is? Is that clear, Nikunj? That there is no change in the buyback tax?
Right. Okay. Sunil Singhania, now let's talk about what gets re-rated. Now we don't know whether earnings will get re-rated or not, but perception surely should get re-rated because more money in hand of consumers. Direct dividend tax goes away, so companies which have a high dividend yield, suddenly they become more attractive. Is this a no-brainer now to assume that the high P multiples of consumers will sustain because a caffeine shot has been given to consumers, and companies which have a high dividend yield, they need to be revisited?
So there are two aspects to it. One is, the saving of tax is not as easy as it's been made out to be. So it's definitely not 78,000 because everyone has life insurance policies, everyone have provident funds. Those who are working have compulsory provident funds, and to that extent, that 1.5 lakh deduction from your income in ATC you used to avail. There were ATD for medical insurance, and there were a lot of other exemptions, particularly if you are staying in a rented property and all. So if you actually add up all the incentives which were available or all the deductions which were available, in fact you are better off in the old regime than the new regime, which means that your tax deduction is almost zero. So I think there will be definitely a lot of people who would have some benefit, but it's not going to be very substantial. But whatever it is definitely going to lead to either an increase in consumption or maybe increase in houses also, specifically on the affordable side if your disposable income goes off because your ability to pay EMIs increase. So that may be the case. As far as dividend is concerned, I think see a lot of Indian companies have dominant shareholding from the promoter family. On an average 50-55% of the shareholding is with the promoters. One is I still have to read the fine prints of what happens in case of overseas promoters, because they will also be liable for dividend tax. And to that extent, I think you're just transferring the tax from the company's hand into the hands of the receiver. So yes, companies might end up paying more dividend to the extent of the dividend distribution tax, but the net receipt in the hand of the investor might remain the same, or in fact, in case of super rich investors, might in fact increase. On your question about the arbitrage of buyback tax, I think there will be some arbitrage because the buyback tax remains, but obviously you have a lower tax because the buyback tax is 20% plus surcharge, and in the hands of the investors it's a long-term gain, so to that extent you will have an additional 10-12% tax. So I think there is some increase in disposable income, but it is not going to be uniformly 78,000 across all taxpayers.
Okay, let's talk about one announcement which came out in the budget this time around. Naren, the fact that deposit insurance has now been up to 5 lakh rupees as opposed to the earlier 1 lakh rupees, does it spell bad news for banks?
Why should it spell bad news for banks? I mean, absolutely, it should not spell bad news for banks. Clearly, the strongest banks in the country, it could mean that the strongest banks in the country would benefit out of lower bank insurance, and the weakest banks in the country would benefit out of lower bank insurance. So if you are investing in a weak bank, maybe now you will be willing to invest 5 lakh rupees. That part of it is true. It is not bad for banks as such. It is positive for banks, because it means that you can actually comfortably take a 5 lakh exposure without having to worry about the health of the bank. It puts a lot of pressure on the regulators, because at 1 lakh, with the limit which was set earlier, the entire risk was much lower on the DICGC. Now the risk is going to be much higher on the DICGC, and there is going to be, I'm sure, a higher premium which has to be collected by DICGC to cover this higher risk.
Okay, so poorer health banks basically are the ones which have to keep larger reserves, and that's where they need to worry.
So Aisha, the numbers have to be understood, that how much of that is deposit, what would be the cost, what provisioning it would be done. I think this measure has been done largely because we had a debacle at a corporate bank. So this is protection of the depositor, and this is something which, in a sense, I mean, you think about it, somebody has a 10 lakh rupee or a 15 lakh rupee deposit, 60 lakh rupee deposit, you have 1 lakh rupees of insurance. So it's high time this law, this protection should have got amended. Ramdev, I'm going to, get one quick closing comment from you. Monday morning when you come back, should we talk about budget or the virus or earnings or something else? Is it life back to normal? Is budget history now?
Yeah, budget history. Budget history, we get back to looking at individual companies the way it is. I don't think there is any major impact either way. It's a status quo situation.
Insurance sector, where we understand that the exemption benefits which insurance companies were getting, that may not be true, because now there's a different law which is at play. I'm asking you this because I know you have interest in insurance and your funds do have a active exposure to insurance stocks.
Nico, you asking me?
That's right, Ramdev.
So I think we need to see the finer points, but people buy insurance not only for the a little lower tax rate or things like that. So there could be definitely at the margin some impact, but I don't think the longer term impact of the prospects of insurance industry is going to change. I don't think so. So yes, there could be some short term correction of 3-4-5%. But I think that will be forgotten very quickly.
Completely agree with Ramdev ji. This is all just, I think, Monday morning we'll be back to normal, and we need to focus on all the opportunity. Also, I think that this is a option and not something that we are foregoing. So somebody wants to take ATC exemption, this is there. And he might be better off. He might still want to save longer term. And also there are some fine print details emerging on pension. We'll have to watch this space, because she did talk about supporting the entire PFRDA structure, and also a lot of assurances that this is going to expand. So we'll need to see about separating the NPS trust and what's in the fine print. I'm beginning to hear that there are some interesting positive things in the fine print. So we'll read a little bit more and revert back. Yeah.
Okay, so it's not that bad, right?
It's not bad at all.
Okay.
Business
you can enjoy a Saturday night.
Business as usual.
You're still going for your Saturday night movie?
Absolutely.
Okay. So, Naren, let's understand the ultimate factor which drives the market. That's earnings. Now, earnings are the basic truism which will drive stock prices higher. Can I safely assume that now that dividend distribution tax, the framework has been changed, it is good news for companies which are giving dividends and companies which want to give dividends, and if dividend payouts is going to increase, that is going to be expanding the perceived P multiple of companies?
I'm not very sure, because I think, people have to go back to late 90s. Luckily I was in the markets then also. At that point of time, when the reverse switch was done from normal to dividend distribution tax, the market rejoiced, because at that point of time, compliance was very poor in whatever dividends was paid, no one was paying taxes on those dividends. I think the level of compliance has improved significantly with DMAT and various other things. So I think, I believe that this is a neutral move. I think it is a very good move. Why is it a good move? Because if someone is getting 50,000 rupees totally as income from dividends and has no other income, that person was paying earlier, effectively the old entire dividend distribution tax was being paid by the company. Whereas today, if someone is getting 50 lakh rupees as dividend or 5 lakh rupees as dividend and the overall income of that person is 1 crore, now that person will actually pay more than 30% as dividend tax on that dividend. That is a much more equitable model. So I think the current model is much more equitable. Does it change the way we look at investing? I don't think so. I think clearly at this point of time, we need a economic revival in the sensitive industries. We have a very, very polarized market in a set of stocks. We need to see economic revival. Today, credit growth is at record low. We have to see that revival. I think the revival will happen, but it will happen over a period of time. And along with that, today you have to remember you have problems like these coronavirus and things like that which we don't understand. And so I would say we are in for a choppy period with high valuations in polarized stock and reasonable valuations in the non-polarized stock coupled with problems. So I think we end up with a choppy market and we have to be prepared for it.
Well, let me thank all of you individually, Sunil, Naren, Ramdev. Thank you for joining us. It's a Saturday afternoon. I know all of us have family plans, but you took time out to join us on this live budget coverage. Who's going where? Let me do a quick check. Sunil, where do you go at evening now?
To Ramdev's party.
Okay. Naren, are you going there as well?
Nikunj, are you invited?
It's a very famous budget party is what I've been told. And it's by invite.
So that is exactly my question. Did you get the invite?
No comments.
I got the answer. Naren, are you headed to the same party? I got the
answer. No, actually, we have to talk to our customers. That's what I'm going to be doing today.
Okay, back to business for all three then. Okay, gentlemen, we'll let you go on that note. Vibha, closing comments from you. I didn't ask you, are you also going to the same party or not?
A lot of them are our valuable shareholders, so we have to ensure we continue working hard so that the party can happen.
Well said. All right, let's take a break. The budget, from a market standpoint, I don't want to use the verdict. Bear in mind that we started high, we've come down, but that also could be that the budget event risk is behind us. Frankly, in my book, 8 out of 10 things which the demand list had or the wish list had, 8 out of those 10 boxes, I think it's been a tick. Now, why markets reacting the way they are reacting? Well, buy on rumors, sell on news. And then the impact of coronavirus, considering the last night, US markets also took it on the chin and they were down by more than 600 points. So break with the news that 600 points down for the Sensex, 200 points down for the Nifty.
Randan, are you in? And could I
LTCG was an
Well, good afternoon, and you're with us here on our post-budget coverage. We're counting down to market close. It's looking incredibly red when it comes to the kind of breath we're seeing across the board when it comes to the markets post the budget, and we'll talk more about that in a moment. We've got Sunil Subramanian with us here in the studio. We've also got Jane Fang with us on the phone line, Associate Managing Director, Sovereign Risk at Moody's. Jean, let me come to you first on the fact that we have finally seen them use that FRBM limit to relax that fiscal deficit boundary to 3.8%. Your first reactions to that? I mean, it was something that was, a very big possibility this time around. We know, of course, ratings agencies like yourself have been not too positive on that measure being, or that route being taken. What do you make of the budget and the fact that the government has decided to relax the fiscal deficit target?
Well, I think it's not too surprising, and I think that all else being equal, it's not positive in the sense that tighter control over the fiscal deficit would have been more consistent with the kind of fiscal consolidation path that we were hoping to see from the government of India. Nevertheless, we realize that the economic situation is also very challenging, and given the disappointment in tax revenues and the limited amount of space the government could move around expenditures, it's probably not too surprising to see the deficit come out where it did.
Do you feel the government in this budget has done anything significant that could help to stimulate growth? Because we have been seeing downward revisions of growth targets. Again, how concerned are you that perhaps we've not seen elements that will help to regain momentum?
Well, we're still trying to go through the budget in detail to reassess our own forecast, but I do think that the target for next year in terms of the fiscal deficit is probably also not that surprising in terms of the scope of what the government would need to do in order to support growth through the expenditure program, and I think that comes out more or less in line with what we had in mind in terms of what we expected from the government on the expenditure side. That being said, we think the fiscal target for next year will be challenging to achieve, and that's given the fact that we think the growth trajectory for India's economy will remain relatively, while we think that the trajectory is going to be on the path of a rather slow recovery, so we're expecting lower for longer growth, and in that environment, I think achieving some of the revenue targets will be challenging. In addition, I think there's some very big disinvestment targets baked into the numbers as well.
Right, Jean, appreciate you taking the time out and giving us your take. So you do believe that there is going to be a little bit of a challenge now to achieve that fiscal target. That's the overall view on the budget. Sunil Subramaniam as well is joining us in our studios to give us his key takeaways. Sunil, let's talk purely from a market standpoint. There were lots of hopes being pinned on the LTCG tweaks. There has been a move that has come in with respect to DDT. How are you looking at both of these factors, and what have you made of the budget fine print?
So yes, on the LTCG, I think the market's expectations have been disappointed, and I would attribute that as a huge factor behind the correction in the market. That being said, I think the markets will bounce back for the reason that if you take two things. Now, on the personal income tax, right, well, everybody is saying that some people can take the exemptions and not go for the new tax. The fact is, Nirmala mentioned that there is a 40,000 crore loss to the government on account of the new tax regime. Now, what this means is that the government is already saying that 40,000 crore people are not going to. So that's actually a consumption boost to some extent. Now, who's going to benefit from this? There are huge lists of people who don't bother about doing all the tax exemptions, who don't go to an auditor. Now, it's simplified for them and they will save it. So there is some amount of a consumption boost to the extent of 40,000 crores, that number mentioned by the Finance Minister. The second thing on the DDT part, right? Now, you look at it this way, right? A company, now the clarity is not there on dividends received from mutual funds. I think I need to look at the fine print. So leaving that apart, a dividend DDT removal will benefit three clear parties here. First is MNC companies in India, right? Because when they pay dividend out, right? So now for new FDI to come in, now the new tax is only 17% for a new manufacturing company to come in from abroad. But every time he thought about dividend taking away from his operations in India, he would have that tax. Now, this is a further boost for FDI to come in, because not only is he going to pay only 17%, which is internationally the lowest tax. Singapore, Hong Kong and Switzerland are at 17%. It also means that the profits that he can take out will be tax free. So the model, when he puts into a cash flow model and says, is this investment worth it? It will definitely make it much more attractive for India as a destination. Second is FIIs who are investing in Indian dividend paying stocks are not, they have tax exemption in their countries. And I think the finance minister was specifically responding to FIIs saying this dividend distribution tax is unnecessarily taking it away. So definitely FII flows in those companies which are paying dividend will go up, because earlier they were saying that, oh, I lose this much money from dividend, because there are companies which pay dividend. They don't decide to pay dividend on whether an FII wants dividend or not. They decide to just pay dividend. So third thing, from a capital markets perspective, individual investors would get affected by paying tax. But a capital markets perspective, the EPS would automatically shoot up, because to the extent that the dividend distribution was bringing down the EPS, you're going to see a rise in EPS because of the DDT. Right? So I think there are nuances to this. Right? Yes, individual investors would suffer. But look at it this. If the individual investor is going to pay a higher tax, that goes back to the government's kitty. Yeah. So the government is actually not giving up that much through the DDT, because he's actually in some cases going to get a higher income from the thing. So that's good for the government. So there are a lot of nuances here which you need to read into.
Okay. Fair enough. Sunil, we're going to come back to you in a moment. We also have Ashish Kumar Chauhan with us, MD and CEO at the BSE. All right, we're going across to Ashish in a short while, but okay. So, let's go into some of these in greater detail. Some people are calling this, an aspirational budget, one that's actually addressed the pockets that were stressed, such as rural, middle class, etc. You're saying that if you actually go through the loopholes, especially when it comes to some of these tax exemptions and all, it's actually not going to be, such a huge benefit.
No, okay. You're asking me from a government's income. See, they look at it this way, right? There's one pool of money.
Yeah.
Either the government gets it or the individual person gets it. If the individual person gets it, you think about whether he's going to save it or he's going to spend it. Right?
Yeah.
So ultimately, it's the same pool of money all over the country. Right? So to me, the personal income tax, definitely the government is going to lose 40,000 crores. And that's going to go in the hands of people. If they choose to save or spend, is the future will tell. On the dividend distribution tax, right, the government will lose the income from the FII and MNC companies, right? But they will gain the income from every dividend paying company. The individual shareholders will now be paying 3 times the tax that the government was getting as revenue.
Oh, I see.
Right, somebody's going to pay a 40% tax. No, the company has paid him a dividend. He doesn't have a choice. He can't call up levers and say, hey, don't pay me my dividend because I'm... So the government will get the money back.
So, but does this help as a boost to companies then? Because the companies are not really seeming markets are not seeming so enthused. Either they've already priced this in or they were more hopeful of LTCG.
Today is a knee-jerk reaction, I would say, and there's the coronavirus, which is, whether it's affecting you and me individually or not, it is affecting the markets. No, so if you wait for the coronavirus matter to go off, I'm sure FDI and FII flows will actually come through here, because even what we were hearing, the analyst that you were speaking on the phone, the future 3.5 fisc deficit is something that FIIs and rating agencies have more or less factored in. So I think that's not a surprise, and I was happy that the finance minister used the room, because that means she was not saying I'm cutting down on infra spend in order to meet the FRBM. So FRBM allows me a 0.5%, I'm making full use of it. I was only too happy because they are not spending it on giveaways like Narega or whatever, they're spending it on various pockets of infrastructure. So I for one am happy with that. Like I said, the problem was the expectation. I don't think it's a problem with the finance minister's budget as much as market building up a lot of...
and the fact that a large part of the boost has gone to, they're very critical pockets, if it's education, healthcare, so on and so forth. It's just not market oriented necessarily.
Yeah, because they say the devil lies in the details. I would say the devil lies in the implementation.
Exactly.
If the budget actually follows through on all those effects, actually the economy will get a decent boost. And I think that's I would take that away as a positive. Markets are disappointed, there's no doubt, and that's life.
Yeah, and as things stand, we're staring at 11,738. Lots more to talk about, but we'll slip into a short break right here on the show. Stay with us when we return. Welcome back. This is Budget Day Live, and it seems like the markets are utterly disappointed. 900 points off on the Sensex, 39,800 in a single trading session. The Nifty has been slam dunked by nearly 270 points. All sectors barring IT are in the grip of the bears. Real estate, the Nifty Bank, as well as media, PSU banks, metals, energy, you name it. And take a look at the broader universe. That's definitely hit the brakes now. It's a cut of 2% plus for the broader end of the market. We're in conversation with Sunil Subramaniam talking about the fine print, the devil in the detail, as you said, Sunil, for the budget. Let's talk about in terms of the insurance sector. There was a lot being penned there, a lot of hopes as well. And now with respect to the news that has come in for the insurance sector, how are you looking at that move?
I think the fact that a lot of customers might opt not to do insurance because there's no tax break to them because they're getting a good tax. Without that, the market is pricing that in, but I don't think that much of the insurance industry's business was dependent only on the tax rate. I think insurance really is bought for as an insurance for the future. So while there could be a small slowdown, I think the market is overreacting to that sector. I think the future for the insurance industry remains bright.
You touched upon infra, so let's talk about the pockets, because there was obviously hope that there'd be some big bang expenditure on infra, which hasn't happened. But you're still encouraged by some of what they've announced?
Especially the broad base of the infra they're doing. It's not like one particular sector. They've talked about railways, they talk about having a cold rail, for storage. They talked about public-private partnerships in that. They're talking about a national logistics policy. They're talking about a national education policy. So there's, I think, a huge amount of incremental, small things spread across a large part of the economy. And I think, honestly, that the budget is not as bad as the market is reacting to it. I think economy-wise, I would say that it's tried to do its best in a tight fiscal year. So to that, I would say, given the constraints, there's not much room for big bang. Markets, for some reason, and mind you one thing, between the two budgets, a huge amount of stuff was done. There was the corporate tax giveaway, there was a 102 lakh infrastructure program, and she's spending 20,000 crores on that this year. So I think that the budget itself was overhyped by the market, and we are suffering the reaction of that. Economy-wise, I think the budget was fairly decent. I don't think that it was as a bad budget. I don't think it's done something wrong. And I like the fact that they recognize the reality of the fact that you will not meet your FRBM, so use the maximum window of limit. Now, the key question hanging around the budget is the 2 lakh crore disinvestment for next year, where clearly a lot hinges on the LIC disinvestment. That's a big move by the government, but I think that will fetch a significant. So that indicates the seriousness. Otherwise, till last year they were saying LIC was the last thing that we will touch. But now it's like probably the first thing they're going to touch. So that's a good news. I think it's good that LIC gets into public hands a little more.
And you do see public appetite for that, of course.
I think, absolutely.
Yeah, okay. Let's also go across to Mubina to analyze those income tax slabs, the changes, what the fine print is, what it could mean, and the implications. Mubina?
Well, the wish list for lower tax rates has definitely been granted, but I would say partially, because yes, there has been a rejig in the tax slabs, but it comes with riders. And I think it's got me questioning that are these rejigs in the tax slabs actually worth taking on and, fulfilling those conditions. So here's what the tax slabs currently look like. As we know, 0 to 2.5 lakh rupees is exempt from tax. 2.5 to 5 lakh rupees, there is a charge of 5%, but you've got to understand that there is going to be that rebate that will kick in. So FM Sitharaman has been very categorical in saying that, look, you're going to get the benefit of the full rebate even in the new regime. Mind you, this regime is optional. You do not compulsorily have to go ahead and, you could take a decision based on, what sort of savings are you getting. And then, of course, here's the rest of the tax slab. Like I said, there have been these new additions that have come in, like, for example, a slab from 12.5 to 15 lakh. That's a new addition. And then, of course, that 15 lakh tax slab. So earlier, more than 10 lakh rupees was taxable at 30%, as you can see on your screens, but now it's more than 15 lakh rupees that's chargeable at 30%, so not bad at all. The other thing that I want to point out now is with respect to the savings. So depending on what your level of income is, your savings are going to be accordingly. So it's obvious that the more income you earn, the more tax you're going to save. As you can see on your screens, our individual who's earning 15 lakh rupees, and FM Sitharaman herself gave this announcement, an individual earning 15 lakh rupees can actually save as much as 78,000 50,000 rupees if he or she opts for the new tax slab. But there are riders, and it's extremely important to take note of this, because firstly, you do not get the benefit of Section 80C, Section 80D, Section 80CC, or even Section 80G. And mind you, these are big, not even standard deductions. In fact, today your standard deductions itself are almost 50,000 rupees for salary, and then you have another 30,000 rupees for house property. So 80,000 rupees gone, 1.5 lakh rupees gone in Section 80C, roughly around 55,000 rupees gone in Section 80D, plus a national pension scheme of 50,000 rupees. So you guys can calculate what you will lose out on if you opt for the new regime. In fact, I've done a back of the envelope calculation, and I've realized that currently if I'm, let's say, paying an LIC policy and my PPF, which comes to 1.5 lakh rupees, and then I have my basic Mediclaim of 25,000 rupees, with those exemptions, I'm actually saving only 7,800 rupees. And hey, I think we should inculcate the habit of savings, right, in individuals. A PPF is a great way to do that. But I suppose the choices of individuals, since she's given that choice to individuals to opt for the second set. And now, of course, the very important dividend distribution tax, which has been abolished. 20.56% is where the DDT was currently at. So obviously, if an individual has an effective tax rate of less than 20%, he has reason to rejoice, because this dividend will now be taxed with his income. So he'll have to pay a lower effective tax rate. But for all those individuals, so I would probably call them the high net worth individuals or the super rich individuals, they will definitely not be liking this provision, because it simply adds on to their already high income and will be taxed at 42.7%, considering the highest bracket. So like I said, partial relief to some taxpayers, very selective. All in all, I suppose FM Sitharaman has left income tax assessees wanting for more.
You've really broken that down well. I love how we just cut out one of the zeros with respect to the savings based on the kind of riders that there will be with respect to those new tax slabs. So thanks so much for giving us a breakdown of what the DDT abolishment means, the new income tax slabs for individuals and the kind of savings that they have. And keep watching out, as on the screens we have the think tank and the kind of verdict that they have given to Budget 2020. Ajay Srivastava as well is joining in from Dimensions Consulting. Ajay, good, bad, average, how would you react to Budget 2020?
I just say one thing, the Indian investor has been thrown under the bus. Very clearly, this is the budget which has catered very well to a foreign investor. They're given all the concessions, including to the sovereign fund. As an Indian investor, you really feel absolutely miserable, because for many counts. And I think one count which your colleague just mentioned is the DDT issue, that suddenly not only the high rate, let's assume that, take out this ultra high, all of us 42% tax bracket, even the very normal people who have, basic income as dividends, they will now start coming under different slabs. Some may even jump the slab and may pay a tax of 30% just because of dividend. They were not filing their returns or very simplified return. Now they have to file a proper income tax return. So, instead of simplifying the life of hundreds and thousands of people, pensioners, old people, etc., who survives on dividend, they've got Nestle's of the world, Hindustan Liver for years and years only for dividends at this point of time. Suddenly that's gone out of the window. Suddenly all the purchases for the investors based upon dividend yield goes out of the window, because at 42% tax, it doesn't just make sense at all, because you rather pay capital gains tax. So, you change the market dynamics altogether. That's one. Number two, what have you done? You've taken the millennials out of the real estate and insurance bracket completely, because now there is an option for them not to pick up insurance, not to buy a house, not to take a housing loan, nothing, and pay lower tax and spend maybe on a mobile phone, most of which will go for an import at the end of the day. So you started with the objective of inculcating saving. We don't have a safety net in this country, trying to give insurance, NPS schemes, giving benefit on real estate side for them to buy houses, which gets the construction sector going. What have you done in the end? You told the guy, listen, don't do anything. You pay lower tax, go spend it on the mobile phone. Now, if that's what is come down to, I think then we got a problem, and the market is correctly reflecting that you suddenly change the dynamics of insurance business, real estate, housing finance, everything got affected in one shot. As they say, there's an old saying that the road to hell is paved with good intentions. I think the good intentions were lower tax, but I don't think people thought of the collateral damage.
Okay, so you're very categorical in your reaction. Ajay, we want to get in more reactions, but we've also got Ashish Kumar Chauhan now joining in. And an adverse reaction the market has taken. You just heard out the other panelists speaking about how the dynamics of insurance, housing, etc. has been altered quite significantly, and that the markets are displeased. Is this reaction justified to the budget, according to you, Ashish?
I think overall yesterday the world markets had fallen substantially. US closed 2% pretty much, Dow closed 2% down. And so today when no other markets are working, in a way you take a clue from where things stopped yesterday in rest of the markets. And that's where market was already apprehensive since morning. And of course they had a pet sort of grievance which is in a way come out saying that LTCG exemption was supposed to come in, but that has not come in, and so some amount of disappointment has sort of crept in. But I think people will take it in their stride because the budget has something for everyone. If you take farmers, there is something. If you take Dalits, there is something. If you take street vendors, there is something. Even middle class has got a huge amount of money in hand for consumption. So for me, in a way, this is a Sabka Saath, Sabka Vikas kind of a budget with a lot of consumption sort of being coming into the markets. And we will see over next 6 months that a lot of people with new consumption will come into the market. Somebody mentioned before me about people doing more consumption and less savings, but sometimes many countries also want more consumption. Effectively, they've also given a lot of soaps to FPIs. Even the corporates have been asking for removal of dividend distribution tax. That has been done. For the BSE itself, there are many positives in terms of the GIFT City and LIC disinvestment and so on and so forth. In GIFT City, they have ensured that it gets impetus by having 1% tax differential in the withholding tax for the bonds that are getting listed. So I'm sure more companies will come to list on GIFT City exchange of a BSE called India International Exchange. Rupee dollar trades have been announced on GIFT City. Even international bullion exchange has been announced, which BSE has been asking for last 3 years. I think overall for BSE as a corporate, it has been a great budget. But even for economy, I think there is something for everyone in this budget. Of course, everything we asked for may not have come in, but large portion of what was asked for has been covered by every segment of the industry, including real estate, power sector, MSMEs, startups, ESOPs. They've covered pretty much every base that was asking for some relief, and that has been given.
The real estate index is now down 7% as we speak. It's the top sectoral drag, Ashish. What exactly, because people are talking about a bit of a miss coming about with real estate and infrastructure, that there wasn't enough, bolder reforms were anticipated on this front, and that index is down nearly 7%.
Yeah, and for me, I think we take up our own views and take very, very far. Sometimes the governments may not have that ability to give those many reliefs, but clearly the real estate sector has been identified as one, even housing sector she mentioned few times, and so it has been identified as a key sector. They've given a lot of reliefs, including in the income tax for that 1.5 lakhs extra in terms of the interest and so on and so forth. So even for infrastructure, FPIs investing in infrastructure bonds and all may not have to pay taxes, and so I think overall whatever was possible within the constraints they were facing in terms of the expenditure as compared to the raising of funds, they have, I think, tried to satisfy everyone's demands to some extent.
Speaking of the divestment target and of course the big announcement on LIC, everyone is very is anticipating already the kind of appetite there may be for that big bang listing, and the targets that have been set as well. What are you making of it?
I think we are very hopeful that we should be able to reach those targets, because the LIC is pretty much the largest financial institution in India after SBI, in terms of the money they manage and the number of people they touch. So overall, if that comes into the markets, you will see a significant increase in the overall market capitalization of the country. You'll also probably, of course, as soon as it becomes eligible for the incorporation in the indexes and so on and so forth, because that is so large, and of course it will also help government meet its targets and so on and so forth. But this was long coming. This was expected even last year, but now that they have kind of bitten the bullet, I think it's going to go forward, and it's a welcome move from their side that they are showing a tremendous seriousness in disinvestment in every aspect of the PSUs.
Ashish, for taking time out and joining in with your assessment of the budget. We also have Sandeep Sabharwal with us in our studios. Sandeep, she used the word tax 132 times, the word infrastructure just 26 times, and the word budget was used 30 times. Do you think that the market reaction is just saying it all?
Not saying it all. So I think it was the worst budget I think I have seen ever, because of the fact that you see all the announcements wherever relief etc. is being given, it's all sort of too much of jugglery. You know, they say that exemption, you can pay low taxes, but you remove exemptions, and then you give out a figure that government will lose this much. Actually, government doesn't lose that much, because as it is, the people who are saving in PPA for housing loan interest etc., they were doing that. So the actual loss is lesser. Similarly, on the dividend distribution, I think it's been well discussed now that right now, the earlier regime was that whatever dividend you get, you don't pay tax on that, neither the company pays. And then they introduced dividend distribution tax, and then they said up to 10 lakh dividend, you don't pay tax. I think that was the thing. And now they say that it just gets added to your income. So effectively, anyone who is holding a decent equity portfolio, their taxation effectively goes up. So where do the people save? They don't save anywhere. So I think that's the issue, because the problem of the budget is it doesn't show vision. So it's not a visionary budget. It doesn't show an understanding of how the economy works, and that's the problem. Now, that doesn't mean it's doomsday. So there's no doomsday coming, because eventually economic cycles play out.
The markets are behaving like it is right now. I mean, do you think it's just knee-jerk?
No, market behavior was predictable. So my view was that
you've actually been saying it. Yeah. He's actually been calling this sell-off for a while.
Yeah. So markets find reasons to sell. So the coronavirus. So when markets have to fall under their own weight. So when the markets were rising, no one was asking why it's rising, because when markets rise, everyone is happy. So there was nothing really happening in the economy. Economy was at decadal low growth. Companies were saying there's no growth, we see no visibility. Still markets were moving up, and people found reasons for that. So when they fall, they find reasons. So markets fall under their own weight. It's perfectly fine. I think eventually over the next over the next 2 weeks, markets will find a bottom, and economy is already bottom. There will be a revival happening with or without government support. So the liquidity is ample, rural demand is recovering. So we'll find opportunities at that time. So right now we need to let it settle. We don't globally also, we don't know what's going to happen. So I think somewhere around between 11,000 to 11,500, somewhere markets will settle. I'm not sure where, but that will be the time we should be looking to buy.
Ajay, well, let me get you in as well, because I saw you shaking your head furiously when Ashish Kumar Chauhan was declaring it a positive budget, and you've also been hearing Sandeep's comments. Let me get another comment in from you as well.
I was hearing of some other countries' budget comments at the end of the day, because typically we can't believe that 99% of the investor community is a fool which got everything for everybody and sold out. So I guess maybe some people are maybe smarter than us, so that's okay with us. But I think, see, the point, of course we are back, as rightly Sandeep is talking about, we are back on a last sell-off yesterday in the US market, but by and large we were kind of positive that given the context of the coronavirus issues etc., which have been there for the last 10 days at least, when the budget and the sensitivity sensitivity with which the economy has to be moved around, and you saw what happened last time, the knee-jerk reaction and the failure of the corporate tax rate benefit, the government will be far more sensitive and participative in the decision-making process. And I think a lot of people could have told them exactly this, that if you follow this path, this is inevitably going to be the consequences. And number two, I think what he raised a very valid point is you got to be honest about it. You know, when you say I'm going to increase rural income by 2 times. Now, if you increase rural income by 2 times by 2022, you're talking of an average rate of inflation in agriculture products of 40%. Now, is that what is factored into the budget or the monetary policy, that there will be 40% rise in factor prices in agriculture products? Because that's the only way to increase income. How do you otherwise income? You can't give a grant, that's not in your budget. So, you know, the precepts of the budget sit around with the factors which either are untenable or you don't understand as to how they have to be achieved, if they have to be achieved. That's one. Number two is from an ordinary investor standpoint, you know, you need to make it happier for the guy because he has been with this capital market. Let's be honest, since the last tax cut, the Indian mutual funds have put 45,000 crore in the market. The FIs have only put 1600 or 1800 crore net in the equity market. So instead of rewarding the Indian shareholders for keeping this capital market alive, you are penalizing him at every point in context of the foreign investor. Now that's not a fair deal which is going to happen in the system. So, you know, so someone needs to go back to the grassroots of the economy, as Sandeep rightly said, and say this is what really moves. I'm not saying government should look at only the market. Stock market, only maybe 5% of India or maybe less is invested. No, it's not. But it's a barometer of what you're doing right and what you're doing wrong on a longer tenor. And that's where the context comes, that you be honest what your constraints are. Don't say we're going to increase income by 2 times. Just say what can be realistically done. And we are all grown-up people at the end of the day. Although I said in the program in the morning that grown-up people were expecting a fairy with a magic wand to come and wave all the troubles away. It doesn't happen in real life. So I think it's also about you know, communication, and you feeling despondent that, you know, as an Indian investor, you know, what wrong did you do at the end of the day by just having a brown skin?
Oh, okay, that's strong commentary coming in, and in fact it seems to be echoed you know, across the panel today. You know, I want to take that point forward on inflation as well, because Sunil, there was a segment that was still hoping that monetary policy would have some room to play, even though, sure, they're also now starting to get a bit squeezed in terms of how much more they can cut, but there was still hope that we'd continue to see that. You know, Ajay is absolutely right, because if we do see consumption spiraling and that impact on inflation, I mean, are we just going to be stuck between a rock and a hard place?
No, you see, I still want to see, I'm a kind of a semi-bull stuck between 2 bears on the screen right now.
Okay.
And so let me put some reality checks into this. So first of all, it's because you had expectation that you're disappointed. Now you take a normal customer, right? He was paying a particular tax. He can continue to avail all the exemptions and pay the tax. No. She's given you an additional benefit where you give it up. So don't give it up. You're not worse off. So why all this pessimism, doom on this income tax? See, first of all, why I'm saying this is an income tax, personal income tax cut is not justified given our fiscal situation.
Okay.
So he gave it to you, but said on the other hand, don't take exemptions. So if you don't want, you want to continue your LIC policy and your other ATC benefits, you continue to pay the same tax as before. So why are you worse off? That's, I'm just saying, point number one, right? You because he gave it in one hand and took it away, you're wrestling with that emotion, I'm just saying, right? And second is, suppose this 1,45,000 crore corporate tax giveaway was announced in the budget today. Think about it, right? Because of the 1,45,000, they had prepared us for a fiscal deficit slippage. Suppose that was not done then, and you had put it in the budget today that you are doing 1,45,000 and this fiscal deficit is slipping, you would have had a massive negative effect. Third, he said what brown skin versus white skin, right?
Right.
I'll come back to the answer later.
Yes.
Okay.
That's a controversial one, Okay, we've got Nikunj also as we wind down to close. Nikunj, it looks like we're heading in for possibly one of the worst sessions we've seen in recent times.
So Abha, it's not a very smooth finish to something which has turned out to be more like a no event. I'm frankly a bit surprised with the panic reaction which has come in after the budget. In the morning, market should have taken cue from what's happening in the US markets. And, you know, Aisha, from a market standpoint, can we derive a set of losers? No. Can we derive a set of gainers? No. So then why have markets really corrected? That's because Dow fell last night. The world is looking like a messy place given what's happening to the coronavirus.
Yeah, absolutely. You know, when we started off trade, you had the Dow down in excess of 1%. We chose to completely ignore the global cues that we were getting. And after closing or after the budget is when we've chosen to align ourselves with the rest of the globe. So if you just see the kind of jagged edges that you have post the budget speech especially, and those, those jagged lines will really tell you the kind of move that you had in the market. We started off somewhat low. We were down about 0.6%. We recovered those gains, went absolutely flat into the budget announcement, a sudden drop and a drop further. At one point in time, Nikush, we were down 200 points in the Nifty futures. That's no joke. Finally saw some recovery, and then again we've fallen to the day's lows all the way down almost about 3%. So yes, aligning to the global cues, but having said that, I guess what the markets are deriving is nothing came on LTCG, no clarity really coming in on what the disinvestment roadmap is going to be. These are near-term triggers perhaps that the market has chosen to react to.
You know, I just want to look at the Nifty. Let's also focus on the small cap index, because that really has been the performing end of the market. What has happened to the small cap index? Bear in mind the Nifty was down in the run-up to the budget. The small cap index in last 1 month has seen a meaningful uptick. So that small cap index will just come up your screen, and Aisha, that's, if you may just step back a bit, maybe you want to point out the numbers here. The small cap index has not really fallen flat. It's pretty much fallen in line with what Nifty has been doing. Frankly, I was a bit surprised with the morning strength what we saw. Post-budget speeds, the cracks come down. So if you're a trader, you would say, what is next for me? Earnings season is over. Budget, event risk, right or wrong, that is behind. What will be the trigger point or the drag for the market? For the moment, it appears coronavirus. Mathematically, you cannot put a number. We don't know how bad or how scary the situation in China is. The virus has not got contained. You know, Sandeep made a great point in the morning. Just like demonetization dragged our economy down, will coronavirus drag the Chinese economy down? And China slowing down is not bad news, it's very bad news. It's not very bad news, it is very, very bad news.
Yeah, it's bad for the globe altogether. But very quickly, I just want to mark a couple of stocks, and I want to pick up on the Nifty Bank right now, tell you how the private as well as PSU banking stocks have performed, considering the insurance deposits are now hiked to 5 lakhs as opposed to 1 lakhs. While it may not spell bad news for the entire banking sector, it sure is bad news for some of the struggling banks, because they will have to cough up higher reserves for themselves. So just look at HDFC Bank as well, for instance. That also succumbed to the day's lows and then finally saw some recovery coming in, but I would say still a weak closing for that one. Some of the other smaller PSU banking names, I'm guessing, is where you would face the bigger impact. Look in SBI, for instance. It's almost a 30% move that the stock has had in the last 6 months, and now that falls a solid 5-odd%. What we don't know though is that volumes would be typically lower than the average in today's trading session, given that it was a Saturday. So you've got the global participation completely amiss. I think Monday would be the litmus test when we would really realize as to how the markets would absorb the budget impact. I want to also talk about the insurance stocks. That you've got a flavor of the banking names. They've clearly closed in the red. Insurance stocks, Nikunj, and they would definitely sentimentally be hard hit. I mean, there's reason why most of these stocks plummeted after the budget announcement.
You know, it's for the longest time I've been tracking the entire income tax and the provisioning schemes. There has never been a rule where you can actually take exemptions or you do not take exemption. That choice, I think, is a great choice for a taxpayer. But that choice now will perhaps force you not to do that compulsive buying in insurance. Earlier, how was insurance sold? You get benefit on, that's the Bank Nifty for you. Let's look at some insurance stocks here. That's the closing bell. Yeah, so that's the limited point. I mean, insurance no longer be this compulsive vehicle where you want to save or where you want to do purchases. What will be the impact of that, especially given that we are in the year end? Feb and March is when the maximum purchases would happen. So insurance companies surely will really feel the heat of things going forward.
Yeah, nothing came out for the real estate sector as well, and I just want to mark how some of these realty names, the sought after names like a DLF, etc., as well panned out in trade today, because they as well fell down to the day's low. So DLF will just come up for you on your screens. That was down. Oberoi Realty took a knock of about almost 5%. There you go, DLF. What a sharp crack. A 12% downtick is what you saw on DLF, which was which ran up pretty hard ahead of the budget in anticipation that something for the real estate sector is really going to come about. So largely you would have to say real estate, banks, it's been a rough day for them.
It's been a rough day. I just hope that this is not the turn of trouble, but if you just put two and two together, We may have come on the right side of the budget. Sunil will agree with me, and Sandeep Sabharwal will not agree with me. But in my book, the event risk is behind us. It's, the difference between last budget and this budget is the whole attitude. There is concern about what's happening in the country, rather than making this, sharing of this vision statement that we are headed towards 5 trillion. I did not hear the finance minister use the word trillion at all in the speech this time, unlike last time. So for me, that's a change, where you're taking growth for granted rather than realization you can do whatever you can do.
Yeah.
So that's a change in terms of an attitude in my book.
DDT gets abolished, so I just want to quickly mark what TCS, Infosys, Vedanta, Coal India as well did in trade today, because they also are sensitive to that. Look at TCS, that held up by about 4.25%. I'm guessing similar would be the move on an Infosys as well. Not as much for Coal India. Because there are other parameters and compulsions for that. But all in all, you'd have to say it's a rough day for the markets. There are reasons that you can choose, that maybe we were aligning to the coronavirus threat and the contagion effect that it may have along with the global markets. But yeah, that's the truth. Sub the 12,000 mark, that's how we've shut shop for the day. But I'll hand it over to the studio. I believe we have Amitabh Kant waiting by.
Aisha, thanks for that. We've also got Amitabh Kant with us. Mr. Kant, let me come to you on the one big question that everyone's asking after this, this mammoth budget speech that we've just heard from the finance minister. Do you think this budget has what it takes to really move the needle on growth? Mr. Kant, if you can hear me in a minute, as he does, connect with all the technology we're lucky to have these days. Mr. Kant, if you can hear me, thank you so much for joining us. All of the fine print being assessed right now on the budget, and want to get your understanding on the one big question everyone has. Does this budget really have anything you feel can move the needle on growth?
I think several things. First and foremost, important thing to understand is that both on the direct and indirect tax regimes, we are heading to be amongst the lowest taxed countries in the world. And to my mind, this prevalence of whether you opt for one or the other may be an interim phase, but over a period of time, we are heading for taxation regimes which will be very simple, least complex, and will have a very low tax regime, and that's important to understand. Secondly, I think India's true requirement is in the area of infrastructure. How do we create world-class infrastructure across sectors? And with this doing away of tax on sovereign wealth funds, you will see a lot of resources coming in to create good quality roads, good quality airports, and probably also in many other sectors. Thirdly, I think my personal belief is that it's not the government which is going to drive India's economy. It's not possible for government expenditure. In fact, government expenditure crowds out private sector investment. And therefore, the philosophy in this budget to a great extent is how do you create good quality infrastructure with private-public partnership and give a thrust to PPP, and that's across sectors, and that's really the huge focus on PPP across 150 private sector trains, across railway stations, across many other areas. And the good thing is government has demonstrated its great commitment to push disinvestment in big companies, and the target for private sector investment has been raised. No one is talking about this, but this is a big move forward. And what the government is saying is that it wants to get out of businesses. It wants to get out of large companies like BPCL, Concor, and many others. And that in turn is the way to attract good private sector companies into brownfield projects, well-functioning companies, well-functioning projects which are de-risked. You get good companies in, and they will bring credit flow into this. And therefore, this is a good step forward. And I think the next two big things to my mind is, one, the government's clear intention to decriminalize several areas which are civil in nature, and therefore a lot of acts which have brought in criminalized activity will be done away with. And that to my mind is a very big step, because that's one of the reasons why across the board we demotivate people, we ensure that bankers don't lend, and once the government has sent out a clear intention here and through some other notifications which have come out in the last fortnight, I think you will see a huge amount of lending taking place. And the last point I want to make is that actually this budget, the big picture is about technology. It's pushed towards artificial intelligence, it's pushed towards machine learning, it's pushed towards quantum computing, 8,000 crores, and about it's creating data centers. And the size and scale of data in India will be so enormous that if we are able to create data centers here, it will be a big thing. And that, to my mind, is very significant directional change in the budget. It's a pro technology, and actually it's a budget which drives technological onslaught of India. And I think the other point I want to say is that it's a very, very positive budget as far as startups are concerned. It does several things. It says that on ESOPs there will be no taxation for another 5 years or till the liquidity starts happening. It raises the benchmark of startups from 25 crores to 100 crores, and it says that your carry forward losses, if any, can go up from 7 years to 10 years. So a lot of positives as far as growth is concerned, a lot of positives as far as infrastructure is concerned, and a lot of positive as far as new sectors and new areas and bringing in private sector investment is concerned. It's just that the fine print of this needs to be read. One of the key things is this announcement about manufacturing in mobile, electronics, creating global champions, and looking at these areas, because that will really make India a global manufacturing player. It will make India a very integral part of the global supply chain, and this will really make these two sectors as a key driver.
Thank you, Mr. Kant, for sharing with us your thoughts. We would have loved to take this conversation forward, but unfortunately we'll have to wind it up and just cut across to the Finance Minister speaking.
Mentioned it during the budget speech. It is essentially to come from the listing of the LIC and also from the IDBI at this stage. Yes. Yeah. And so that listing will decide the valuations. We will work on this.
Next
and
question
it's
from
essentially these two.
53. Yes, 53.
Sir, this is Mukesh Kaushik from Dainik Bhaskar. Ma'am, I want to have clarity on defense budget, how much this time has been allocated and what is the percentage increase, what is the capital budget for this, and what is the amount allocated to Indian Air Force, Army and Navy specifically?
I think all these details will be provided in the documents. So if there is any clarification on that, you can. Otherwise, PIB press release is providing all the details and data about the different heads. We can take next question number from 8.
Ma'am, this is Ruchi Bhatia from ET Now. Congratulations on the budget. I want to ask you about the massive 2.1 lakh crore target that has been set out in the budget for disinvestment proceeds. Many say this is a very stiff target. How will the Department A look to achieve this target? Because we've seen a massive shortfall in this year. So A, on the target, and you've also spoken about a tax charter that the tax department will bring in. What will the tax charter really entail? Just to understand that.
I'm glad you asked that question. I was a bit worried that on a measure like a tax charter, and in spite of me mentioning it in 2 different places in my speech, not a person has asked me any question. I'm so glad you asked. That's a very major step. Other than us going around the country to tell tax administrators to ensure that face-to-face engagement with the taxpayers need not necessarily be there. To ensure that they are dealing with them more like wealth creators, and to make sure that they would approach them only to gather information. In spite of all this, you would still hear some comments occasionally. about no, there is a level of harassment and so on. And our commitment to make sure that taxpayers are respected and we quite honor them for the commitment in nation building that they're showing by being honest taxpayers had to be given an expression of sorts. And therefore we came up, and I must thank, he's not here, the principal advisor, Sanjeev Sanyal did a lot of work for me on this. He researched and gave me a lot of inputs. If I'm right, there are only 3 countries in this world which have enshrined the rights of a taxpayer in their laws. Canada, USA and Australia, if I remember correct. So when he, after quite a lot of inputs, came up with the taxpayer rights and a charter as a result, we, as usual in the ministry, discussed it in my morning meeting with the secretaries, and then we worked on it. That is to prove very clearly that the government's intent is not to harass anybody. If there are 1 or 2 black sheep here and there, they are there everywhere, not just among tax administrators. But the intent of the government had to be cleared. And therefore we thought we'll enshrine it in the statute itself, because we believe in it. It's an article of faith for us to respect wealth creators. It's an article of faith for us to make sure that the honest taxpayer is not suspect. And therefore we have made it a point to bring it into the Act itself as a charter, the details of which will come out. So that was one of your questions. What was the other? Tuhin Pandey is here. Only to have one word in his favor before he speaks is, I set the target in July. And I also will have to tell you, didn't you know about it, will be your question next. But I'll also have to tell you, between July and now, January, the immense effort that Atanu, before Tuhin as disinvestment secretary, and now Tuhin, are all undertaking. You will see successful disinvestment happening within the next few months. But your accounts for this year end 31st March. Can I keep speculating? So obviously I agree. Between July and now, a lot of legwork has been completed. And the benefits are going to go into the next financial year. So you may hold me for having set a target which I didn't fulfill, but within 6 months I can stand up and tell you, we have done enough groundwork. Tuhin Pandey can speak now about the rest.
So I think 20th of November, government took decisions of some big ticket disinvestments. One is the BPCL, another is Concord, another is Shipping Corporation of India, and THTC and NIPCO. Some of them we are going to conclude this year, but some of the large ones are going to spill over to the next year, and the revenues, receipts are going to come in the next year. So the transactions are all lined up. As you know, the Air India expression of interest is already out, and very soon BPCL expression of interest it is just about ready. It will be out as well, and so on and so forth. So therefore we are quite hopeful that we would be achieving the disinvestment target next year. And also for this year, whatever is there, as you know, we are a very successful ETF. Last 2 days we raised 21,000 crore on the ETF, of which we are retaining 16,500 crore.
40.
Sir, ma'am, this is Karunjit from ET. This is a question for the Revenue Secretary. Sir, there's a provision in the finance bill that Indians who are not paying taxes abroad, will have to pay taxes in India. How will this work? Does this mean people working in Dubai and places like that which have zero taxation will have to pay taxes on their global income in India?
We have made changes in the finance changes. We have proposed changes in the Income Tax Act, where if an Indian citizen, if he stays out of country for more than 182 days, he becomes non-resident. So we have made some changes there. So now in order to become non-resident, he has to stay out of the country for 240 days. That is one. And secondly, we have also provided that in many cases we have found that some people are resident of no country in the world. They may be staying a certain number of days in different parts of the country. So what we have said is that if any Indian citizen, if he is not a resident of any country in the world, then he will be deemed to be resident in India, and then his worldwide income will be taxed.
Number 12.
Hi ma'am, congratulations on an amazing budget speech. This is Meghna Mittal from Newsrise. I wanted to ask you regarding the fiscal deficit relaxation that we have announced for the current year, 3.8 and 3.5 for the next year. I wanted to understand, will it be possible from 3.8 to directly achieve the 3.5% fiscal deficit target? And secondly, I wanted to understand from the LIC IPO, what would be the likely quantum that we could look at and the time frame?
On the LIC time frame and also the IPO details, I'll have Secretary talk about it. But on the fiscal deficit, we had announced during the BE July 3.3. But subsequent to that, because of the challenges that we faced towards wanting to put more money in the hands of people, to improve on consumption demand, to improve on investments which have to be from the public happening, because the private investment was happening but not at the pace in which it would have helped the whole process, but the public expenditure had to be kept up. And equally, because of various reasons, some natural disaster related, some because of the compliance difficulties in the process, some others unexplained, GST collection coming down. So on the one hand, your revenue generation could not be pressed further. On the other, there was a very clear demand on public spending. So when it was so obvious that I had to go spending, and you know the various attempts we made to release money from the government expenditure be carried out, and make sure that no pending amounts are lying anywhere, and so on. So with both opposite sides being so strongly laid out, it was only obvious that without violating the FRBM, I had to seek that escape clause. And therefore 0.5% forbearance was something which I had to invoke. And therefore 3.8 this year. And the question that you're asking about, why is it 3.5 next year, are you sure you'll be able to come down to that level, is because if you were to look at the way in which revenue generation is improving now, in the last 3 months itself, the GST collection has crossed 1 lakh crore. And I guess the coming months, and also equally with it, the reduction because of corporate rate cut, corporate tax which was reduced, and therefore the income foregone there, both accentuated the problem in terms of revenue generation. I hope the corporate rate tax, the tax cut and the benefit derived by new companies will all come to play in the coming months. I guess therefore there will be an improvement in collection. So improvement in GST collection as we are seeing it now, and even better in the future months. Improvement because of the corporate tax cut and the incentive which is coming because of that. I guess revenue generation improvement will give me that little comfort so that I can come down from 3.8 to 3.5 next year itself, with the disinvestment also showing clear signs of improvement.
27.
These details will be worked out. This is a process which is going to take time in terms of the offer which will it make and thereafter listing. So we'll detail these timelines to you. But this is all to happen in the next year.
Ma'am, Alok from CNBC Awas. इधर से मैम, जो आप लोगों ने डायरेक्ट टैक्स के लिए विवाद से विश्वास स्कीम लॉन्च करने की बात कही है, उसको लेकर क्या टारगेट है, कितना उसमें कलेक्शन हो पाएगा, और उसके डिटेल्स क्या हैं कि 31 मार्च तक आप लोगों ने कहा कि कोई उसमें एडिशनल चार्जेस नहीं लगेंगे, 31 जून तक चार्जेस लगेंगे, वो क्या डिटेल्स होंगे, कितने चार्जेस लगेंगे, अगर इसके बारे में जानकारी देते, और कितना इससे अमाउंट कलेक्ट हो सकेगा, रेवेन्यू कितना सपोर्ट मिल पाएगा?
रेवेन्यू सेक्रेटरी इसका डिटेल्स देंगे, फिर भी इसके पीछे हमारी नीयत ये था कि इनडायरेक्ट टैक्स में भी सबका विश्वास के द्वारा हमने पेंडिंग लिटिगेशन को सॉल्व की, और उसका रिस्पॉन्स आपने देखा that most of them decided to join in the scheme and close the cases which have been pending. On the very same principle अभी डायरेक्ट टैक्स में भी कर रहे हैं. 31 के अंदर ही करो तो सिर्फ डिस्प्यूटेड टैक्स अमाउंट पे करो, कुछ पेनल्टी नहीं है, कुछ टैक्स भी, इंटरेस्ट भी आप पे करने का आवश्यकता नहीं होगा. अगर 31 मार्च को क्रॉस कर दिया फिर भी करना चाह रहे हैं तो थोड़ा एक्स्ट्रा चार्ज पे करके यही प्रिंसिपल के आधारित आप आपके क्लोज कर सकते हैं आपके केस को जून 30 तक. यही है मूलभूत इसमें विषय. मगर रेवेन्यू सेक्रेटरी इफ यू वांट टू ऐड ऑन,
करीब 4,90,000 केसेस हैं जहां पर कि केसेस डिस्प्यूट में हैं. ITAT, हाई कोर्ट, सुप्रीम कोर्ट, कमिश्नर अपील में है. सभी को ये सुविधा दी गई है कि 31 मार्च के पहले अगर इसका फ़ायदा उठाएं तो किस डिस्प्यूट में जहाँ पर कुछ टैक्स डिस्प्यूट में होता है उस पर इंटरेस्ट है, पेनल्टी है, वो सब माफ़ हो जाएगा, सिर्फ उनको टैक्स देना पड़ेगा. अगर 31 मार्च के बाद लेंगे तो उनको 10% और टैक्स देना पड़ेगा. लेकिन बहुत सारे केसेस ऐसे हैं जिसमें कि टैक्स डिस्प्यूट में नहीं है लेकिन इंटरेस्ट और पेनल्टी का सवाल होता है. उस केस में भी हमने कहा है कि जिसमें सिर्फ इंटरेस्ट और पेनल्टी आ रहा है उसमें सिर्फ वो 25% भर दे अगर 31 मार्च के पहले, तो उसका पूरा केस ख़त्म हो सकता है. अगर वो 31 मार्च के बाद करता है तो 25% के बदले में 30% देना पड़ेगा.
113.
I'm Nikunj Johri from Bloomberg Quint. Vishwas scheme, I'd like to ask you a question on that. This has been designed to the previous scheme for indirect taxes. Although the collections from that scheme were better, there were only small taxpayers who actually availed the scheme. So how would this scheme be attractive for even large taxpayers who generally owe larger tax dues to the government? And also, ma'am, there's not been any allocation for recapitalization sector banks this year. And most of the mergers that were announced last year would take place now. So what happens? What's your recapitalization plan for the next year?
I'll answer that second bit first and then ask the Revenue Secretary to talk on the Vivad Se Vishwas. I have very clearly said about the mergers. I'll ask also the Secretary Banking to speak about it. I have spoken in detail about the recapitalization of the bank and about the bringing 10 banks to 4 and the process of amalgamation. And later also I've spoken about the way in which banks can benefit from certain tax deductions, rates, concessions and so on. All in this context of banks having been amalgamated. I have not said I won't give any money for recapitalization. Just as you're saying you've not given any numbers for recapitalization, I've also not said no, I will not give. Which means as and when there is a need, we'll certainly consider that.
As Madam said that this will be assessed during the year, but at the same time, out of the merger, if we look at the Bank of Baroda, already there are signs of huge expenditure, rationalization and efficiency gains out there. The synergy which has been identified for annual saving is close to 1900 crores. And the realizable target for this year itself is around 500 crores. So these are the kind of efficiency gains which are coming, and therefore these banks will also go through this process in terms of whole lot of expenditure optimization and efficiencies. You have seen the SBI results yesterday. I mean, this is a record operating profit which you have seen. So all these banks having done all the NPAs reduction, PCR coverage at high time, recoveries, are in a position that they can also go to the market to take care of their own capital needs.
25.
Only involves the rights of the taxpayer, but also the obligations of a taxpayer. So what has the government decided as far as the obligations are concerned, because compliance to taxes is a problem, and Mr. Pandey others have been working at it. The second question is although you have said that a list will be given later about what exemptions to taxation still there, but I wanted to know a lot of tax was saved by people by making donations to charitable trusts. For example, tomorrow there is a mandir and people want to donate to that. What will happen? Will that exemption continue?
In the new system, any donation made to a charitable trust will not be allowed as a deduction. However, if someone wants to make deductions to the charitable trust and claim exemption, he can be in the old regime, number one. So far as the charitable institution is concerned, they will continue to enjoy the exemptions as permissible under the Income Tax Act. You see, the obligation of the taxpayer has already been specified in the concerned tax laws. If it is an Income Tax Act, Income Tax Act provides that by such and such date the returns have to be filed, then so much tax has to be paid. So those obligations are already there so far as the taxpayers are concerned. What we have done now is that we have, through this charter, we are going to provide that what obligations the tax administration will have towards the taxpayer.
Number 9.
Ma'am, Ujjwal Narayan from Newsrise. This side. Ujjwal Narayan from Newsrise. My question is about food subsidy. Looking at the budget documents, we see a huge cut in food subsidy. It was earlier in B, it was 1,84,000 crores, which has been now reduced to 1,08,688 crores. So, in the next financial year B also, it is 1,15,000 crores. So, what is the new arrangement from where this spending, food subsidy spending has been reduced, or from any other heads you are utilizing the funds or diverting them? My another question is about PM Kisan, because in B you have put an estimate of 75,000 crore, which has been reduced to 54,000 crore. So what is the reason behind unutilization of the stated estimate, the estimates in this head, sir?
Regarding the food subsidy, the balance between what you find in the budget estimate and what has been estimated as a liability, you will find in a separate statement which the minister referred to in her speech. He said we have annexed a statement on other resources that are being used to fund costs, and that you would find in Annexure 5 to the budget speech. So this is being provided as credit to the Food Corporation of India from the National Small Savings Fund. The principal as well as the interest will be serviced by the Government of India. So the funds are provided, they are provided for separately, you will find it in Annexure 5. And as regards PM Kisan, the scheme was announced with an expected number of farmers. In actual practice, in the rollout of the scheme, this year being the first year of the scheme, the estimation was done on a particular basis. The actual number has worked out to be a little less. Therefore, the revised estimates reflect what is expected to be incurred this year, but next year's provisions are fully provided for the larger number. That is expected, yes.
Number 10.
Priscilla from The Hindu, ma'am. Looking at given that this is a time of distress in the rural economy and especially a consumer demand slowdown in the rural economy, what is the rationale behind reducing your allocation for rural development? And especially when you look at the Narega scheme, which has had a lot of demand this year, your your budget estimate, your allocation is only 61,500 in comparison to 71,000, which was last year's revised. You've actually cut it by 9,500. What's the rationale behind that? And my other question is about LIC. Would the LIC listing require an amendment to insurance laws?
Mention about MNREGA. See, that is a demand-driven scheme. This year we went up because there was a demand for this in certain areas, and the full money was provided. Again, next year, if you see, it's a usual normal level funding that has been provided for MNREGA. If there is an additional demand from some areas which comes up, accordingly at RE stage, we'll again meet it. All these schemes, rural development has a very large chunk this year, and rural development and agriculture put together are very close to 3 lakh crores. So wherever there is a demand, especially on MNREGA, whenever additional demand comes up, they will be fully funded. It's a normal run of demands over the year which comes up. There was an additional demand from certain areas which came up, which were funded. So RE of 2019-20 reflects meeting the demands fully, not rolling them over.
We'll follow the extant procedure for listing and for other things, including the legislative changes if it requires, in consultation with the Ministry of Law. And that process we have already started.
103.
Hello. Hello. Yeah. Ma'am, congratulations for presenting a very positive budget in a very odd macroeconomic situation. You've mentioned you've targeted 10% growth of GDP, and you have also given a lot of income tax exemption this time, which is supposed to fuel the consumption demand, which is why the economy is in this position, sir. Ma'am, what the recent, if you see the Sensex right now, it has tanked by about 1,000 points. It means that the corporates are not happy with the exemptions and deductions that you've given in the budget. So what is your take on that? Do you think they were also expecting the STT and CCT also to be reduced?
Well, thank you for, first of all, seeing what we had worked for, the positive side of the budget. The observation that you have put forward about the stock market, I would wait for a full working day in the stock market. Today being Saturday, I think they have not really, well, I'm not sure if every aspect of the stock market was fully open today. So we'd wait for Monday. I would think many of what we have said in the budget would definitely have an impact, positive impact on the stock market, particularly the kind of reforms that we have put forward on the bond market. Is for the first time ever in this country, such progressive, forward-looking, bold steps on strengthening and deepening the Indian bond market has come through in this budget. And I'm confident that on Monday, when the stock markets actually open, there will be definitely a clear indication of what the government has done on this. So today's response from the stock market, I would reserve my comments till Monday. Unless any of the secretaries want to say more, anything more?
57.
मैं आनंद हूँ इंडिया टीवी से। यहाँ सब आपको बधाई दे रहे हैं बजट के लिए, लेकिन विपक्ष को आपका बजट जो है पसंद नहीं आया है। राहुल गांधी ने कहा कि इतिहास का सबसे लंबा बजट भाषण था, लेकिन ये खोखला था और इसमें युवाओं को रोजगार कैसे मिले इसका कोई रास्ता नहीं दिखाता है ये बजट।
मैंने सोचा इतना लंबा बजट के भाषण में युवाओं के रोजगार कहाँ से मिलेगा, कैसे मिलेगा, इसमें ही मैं ज़्यादा से ज़्यादा हर एक जो नया स्कीम हम अनाउंस कर रहे हैं, हर एक नया जो कदम हम उठाना चाह रहे हैं उन सब में युवा के लिए क्या है, ये तो मैं विस्तार से बोली। और ये भी मैं मानती हूँ, मैं सेक्रेटरी से थोड़ा नाराजगी भी जताई कि क्या इतना लंबा करवा दिया मैंने बजट को। शायद हाउस में बहुत सारे इतना लंबा बजट स्पीच मेरे से एक्सपेक्ट नहीं किए होंगे। उस बात को मैंने मानने को तैयार हूं कि लंबा था भाषण, हाँ, मगर मैंने सोचा उसमें युवा के लिए, स्पेसिफिकली युवा के लिए कैसे हर एक ऐसे प्रोग्राम से उनको बेनिफिट होने वाले हैं, उसको मैं शुरुआत से लेकर लास्ट तक जगह जगह पर विस्तार से बोले हैं। छोड़ो इस पे।
21.
Congratulations, ma'am, for this very generous budget. You have proposed several anti-abuse...
Hey, 1 minute, thank you, but tell me who you are.
Girish from Mint, ma'am.
Sorry?
Girish from Mint.
Oh, okay, thank you very much. That's second. That's a third. That's a fourth somewhere here. Convey करिए ना राहुल गांधी जी को.
Ma'am, you have proposed several anti-abuse measures and also steps to widen the tax base. Any estimate available on how much these might fetch in terms of revenue, ma'am?
Can you just repeat your question?
You have proposed several anti-abuse measures as well as steps to widen the tax base, like taxes on e-commerce companies, then changes in the definition of residents. So any estimate on how much these might yield in terms of revenue?
In this budget, we have taken several anti-abuse measures. One we just now mentioned about the changing the definition of non-resident and also making Indian citizen resident. Similarly, we have incorporated certain TDS provisions. For example, on the e-commerce companies, if some sales are made, then the TDS will have to be collected. Similarly, in a business having turnover more than 10 crores of rupees, and if he makes a purchase from a single party exceeding 50 lakhs, then the TDS of 0.1% will be imposed. So these are some of the measures. The details are given in the finance bill and also in the budget document here. So these are some of the measures where certain anti-abuse and also those will be addressed, and also it will help us widening the tax net.
150.
Everybody, this is Prerna from Fortune India. Ma'am, despite a very meticulously drafted budget, there was nothing in specific for the auto industry, which is the worst hit right now. GST cuts or scrappage policy or other incentives. So is that not a priority right now, or you have like other plans that you would want to roll out eventually? Thanks.
I'm not sure if in the budget our approach has been industry sector wise. So if you picked up on automobile, there may be others who will pick up on many others. My approach in the budget has not been that.
Yeah, she reiterated it this year. The obvious quasi-sovereign is the State Bank of India.
Sir, the Finance Minister said that the entire budget is woven around three basic themes: aspiring India, economic development, and caring society. As for the caring society and the aspirational India is concerned, what are the key things that you think were missing or were present?
Well, I think you stopped counting at 3. I had 3, and under each one of the 3 there were some numbers, and under each one of those numbers there were some other numbers. So if you multiplied, I think it came to close to 100. I think she lost count somewhere along her speech. I lost count midway in her speech. How do you call it a budget for caring society? I've just given you food subsidy has been reduced. Fertilizer subsidy has been reduced. We have to get into the details to find out what is the allocation for specific programs that are targeted at midday meal scheme also. The RE is less and the BE is at the same level as last year. PM Kisan, the RE is less, the PE is the same as last year. So I think this talk about caring society is more words than deeds. Once we drill into the numbers, we will know how caring they are or how uncaring they are.
But what about aspirational India? Because all the opposition parties are saying that the burning issue of unemployment is somewhere not touched upon by this budget.
That's true, that's what I said. Surprisingly, the President's speech did not utter a word about employment. And I commented on that yesterday. The Economic Survey has a chapter on employment, but it makes this extraordinary claim that new firm registrations have increased 12.2% in the 5-year period of the BJP government. And every 10% increase has boosted GDP by 1.8%. Now, where are these firms? Are they on another planet or are they in India? I mean, I travel around. I don't see any firms. All I can hear is stories about firms closing down, not firms starting. I think this budget has also done nothing to create jobs. The 3 job-creating sectors are mining, construction, and manufacturing. Now tell me anything in this budget, which gives a boost to mining, construction, or manufacturing. There's nothing for mining, construction, or manufacturing. So these are the 3 job-creating sectors.
So on a scale of 10, how would you rate this budget? How many marks are you going to give to Nirmala Sitharaman?
10 has got a 1 or a 0. You can pick either a number. 10 has got a 1 and a 0. You can pick either number. I'm okay with it.
So this is regarding the archaeological outlet museum in Adishpur, Tamil Nadu. So would you like to comment anything? Because when Finance Minister was mentioning, it mentioned as a Saraswati Hindu civilization instead of because based on the reports we are getting in Kiradi, it's actually a Dravidian civilization.
No, no, I think she mentioned some other place, not Kirladi.
She mentioned Rakhi Gadi as...
Where is that? No, no, I know in Tamil Nadu, but where in Tamil Nadu? It's not Kirladi. Thoothukudi. No, no, I have no complaint if there is archaeological site in Thoothukudi.
Let's hear it out from Tata Steel's Managing Director and CEO, TV Narendran. He lauded the government's push on infrastructure and welcomed the greater share of capital expenditure. Let's listen.
All the other big themes of the budget. I want to ask you, as a manufacturer today, a big fillip to make in India. It's happening through protectionism, no doubt, custom duty. The budget speech was cut short, so we don't know what was in the final two pages. But as a manufacturer, one of the largest manufacturers that we have in the country, are you happy?
I'm happy that there's a lot of focus on infrastructure, which has been announced earlier, and I see a follow through on that, which is positive. So to me, infrastructure is steel intensive, so from a steel company point of view, always happy to see the investment in infrastructure. The fact that there's a greater share of capital expenditure in the government expenditure, I think that's important, because over the last many years that has been dropping. It's been non-capital expenditure which has been taking a greater share. So there's a 22% increase in capital expenditure, which is good. I think the focus on the rural economy helps consumption to some extent. Focus on infrastructure also addresses the issue of money flowing into semi-skilled and
But we've heard these statements before. It has to be executed. We need the private sector to come back with investments, to participate in tenders and all of that. So this whole NHAI bundling that you're going to be seeing and monetization, can that help at all?
That can help. Again, the other areas which help is oil and gas. Gas pipelines across the country helps. Focus on water supply to all helps.
Yeah.
So I think there are multiple of these initiatives, upgrading 100 airports or creating 100 airports.
Yeah.
Privatization of railways helps.
I don't know how the Kisan Udan is going to work and Kisan Rail is going to work, especially when you're trying to privatize Air India. We don't have all of those details as yet. But from your sector's perspective as well, housing is, of course, you need a revival of housing. I don't know if enough has been done for that. For the road sector and transport sector, you've talked about a new policy and a new logistics policy and all of that. But will all of this bring back demand for you guys to kickstart
So it's like this. For
manufacturing?
us, the part of our demand which you're not seeing growing yet is automobile. Right?
Yeah.
I didn't see much,
Anything on
I
that.
didn't see anything on that, right? So that's 10 to 15% of steel consumption, and I didn't see much on that. In construction, infrastructure, we saw something. Commercial has anyway been quite positive. Residential continues to be weak, apart from affordable housing, and I think that will help it to some extent. And industrial construction has also been reasonably positive because of warehousing and a lot of investments going into supply chains because of post-GST, as well as the growth in e-commerce companies and things like that. So there are parts of construction where we are seeing some
Because enough
green
has not
shoots.
been done to kickstart personal consumption as well.
Yeah, so I think the
Whether it's
income
cars
tax-
or houses. The
Absolutely,
big ticket purchases,
absolutely.
that has not happened.
It has not happened because I think
That's a view coming in on overall manufacturing as well as thrust on infrastructure. TV Narendran of Tata Steel. On that note, let's slip into a quick break as we wrap it up here. Stay tuned. We're dissecting what the budget means for your finances and savings. The Money Show Budget Special coming up.
everyone, a very good evening. You're watching the Budget Hotline special episode of The Money Show right here on ET Now. I'm Mubina Kapasi. It's definitely been a very, very eventful Saturday morning, Saturday evening as well. FM Sitharaman has got all of us at work and back to work because she's changed the machinery yet again in Budget 2020. And when it comes to union budget, when it comes to why it matters for individuals like you and me, the simple answer to that is income taxes, because that is something that directly impacts you, me, even Prime Minister Modi for that matter. So that's what we're going to discuss. And in fact, in just moments from now, we're going to open up our phone lines as well and get all of your questions and queries relating to taxation answered. But to simplify this very, very complex topic, I have with me Alok Agarwal, partner of Deloitte India, to talk about this, to talk about the provisions as well that FM Sitharaman has introduced in Budget 2020. So Alok, purely from an income tax perspective, purely as a taxpayer, how happy are you?
Okay, I would say that there was a lot of analysis to be done of the new slab rates before I may realize that I may not have much to look forward to with this new regime.
Yeah.
So if I can put it in that manner.
So it was not an instantaneous moment of joy the minute she made an announcement. It was more like, okay, 1 minute, and then you go back, you do your back of the envelope calculations, and then still think a little more, and that's when you can come to an assessment. So I think let's start off with the tax slab rejig, right? She's not raised the exemption limit. I mean, that rebate stays, that 5 lakh rupee rebate stays, but what she's done is introduce several slabs, different slabs, which were never taxed before, like 12.5 lakhs, 7.5 lakhs. So let's talk about that. And of course, that all important rider as well that comes along with it.
Right. So just to get some background, in line with what they did on the corporate tax side, where they provided an option for corporates to go with a flat rate of tax and forego their deductions and exemptions. There was some talk about this similar regime for the individual tax side before the budget, but obviously we had not taken that very seriously, and now we know that that was in the pipeline. So yes, she has introduced different slabs, and the rider is that you forego all your deductions and exemptions. Now, as you said, at first brush, you may think that these rates look very attractive, but obviously it depends on how many deductions and exemptions you are personally availing of. And in order to do the math, you need to compare the two situations. One situation under the current system where you continue taking the exemptions and the deductions, then you arrive at the tax liability, then you compare on the new slabs with the new rates without any of those, and then you look at the tax liability, and I would suspect that many of us would not see any good outcome on that front. So while we still need to see what they do on the income tax rules, because there is also a reference to some of the beneficial perquisite taxation rules being taken away if you're going for this regime.
When you say perks, you mean the conveyance, the travel?
So there's a reference to the concessional food, the relief under the perquisite taxation rules for food benefit provided by the employer. And that may include Sodexo vouchers, which are very popular. So, it's not only what is there in the Income Tax Act, but you may also lose on some of the benefits under the rules, like perhaps free food benefit from the employer, and then you need to compare the final outcome to see whether you're better off or not.
Yeah, in fact, you're losing not just these perquisites, but you're losing, your Section 80C, which is a good 1.5 lakh rupees. You're losing Section 80D, which is, the maximum limit, I suppose, would be 35,000, assuming I'm paying for my family and my, dependent senior citizen parents. And then 80G and 80EE, and the list goes on. Not to mention that standard deduction, 50,000 rupees. Just a quick question. Is the house property standard deduction as well gone then?
That's right. Under this regime, you also forego the 2 lakh rupee deduction for interest on self-occupied house property.
Okay.
So it's It's
a lot to forego, and that too
widespread.
for just 5%, to think of it.
Yeah.
That's what you're getting, right? I mean,
Right.
it's really a lot to forego. So when FM Sitharaman says that, okay, an individual, when he was earning 15 lakh rupees, will now have to pay 78,000 rupees lesser tax, she didn't assume that, individuals are also paying LIC, they're investing in PPF, they have standard deductions. I think she forgot to assume a lot of very important and, crucial financial aspects.
Yeah, the big ones, Mobina, are HRA
Yeah.
and ATC. And standard deduction, of course, which came in a couple of years ago. So
Yeah.
all these three will pretty much apply to most salary taxpayers, which they will have to forego if they want to avail of this new regime.
So for our viewers watching, if they, what should be then the 2-3 factors they should watch out for? I mean, I would assume, what's the quantum of deductions that they can avail? What's the payments they are making that are, applicable, or rather exemptions are applicable for them? I suppose looking at that quantum and looking at the tax savings, these two would have to be watched out for, and then they should take a decision as to whether they should move to a new tax regime.
Right. So just to, the three buckets are exemptions under your salary structure,
Yeah.
like HRA, LTA, interest on house property, which is, not in the salary
Yeah.
kind of basket, which you may be declaring to your employer and getting them to reduce that while
The TDS,
calculating your
yeah.
TDS. And the third is the ATC kind of deductions, ATC plus the others, like you rightly mentioned. So all these three need to be kept in mind before you decide whether this is going to be better for you.
Okay, all right. But I think largely we're not very happy. Let's just put it that way. She's left the income tax assessees wanting for more. Okay, now comes the second part, and that is with respect to essentially the residential status. I suppose this is something that she didn't announce, but everyone noticed it in the fine print. Like they say, the devil is in the details. So what does the devil have to say for us then in the details?
So again, interesting change. The memorandum explains the intention behind this change, where they have spoken about HNIs who may have a significant connection with India, but have organized their physical presence in India in such a manner that they qualify as non-resident under the tax law. And that enables them to shield their overseas, their offshore income from Indian tax.
Okay.
So as a non-resident, if you are earning income outside India and you are not receiving that income directly in India, then you're not taxable on that income. So these individuals are supposedly organizing their physical presence in such a manner under the current rules that they are qualifying as non-resident. And that's what the government has talked about in the memorandum, explaining the intention behind these changes. So one change is with respect to Indian citizens or persons of Indian origin who, based outside India, are allowed to visit India up to 182 days every year without triggering the residency laws. So that has been proposed to be reduced to 120 days.
Okay.
And then they have a rider to that regardless of that, if an Indian citizen is not qualifying as tax resident of another country and thereby not paying taxes overseas, that person will be treated as resident of India regardless of these changes.
Okay.
So that's kind of a superseding rule that has been put in place.
But what if I'm living in a country where the taxation is zero, like say for example the UAE?
So one needs to look at the tax treaties and how this will interplay with my rights under the tax treaty, which is a sovereign agreement between India and the other country, to see how this pans out on a case-to-case basis. But that's a very valid question that you've raised. And the third change here is with respect to a threshold where for qualifying as a not ordinarily resident, which is an intermediate status provided under the tax law between ordinary resident and a non-resident, there is a status called a not ordinarily resident, where there were a couple of rules, and without getting into too much detail, there was a rule that if you are non-resident for 9 out of the last 10 years, or you have spent less than 729 days in the last 7 years, so a lot of numbers being thrown at you, Mobina, then you can qualify as a not ordinary resident, which effectively meant that you have similar benefits like a non-resident.
Okay.
Now they have changed the rules on this front as well. So instead of 9 out of 10, they have said if you are non-resident in 7 out of the last 10, and they have done away with the 729-day threshold.
All right.
So this may actually benefit some individuals in in certain cases, depending on their travel pattern. For example, foreign nationals coming into India on international assignments, where under the earlier law, they may have become ordinarily residents after completing about 2.5 years of arrival into India, and now they may get an extra year of that not ordinarily resident status. But obviously, this is not the focus of the government. This was provided more to mitigate the consequences of the other changes that we spoke about. So the main focus of the changes, as we discussed, was to bring within the ambit those individuals who are trying to qualify as non-resident.
Okay, all right. You know what? We'll do one thing. We'll take a very short break, but when we return, we are going to be taking on board some audience viewer queries as well, so stay tuned. Welcome back. You're watching the Budget Hotline special edition of the Money Show with me, Mubina Kapasi. I'm, of course, with Alok Agarwal of Deloitte India right here in the Deloitte Knowledge Center. And we are joined by, of course, a whole host of audience as well who have a lot of queries. But folks, you know what, even we had a lot of queries, I think, after FM Sitharaman, sort of laid down her papers and sat to rest. So I think let's take on board some questions. I believe we had our very first question over there. Let's just hand over the mic. And sir, if you could tell us your name and you can start your question.
Hi, I'm Nikhil Sharma. I am a millennial taxpayer. And my question is, with the new proposed regime, what is the flexibility I get to switch between the two regimes?
Okay. Sure, Nikhil. So, there is an option provided under the law to elect for the new regime or to stay within the current regime. And this option can be exercised at the time of filing the tax return, and it also is available on a year-to-year basis. There are restrictions for people who have business income from doing this on a year-to-year basis, but for others there is flexibility every year.
Thank you, Alok.
Okay, and I suppose we had another question. Sure, go ahead. Nikhil, if you could pass the mic.
Hi, Alok. I'm Sneha. My question is, could you give out the key highlights or the changes to the residential status provisions that have been made?
Sure, Sneha. So, like we were discussing just now, the main focus of changes to the provisions relating to residential status is to address those individuals who have been organizing their physical presence in India by, let's say, having a base in some of the tax havens, so that they spend less than the thresholds under the current tax rules and qualify as a non-resident for tax purposes. So a significant amount of their income, which is arising outside India based on the way the income is organized by these individuals, is not taxable by virtue of their non-resident status. So now with the change in rule of reducing the 182 days to 120 days, for NRIs or Indian citizens or persons of Indian origin based outside India who can visit India, that has been reduced from 182 days to 120 days. and also, by having that rider, that if you are an Indian citizen who is not a tax resident of another country and not paying taxes overseas, they have ensured that such individuals will fall within the Indian tax net and have to pay taxes by virtue of qualifying as a resident on their overseas income as well.
Okay, all right. You know what? In fact, I think we are joined by somebody on the phone line as well who has a couple of questions on this budget. I just want to check if he is with us. Hi there, what's your name and where are you from?
I am from Bhubaneswar. I am Mr. P. Siddharth speaking. I am a very senior citizen, almost nearing 80.
Okay.
And my annual income through pension, etc. is almost 9.5 lakhs.
Okay.
So, what is previously there was the tax senior citizens who are getting tax rate up to 3 lakhs.
Yes.
So, what is
the new regime?
Sorry, I don't have any deduction under Section 80C. So, as a senior citizen, how do I calculate my tax?
Yeah, okay. So he's a senior citizen. He's above the years of 80 years old. And we know it's 60 if I'm not mistaken. And then there's 80, right?
5 lakhs.
Yeah. So 9.5 lakh rupees purely pension income. And he has no other exemptions or deductions. So will there be any change? I mean, how will he have to work out his tax?
So again, just to be sure, we should do the calculations under both scenarios. But
Okay.
the earlier slabs of up to 5 lakhs for super senior citizens would continue.
Okay.
Under the old regime, and you would compare with the slab rates under the new one.
Okay.
So let's say you have if I'm not mistaken, you have 25% as well
Yes,
below
25 as
15
well.
lakhs.
Yeah,
And you
yeah.
will have to just calculate to see. My guess is maybe you're better off under the current regime.
Under the current regime.
Right.
Okay, all right. So, sir, I think you should continue opting for the tax in the current regime. So, if that's the case, then you will not have to, I mean, since, you will still be in the 20% tax slab. And, sir, there's not going to be any change as such in your tax liability because of Budget 2020. Alok is recommending mostly, do consider, of course, any other deductions or anything you have, but mostly you should just stick to the current income tax regime, which says that up to 5 lakhs is exempt. And then, of course, you do have the other slabs. So I think he'll fall in the 20% tax slab. So I think his will be, that is 20%, right?
Yeah,
I
so-
suppose we'll all have to jog our memories a little with the slabs again.
Yeah, 5 to 10 lakhs under the current regime is 20%.
It's 20,
That's right.
so great. So you'll have to pay 20% tax and it will be as is. Okay, I think we've got a couple of more questions from the audience. Yes, sir, go ahead.
Hey, hi, my name is Vishwajit and my question is regarding what are the changes to NPS provision under the new regime?
Sure, Vishwajit. So, as far as NPS is concerned, there is one very important change which the government has made on the individuals earning higher incomes.
Yeah.
And what, again, we saw in the fine print is that they have capped the overall deductions that you can claim with respect to employer contributions to Provident Fund, Superannuation Fund, and NPS put together to 7.5 lakh rupees. So any contributions made by the employer to these three put together in excess of 7.5 lakh rupees would be treated as income. So the contributions would be taxable during the contribution stage itself, which is not the case otherwise. And also they have provided that the interest accruing in these respective funds will also be taxable to the extent of the income that is being included on an annual basis.
So the devil really is in the details, I must say, in this budget. Okay.
Yes, so I would say for individuals, in the higher income slabs, this is a big one.
Okay.
Because even if you had not taken advantage of NPS, which was your question,
Right.
but you are traditionally just staying within the PF regime, even if, let's say, we keep aside superannuation, you may have people who had employer contribution to Provident Fund in excess of 7.5 lakh rupees per annum, and that amount is now going to be taxable along with the interest relating to that excess amount. So here is one case where actually even though it includes NPS, the government has increased the tax consequences, whereas in the normal course, the government was kind of incentivizing contributions to NPS.
All right, you know what? We just have time for one last phone call that we've been getting. So hello, what's your name and what's the question you have today for us?
Yeah, my name is Ramesh.
Okay. Hi, Ramesh.
Yeah, hi. And my question is that as far as the tax options are concerned,
Yes.
if we take the tax option of the earlier, or we take the older tax option,
Yes.
then do we avail all the benefits of ATC, ATD, and ATTTA? Or is it that some of them are going to go away altogether, irrespective of the tax option that we've chosen?
Okay, so a very straightforward question. He wants to know if the exemptions are still valid, basically in the old and the new regime.
So, old regime, everything continues.
So ATC, ATD, ATE, all the ATs that are there, you can continue enjoying the exemption if you are opting for the old tax
That's
slabs.
right.
Okay.
New regime, like we discussed, HRA, LTA gone, interest on self-occupied property deduction gone, and the entire set of deductions under Chapter 6A, ATC, ATD, etc., ATG, all are gone, except for ATCCD, which is the employer's contribution to NPS that we just discussed, where again, like Vishwajit asked, they have introduced a limit of 7.5 lakh rupees.
Okay.
So that's the only one left.
Okay, all right. Any more questions from the audience? Sure, go ahead, sir.
Hi, Alok. My name is Nikhil. I just wanted to ask you regarding the recent provisions regarding ESOP, what would the implications of the same be?
Sure, Nikhil. So here there is a positive change for employees of eligible startups who have been granted ESOPs. The government has recognized that you need to pay tax at the stage of perquisite, which is when the employer is allotting the shares to you under the ESOP. Now, the employee may be out of cash at that stage because he doesn't want to sell those shares, and therefore, in order to alleviate this burden, this cash flow challenge, they have provided a relaxation for such employees of eligible startups where they have allowed the employer to withhold the tax at the earliest of 3 points of time. So, at the stage of allotment, which is the current one, when the employee leaves the company, after 5 years from the point of taxation. So, the earliest of these
whichever
three,
was earlier.
whichever is earlier, the employer will have to withhold the tax. So this way, you either when you're leaving the company, you can perhaps cash out at that stage in any case, and if you're selling, in any case, you're cashing out. So it does help the cash flow burden faced by employees. So this is a positive move for employees of startups who are getting stock options.
Okay, well, all right. There you have it, folks. That's all the time we have on this edition of Budget Hotline. I suppose when FM Sitharaman said that, a lot of individuals have to go to tax experts because the tax structure is so complicated, I think the questions that we're getting will sort of, contradict her. But yes, thank you so much, everybody, for joining us today at the Deloitte Knowledge Center. Alok, thank you to you as well. Stay tuned to ET Now. We'll continue all our Budget 2020 programming.
नए अवसर मिलेंगे। टेक्निकल टेक्सटाइल के लिए नए मिशन की घोषणा हुई है। मैन मेड फाइबर को भारत में प्रोड्यूस करने के लिए उसके रॉ मटेरियल के ड्यूटी स्ट्रक्चर में रिफॉर्म किया गया है। इस रिफॉर्म की पिछले 3 दशकों से मांग हो रही थी। आयुष्मान भारत योजना ने देश के हेल्थ सेक्टर को नया विस्तार दिया है। इस सेक्टर में ह्यूमन रिसोर्स, उसके डेवलपमेंट, डॉक्टर हो, नर्स हो, अटेंडेंट हो, इसके साथ ही मेडिकल डिवाइस मैन्युफैक्चरिंग का बहुत बड़ा स्कोप बना है। इसे बढ़ाने के लिए सरकार द्वारा अनेक नए निर्णय लिए गए हैं। टेक्नोलॉजी के क्षेत्र में एम्प्लॉयमेंट जनरेशन को बढ़ावा देने के लिए इस बजट में हमने अनेक योजनाबद्ध रूप तरीके से प्रयास किए हैं। नए स्मार्ट सिटीज हो, इलेक्ट्रॉनिक मैन्युफैक्चरिंग हो, डेटा सेंटर पार्क्स हो, बायोटेक्नोलॉजी और क्वांटम टेक्नोलॉजी जैसे क्षेत्रों के लिए आवश्यक जो भी पॉलिसी इनिशिएटिव्स लेने चाहिए वो लिए गए हैं। इसके द्वारा भारत ग्लोबल वैल्यू चेन का एक अभिन्न अंग बनने की तरफ मजबूती से आगे बढ़ेगा। बजट में युवाओं के स्किल डेवलपमेंट को लेकर भी इस बात पर बल दिया गया है कि जिस प्रकार के आधुनिक भारत के निर्माण में जो जो स्किल की जरूरत है उस फोकस को बल दिया जाएगा और स्किल में भी एरिया को फोकस करने के कॉम्बिनेशन पर बल दिया जाएगा। जैसे डिग्री कोर्सेज में एंटरप्रेन्योरशिप, लोकल बॉडीज में इंटर्नशिप और ऑनलाइन डिग्री कोर्सेज की भी व्यवस्था का ऐलान किया गया है। भारत से जो युवा नौकरी के लिए विदेश जाना चाहते हैं उनके लिए ब्रिज कोर्सेज की व्यवस्था भी की जा रही है। एक्सपोर्ट और एमएसएमई सेक्टर एम्प्लॉयमेंट जनरेशन को ड्राइव करता है। बजट में एक्सपोर्ट बढ़ाने के लिए अनेक नई घोषणाओं के साथ साथ हर डिस्ट्रिक्ट को एक्सपोर्ट हब बनाने की दिशा में एक बहुत बड़ा महत्वाकांक्षी योजना का इसमें निर्णय लिया गया है। छोटे उद्यमों की फाइनेंसिंग के लिए भी कई नई पहल हुई है। आधुनिक भारत के लिए आधुनिक इंफ्रास्ट्रक्चर का बहुत ही महत्व है। इंफ्रास्ट्रक्चर का क्षेत्र भी एम्प्लॉयमेंट जनरेशन का बहुत बड़ा आधार होता है, ये सबको जानते हैं। 100 लाख करोड़ रुपए से 6500 प्रोजेक्ट्स का निर्माण बड़े पैमाने पर रोजगार के अवसर तो बढ़ाएगा, देश के विकास के हर क्षेत्र को वो एक नई ताकत देगा। नेशनल लॉजिस्टिक पॉलिसी से भी व्यापार, कारोबार और रोजगार तीनों क्षेत्रों को लाभ होगा। देश में 100 एयरपोर्ट विकसित करने का लक्ष्य सामान्य मानवी की हवाई उड़ान को नई ऊंचाई देगा। भारत के पर्यटन सेक्टर के लिए ये इंफ्रास्ट्रक्चर बहुत आवश्यक है और टूरिज्म से कम पूंजी निवेश से अधिक रोजगार की, अधिक इनकम जनरेशन की संभावनाएं होती है। इंफ्रास्ट्रक्चर के क्षेत्र में हम स्टार्टअप्स के जरिए और प्रोजेक्ट डेवलपमेंट के जरिए युवा ऊर्जा को नई ताकत देंगे। टैक्स स्ट्रक्चर में मूलभूत बदलावों के कारण भारत में अनेक सेक्टर्स में वैल्यू एडिशन की संभावना भी बढ़ेगी। एम्प्लॉयमेंट के लिए इन्वेस्टमेंट सबसे बड़ी आवश्यकता होती है और प्रमुख ड्राइवर होता है। इस दिशा में कुछ ऐतिहासिक कदम उठाए गए हैं। बॉन्ड मार्केट को मजबूत करने के लिए और इंफ्रास्ट्रक्चर की लॉन्ग टर्म फाइनेंसिंग के लिए प्रबंध किए जा रहे हैं। डिविडेंड डिस्ट्रीब्यूशन टैक्स डीडीटी उसको हटाने के कारण कंपनियों के हाथ में 25,000 करोड़ रुपए आएंगे जो उनको आगे इन्वेस्टमेंट करने में मदद करेंगे। बाहर के निवेश को भारत में आकर्षित करने के लिए विभिन्न टैक्स कंसेशन भी इस बजट में दिए गए हैं। स्टार्टअप्स और रियल एस्टेट के लिए भी टैक्स बेनिफिट दिए गए हैं। ये सभी फैसले अर्थव्यवस्था को तेज गति से बढ़ाने और इसके जरिए युवाओं को रोजगार के नए अवसर उपलब्ध कराएंगे। अब हम इनकम टैक्स की व्यवस्था में विवाद से विश्वास के सफर पर चल पड़े हैं। हमारे कंपनी कानूनों में जो भी कुछ सिविल नेचर की गलतियां होती हैं और उसमें कई सालों से क्रिमिनल एलिमेंट है, एक प्रकार से परेशानी का कारण है सामान्य नागरिक को, उन्हें अब डीक्रिमिनलाइज करने का एक बहुत बड़ा फैसला किया गया है। इसके साथ साथ टैक्स पेयर चार्टर के द्वारा टैक्स पेयर्स के अधिकारों को स्पष्ट किया जाएगा। दुनिया में शायद बहुत कम देश ऐसे हैं जहां पर टैक्स पेयर चार्टर की कल्पना की गई है। भारत आज एक प्रगतिशील कदम उठा रहा है। एमएसएमई से जुड़े छोटे उद्यमियों पर हमारी सरकार ने हमेशा भरोसा किया है। हम नागरिकों पर विश्वास करने वाली सरकार है। अब 5 करोड़ रुपए तक के टर्नओवर पर ऑडिट की आवश्यकता नहीं होगी। चार्टर्ड अकाउंटेंट के सर्टिफिकेट की जरूरत नहीं पड़ेगी। पहले ये सीमा 1 करोड़ रुपए तक ही थी, अब इसे 5 करोड़ कर दिया गया है। एक और बड़ा फैसला डिपॉजिटर्स इंश्योरेंस को लेकर हुआ है। बैंकों में, और ये खास करके मध्यम वर्ग के लिए होता है,
I think it's there are changes which are, I think, pretty dramatic. I'm not referring for a moment to the allocations. I think they were pretty robust as well. But I think some of the recognition, particularly of the need to change the mood beyond the financial elements, the feeling that there's too much criminalization, etc. That has been recognized, which is really a first, because as you're aware, the Companies Act, there is already a committee, and we had happened to be on it, and we had recommended certain changes that were implemented. Now there's a second bunch of changes we've recommended, which she obviously announced that she's going to go and they're going to implement.
Just to be clear, you're talking about how there's going to be a tax charter in the statutes,
No,
and how there will be no harassment.
No,
Harassment
I'm
will
not
not be
dealing with
tolerated.
tax. I'm not dealing with tax for a moment. Tax gets the attention. The problem that industry has been facing is that we've got many other statutes, industrial disputes, all over the place.
When she said that civil matters are being treated as crimes.
Yes. So where a small technical issue creates the possibility of an imprisonment. It creates a criminal offence.
And is that also the reason why we've seen, the reason investment has been blocked? Kal aaj CBI aa raha hai, kal ED aa raha hai, parso
Not only investment,
IT aa
our
raha hai.
courts are choked. There are today 3.3 lakh crore cases pending in the lower courts, of which 2.2 crore are criminal matters. Some of which are all of these, small matters. So the Companies Act started this process where we've reduced the number of criminal offences to very, very few, a single digit. And after the second phase is implemented, and we've collectively, it's been a big CII initiative.
Okay.
And I've been the chairman of the Judicial Reforms Committee, that let's use that learning and implement it across statutes. So just yesterday we have given a presentation to Niti Aayog where we've identified about 128 sections across 28
She mentioned
statutes.
Companies Act, that there would be
So they
amendments.
said that they're going to be looking at it. So this is really going to make a change because it will declog the system, because our basic theme has been you can't just do capacity building. That's a great thing to have. We keep adding judges. You've got to reduce the pipeline of matters going to court.
And the government is, of course, the biggest litigator.
Yes.
But having said that, she has now promised tax harassment will not be tolerated.
Correct.
She has talked about faceless appeal now that is going to
Yes.
come in after faceless filing. But Mr. Baer, this is not the first time, and I'm playing devil's advocate here, that Finance Minister Nirmala Sitharaman has said this. She went on a road show across India to several cities to talk to industry, to SMEs, but still there is a problem that industry feels that there is a witch hunt, that and therefore it is not investing. So while this is once again being promised, is she walking the talk with certain execution?
So certainly you need to do more. You see, the tax litigation is one part, and tax harassment. Frankly, we have a lot of interaction with the tax authorities, and to a certain extent, there the issue is much more fiscal. I think the reason this has not worked so much is that there is a lot of other investigations going on: ED, SFIO, CBI, EOW, and the way our, the tax, the structure, for example, PMLA, the list of the offences which become an offence under PMLA is huge. Forgery of a will, which has nothing to do with money laundering. I mean, if you look.
Getting in reactions from all quarters, my colleague Nayantara Rai in conversation with AZB partners Ajay Bal. Let's now move across and listen in to the men behind the budget, Ajay Bhushan Pandey and TK Pandey.
Tell you the background. You have seen that in September 2019, last year, we brought in this corporate tax reduction, and we gave a very, very substantial rate cut. And there also, what the principle that we followed, that you can have a lower tax rate, but all exemptions gone. And that has simplified the system. And our experience is that more than 90% of the companies, my estimate is, because we have got some indication from the advance tax that they paid in the month of December, that more than 90% of the companies, they are now preferring this new and the lower corporate tax system. Now, based on that, we thought that perhaps we could also do the same thing for the personal income tax. If you see the total number of exemptions, and it has been mentioned by the Finance Minister in her budget speech, that there are more than 120 exemptions, all different kinds, and they have kind of come in, over the period of last few decades, each one, and that actually has led to making this entire income tax law very, very complicated. So we want a simplified system, and simplified system that if supposing somebody earning X amount of rupees in a year, then he should know that how much tax he can pay, if he has to pay, and it should be calculated on a calculator, or even without a calculator, with no professional expert. But there will be also a class of people whose financial conditions could be different, and where he will actually need few exemptions. So we don't want to rule them out, and we also want to provide them the facility. In fact, in many developed worlds, there are some similar system, like for example, they allow you some flat deductions, or if you can itemize your deductions, then you'll have to take a itemized deductions. In this particular case, what we have said, that if you are going to take a deductions, your tax rate will be X. If you are not taking any deductions or exemptions, your tax rate will be Y.
Mr. Pandey, I can just interrupt you here. You know, the reason, the logic that you're giving or rationalization of exemptions is perfectly valid. We have far too many. But given the fact that many of these exemptions are for, some of, at least a large number of them, are for long-term savings in a country which has no social security. Not everybody is employed by Government of India. Not, you know, so there are a large number of people who have to provide for their own old age, LIC, life insurance, housing. These are all, you know, exemptions that are required, particularly in a country where people are financially literate. So the person might prefer today to pay less tax, but not think about tomorrow. Again, these are long-term funds that you can use for infrastructure. So insurance, housing, these are things that the government wants people to invest in. So could you not have rationalized the exemptions while keeping the exemptions for long-term savings?
No, you see, you know, everybody's position is different.
Sure.
And what we have said is that in a certain stage of life, you know, let that person take that decision. I mean, to think that, you know, our taxpayers, you know, would require, you know, advice from somebody else to, you know, what is in his best interest, that also is not very correct to assume. A person, if he thinks that yes, he has to make some investments, then he has to make investment in the right products. So he should have the freedom to choose that which is the right product that he wants to make investment, and for that, if he needs certain exemptions, he can be in that regime. It is also what we have allowed is, at this point of time, that let's say in this year I take no exemptions. The next year, you know, the life situation changes,
so you can move back and forth,
and then I can move to the other system.
Okay.
So we have allowed that flexibility. So the problem that earlier used to happen is that if someone was not having some surplus money to invest into the various exemptions and those products which used to give them exemptions, he was actually at the disadvantage. And so we have tried to, you know, remove that disadvantage and provide, saying that yes, if you do not want to invest anyone or you don't have money to invest into those products, then in that particular case you will be subjected to a lower tax rate. But tomorrow, if you get into a situation where you feel that yes, you need to take some insurance or you need to make certain long-term some kind of a social security investments, then in that particular case you are free to use.
It's a bit complicates the tax system even more, and I'm sorry, I'm going to interrupting purely in the interest of time, because within 5 minutes you tell me you have to go, understandably so. So next question really is on gross tax revenue. I think for the first time we've seen an absolute decline. In such a scenario, how difficult was it for you to project, because your new budget estimates are lower than your last year's budget estimates? That means clearly for all the talk about growth, 10%, etc., you're not really very, very confident about tax revenues, right?
No, I will tell you about the tax revenue. We are quite confident about our tax revenue, because remember at the last time the budget estimate that we gave, that time there was no corporate tax cut. Now, in a corporate tax, you know, it's a historic corporate tax cut. You know, it has never been done before of this scale, and implications would be somewhere we feel that implication would be more than 1 lakh crore and in the range of 1 lakh to 1,45,000 crores. Now that is almost 5 to 6% of our total tax collection. So if you remove that and you give an allowance to that, then, and you know the nominal growth in this year, 2019-20, and then the tax buoyancy, and if you make that adjustment, then our tax revenue has grown to that extent.
What is the tax GDP ratio that you're expecting at the end of the year?
You know, the tax GDP ratio, it depends upon, you know, the direct tax, indirect tax. So total, you know, in the budget estimate, in the revised estimate that we have provided, that in the direct tax we have said that our revised estimate will be 11,77,000 crores.
GDP, sir?
The percentage of GDP would be around more than 10%.
And next year?
The next year also, because, you know, it is tax to GDP ratio that doesn't change dramatically, so it will be around 11%. So we have, you know, to that extent we have done the calculation.
So let me take it across to the Disinvestment Secretary as well. You have a tough task ahead of you.
almost 2.1 lakh crore rupee disinvestment target that we're talking about, which is the highest ever so far. What is going to be the game plan? I do understand that a lot of privatization will happen in the first half of the next fiscal year, but how will you ensure that there's a smooth pipeline, because this would eventually mean that you will have to garner almost about 15 to 20,000 crore rupees every single month to be able to meet that target?
Let me split it into two actually. This 2.1 lakh crore is, there are two parts to it. One is 1.2 lakh crore where we are talking of disinvestment from the CPSCs, and 90,000 crore we are talking of disinvestment from banks and insurance companies.
All right, Ajay Bhushan Pandey there, the Revenue Secretary, as well as TK Pandey, the Secretary DIPAM, talking with Maithili Bhushan and Ruchi Bhatia, decoding the budget. But let's get a move on and hear it from none other than Swaminathan Iyer, who has described the budget as a diluted caffeine shot. Here are his takeaways.
Enough with the fiscal deficit figure. What about the total? I think we will now, like the RBI has core inflation and real inflation, we will now have to talk about a core fiscal deficit and total fiscal deficit. And I think the attention will have to shift to that. Let's look at that figure before we come to an actual conclusion on what has happened. I think people will be happy with the fact that some of the tax proposals, the income tax, basically you have made the middle class somewhat happier by allowing them to pay a little less if there are no exemptions. However, the gap between the top income tax rate of 42% and corporate tax of 15%, this gap is seen nowhere in the world. I thought it might be brought down. It is not being brought down, and to that extent I think there would be some disappointment. Abolition of dividend distribution tax I think will come as a relief to the big traders, no doubt about it. That should be good for them. I regret to say on the protectionist thing, every year we seem to think that Make in India is to be done by more protection. We are continuing on that same trend this year with some additional protection on footwear and furniture rather than seeing any kind of rollback. And this does not speak well for the chance of are we preparing ourselves for entry into more free trade agreements. The higher our duties are, the more problematic more free trade agreements would become, whether with RCEP or the UK or the EEC or the USA. But broadly speaking, I would say that, there has been a reasonable amount of caution. You have not gone overboard on spending. That's a good thing. Some of the tax proposal.
So मेहनत हाँ लगातार करते आ रहे हैं, मगर उस मेहनत से आम जनता को और जिन सेक्शंस को इससे राहत मिलना चाहिए, अगर मिलता है तो हमें हमारे काम पूरे होने का संतुष्टि मिलेगा.
So one of the things that was expected of this budget was a stimulus to growth. So if you had to pick 2 or 3 themes from the budget which you think will really give a stimulus to the economy, what would those be?
The first main thing is, as is the analysis done by, let us say, economists, policy experts and so on, is if private investment is not really catching up, where does it stop? Where does the buck stop? The buck stops at the government stores. The government will have to show that it's not waiting for the private investments to happen. It will happen whenever it happens, but we have to go about investing. And that's what we made very clear, saying yes, we will invest, and in infrastructure. I want to point out 2 or 3 things to you to prove and strengthen that point. So we are definitely spending on infrastructure, is obvious. We have gone into the detail. It's not just that Prime Minister announced it in the red